stocks and for companies like Camden.
Rick, is it safe to say then that with the housing market the way that it is right now, with interest rates kind of moving the way that they have been ever since the great financial crisis, and now with the housing dynamic, that there's a secular trend towards renting for Americans versus owning?
Absolutely. So the challenge you have today in the single family owning market is that we're at a really big change in terms of what it costs to own a home because of the doubling of interest rates, obviously. And so what's happening is that it is a lot cheaper to rent, like 60% less to rent an apartment than buy a house today because of high interest rates. Now that will change over time as interest rates come down. But
they won't.
It is a really good time to rent.
Not under this
from
president.
From an affordability perspective, when people are getting pinched on their budgets, and it's cheaper to rent than own a home. As a matter of fact, today our rent income is at one of the lowest percentages. We're at about 19% of people's income to pay rent, which is very low. Usually it's in the low 20s. So it's in a very affordable product today relative to single family homes.
Interest rates also play a factor, not just in how rents are charged and how much people pay in mortgage interest and mortgage payments. It also affects financing for building properties, which is what you do. How are those rates affecting what your growth plans are going to be in the coming years?
Oh, excuse me.
The interest rates definitely have, the interesting thing about it is the low interest rates and the sort of easy money in the last 3 years fueled the supply boom. Now what's happening is the reverse is happening. The cost of capital has gone up so high for developers that development starts have fallen. The last numbers that came out, they fell 53% from a year ago. And most folks believe that we're going to go to post financial crisis lows on new construction. So to put those numbers in perspective, we're building 500,000 units per year annually. That number is probably going to drop next year to a little over 200,000 units. When you look at housing supply generally, both single family and multifamily, there's a real shortage of affordable housing in America. So when you stop the pipeline like it's been stopped, you're going to have
you're biting your words.
Market. What's going to happen is you're going to have a stabilization of rents in this low 1% growth kind of area, which is good for CPI, good for the Fed, good for long-term interest rates. But what's going to happen in 2026, 27, 28, you're going to have a soft landing, and you end up with still a strong economic scenario that happens in those years.
You're a dumbass.
You're going to have outsized rent growth again, and we're going to be back to significant rent growth because there's not going to be enough supply for the demand that is needed just to fill household formation.
All right, Rick Campo, great conversation with Camden Property with regard to the state of housing in America right now. Come back and see us again soon, sir.
Thanks, Tom.
All right, coming up on the show, getting ready for the world's largest retailer, the key numbers to watch in Walmart's quarterly results and whether they'll help boost the stock's 15% run so far this year. That story coming back. We're back in a moment.
It's hard to say it. Pivot point's right in there. So I'll do this. There you go. Don't know one a minute, yeah. He didn't sound too good. Didn't sound too good to me about housing at all, but he thinks it is. Any slight improvement I mean, if it's 1 decimal of 2,000%, that's great news. Now what the hell? Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy. I'm going to talk about NVIDIA today. My strategy is based on chart patterns, moving averages, and being in the now. So let's get right straight to the NVIDIA stock. We're going to be talking about how to trade an earnings play. NVIDIA is definitely the #1 stock that everybody's wanting to pump and run up to the highest level we could see. And we consolidated at the last resistance, pulled back some, and now we broke, I think we're getting ready to, or we have broke the latest resistance level. So let's get to talking about this. I'm going to chart it up for you. This is an earnings play, and the earnings come out on the 22nd. They come out on the 22nd after the market closes. And everything's really good about this stock right now. So yesterday I called out this trade, and I'm going to talk about how I called it out. We had a triple bottom right at open, and I said, hey, we had a double bottom, triple bottom here at open, and really we've got a quad if you want to count this huge wick. And so I alerted the trade. I said, go ahead and draw that price line across there, because I'm very bullish on this stock. Just very bullish. Very, very, very bullish. I mean, this is my #1 trade right now. To gain money on it every single day. And
of the word, is it going to be advertising, data monetization, fulfillment services? Is it going to be any of those things that say go beyond just grocery and the traditional stores?
Yeah, I mean, over the long term, I think, you know, these alternative businesses will be of more focus for investors. You know, right now they're still relatively small. So in the immediate term, and even this upcoming quarter, the most important metric is really in the Walmart US business, and it's really in the comparable sales growth of that Walmart US business. So this upcoming quarter, they're about to report in about an hour. We're expecting about 3.8% comparable sales growth, and that's going to be largely driven by transaction growth or more traffic. Like I said before, we think Walmart is gaining a lot of traffic and market share amongst the U.S. consumer. I think where we see some, a slight headwind is in average transaction amount. So, people are buying less bigger ticket items. That's pressuring overall comp sales. And also, when people are going to the grocery store, they're just putting fewer items into their basket, and it just shows how tough the economy is right now. So, although traffic and transaction growth is increasing, we do see a slight decrease in the average transaction amount. So overall, we do expect about 3.8% comparable sales growth for Q1 here.
All right, Walmart coming out in just about the next hour or so. Arun Sundar on CFRA, thank you very much. We'll see you soon.
Thank you.
All right, we got a market flash for you now on AST Space Mobile. Market cap just south of $600 million. Shares are soaring as the company strikes a deal with AT&T to bring its space-based broadband network direct to cell phones. AST plans to launch commercial service this summer by launching 5 satellites into low Earth orbit. The deal pits AT&T against Starlink for satellite internet domination. Well, coming up on the show, turning overseas for talent, the move Microsoft is making to shore up its arsenal of experts in the AI arms race. And CNBC is celebrating Asian American, Native Hawaiian, and Pacific Islander Heritage Month throughout May. As we head to break, here is Wellspun Living CEO and Managing Director, Deepali Pulyanka.
I come from India. I come in from a patriarchal community, earlier where, it was about having a male child, and I had 2 daughters. For me, to lead by example was so important, but they really saw that, yes, there's a legacy that leave for them. It's about financial independence, about being empowered to do what you want to do and really make an impact.
Okay, well, I'll go get her done. Sounds like it's raining outside.
Welcome back to Worldwide Exchange. Time now for your global briefing. Russian President Vladimir Putin kicking off his 2-day visit to China today as Moscow advances a new offensive in Ukraine. Putin was welcomed by President Xi Jinping and is expected to emphasize Russia's commitment to the no-limits relationship signed with Beijing back in 2022, just before invading Ukraine. Japan's economy shrinking by 2% during the first quarter, faster than the 1.5% that economists were expecting. The weaker yen, along with the lack of any major growth engines, playing a big role in that downturn. The Bank of Japan now faces fresh pressure from consumers to get interest rates further away from zero. And Siemens keeping its overall outlook for the year unchanged, but lowering guidance for its key digital industries unit, saying that revenue could decline as much as 8% this year. The German manufacturer says gains in the U.S. were not enough to offset ongoing weakness in China during the second quarter. Siemens is also shifting away from heavy equipment manufacturing and selling its large motor business for nearly $4 billion. Well, coming up on the show, the one word that every investor needs to know today, plus why our next guest says the records may not be done yet for the markets. We'll be back after this.
See a peacock.
Welcome back to Worldwide Exchange. Time now for your WEX wrap-up. Warren Buffett's Berkshire Hathaway revealing Chubb as its mystery stock purchase after keeping it secret for 3 straight quarters. Berkshire bought nearly 26 million shares of the insurer worth $6.7 billion, making it Berkshire's 9th largest holding. Rival insurer Aflac is reportedly acquiring a 40% stake in private credit firm Treeline Capital Partners for roughly $100 million. As part of the deal, Aflac will also give Treeline some of the investable cash it collects through insurance premiums. Palo Alto Networks is buying cloud security software assets from IBM to gain access to more consultants and a bigger customer base. This marks the latest consolidation effort in the software industry, including Cisco's $28 billion purchase of Splunk back in March. The Wall Street Journal says Microsoft is asking hundreds of employees in its China AI division to consider transferring outside the country. The move comes as tensions between Washington and Beijing around the technology continue to accelerate. And Caitlin Clark bringing up the temperature with the Indiana Fever, drawing in a record 2 million viewers during her WNBA debut against the Connecticut Sun on Tuesday. That's the largest WNBA broadcast audience in more than 2 decades and the league's biggest cable audience ever. Well, here's what to watch today. Several pieces of economic data are out before the bell, including initial jobless claims, housing starts, building permits, and import prices as well. Also, earnings from Walmart, Under Armour, Deere, Take-Two Interactive, and Applied Materials, and several Fed speeches, including Vice Chair for Supervision Michael Barr and bank governors Patrick Harker, Loretta Mester, and Raphael Bostic. And don't miss Richmond Fed President Tom Barkin when he sits down for CNBC's exclusive conversation at 10 a.m. Eastern Time later on for Squawk on the Street. Well, plenty of catalysts for markets today with all three major indices sitting at fresh all-time highs. Futures right now are modestly bid. For more on the trading day ahead, let's bring in Keith Lerner, Co-Chief Investment Officer and Chief Market Strategist at Truist Wealth. Keith, is it a surprise for markets at record highs given the inflation outlook?
Well, first, Dom, great to be with you. And it is not a surprise to us. You know, we've been saying for some time that the primary market trend is still higher, that the strong momentum that we saw really from last year, those 5 straight months of gains and that strong first quarter, tend to be a characteristic of a bull market. And then back in late April, as the market pulled back, we actually upgraded our view of equities to overweight and use that as an opportunity. So we think all in all, new highs are a characteristic of a bull market.
This is one of those scenarios where the bull market can be intact, but it may lose momentum. Do you feel as though the momentum is slowing for the bull market, or could it just ramp up even more from here?
Well, when you look back historically, typically that first phase of the bull market is the strongest, right, the turn. So I think, you know, if you think about this bull market, we've actually been in a bull market for 2 years. We're up about 50%. Historically, you tend to moderate from those levels. But I will say this, after you have a strong first quarter, the rest of the year, on average, you're up about 10%. So I still think there's more upside, and breaking out to new highs, as you mentioned, with the NASDAQ, the S&P overall, that's typically a good sign, a sign of healthy breadth. And along with that healthy breadth, you're also seeing forward earning estimates, right, a fundamental underpinning also making fresh highs as well. So I would say, you know, focus that the underlying trend is still positive and continue to look at pullbacks as opportunities. I still think we will get more normal pullbacks, unlike what we, you know, in the first quarter, the deepest pullback was 2%. Then we had that, you know, 5.5% correction. You normally have 2 or 3 of those a year. So we'll have some of those gut checks, I think, but the primary trend still is positive in our view.
Keith, that brings us to your word of the day. And can you take us through what it is and what sectors could be part of that story?
Well, I've kind of alluded to it already. It's uptrend, right? We are in an uptrend for the overall market. And until the weight of the evidence changes, you know, bull market rules apply. Again, sticking with that primary trend, which is up, and using pullbacks as opportunities. And as far as looking at the overall market, I think it's actually been a broader market overall as we see some of the sectors. We actually still like, you know, areas like technology, financials, industrial, so a mix of growth and cyclicals. But I would say even yesterday, it was interesting to see that the leadership, you know, in some ways went back to the old leadership, which is still technology. And that's where the earning momentum is actually still among the strongest in the overall market. So we still think that's a good area. I do think small and mid caps will participate. I mean, they've lagged. We still have a preference for large caps, but I would say if you're underweight some of these areas like small and mid, I think, you know, there's probably a little bit of catch-up opportunity as well.
All right, small cap stocks in the Russell 2000 overall at a 2-year high. Keith Lerner at Truist, thank you very much. We'll see you soon.
Thank you.
All right, the market coverage comes up next. Walmart reporting its results. Squawk Box starts right now.
Good morning. Meme stocks pulling back again as the major indices climb to record highs. We'll show you what's moving right now. Berkshire Hathaway revealing the stock purchase that it kept secret for 2 quarters. Drum roll, please. We're not going to tell you now, but don't get too excited. It did build a big position, though. Details straight ahead. And the debates are on. President Biden and former President Trump set to debate in June, as early as June, and then September. We'll take a closer look at the upside and downside risk for each candidate. It's Thursday, May 16th, 2024. Squawk Box begins right now.
Good morning and welcome to Squawk Box right here on CNBC. I'm live, and we are live, I should say.
You are live.
I am live.
You're
The
live.
NASDAQ market said times we're kind of alive. It's 6 o'clock in the
What's
morning.
the aura
How
say?
alive? my Aura Ring score. We could do a daily score.
We should right now.
Well,
just
if
to
we're gonna do that,
prepare me and
we should
prepare
get that sponsored. By the way.
85. Yeah, we should 85.
I think it's about an 80 this morning, which isn't bad for me.
80's not bad.
Yeah, not bad. I mean, 85. You want 85 or above?
You
Get a
want
crown, I
85.
get a crown if I.
Like I said, it sounds like college. I want an
Yeah.
85 or above.
Exactly.
That's an always successful.
I'm Andrew Ross Sorkin. That's Joe Kernan. Becky is out today. We got a lot going on. U.S. equity futures right now, as Joe was mentioning, given where we are in the markets, 42 points higher. NASDAQ up about 31. S&P 500 up about 3.5. But all this coming after the major indices closed at record highs yesterday. The Dow was up 350 points. The S&P and NASDAQ each gaining more than 1%. Talk meme stocks in a second. They went the other direction. Treasury yields, though, take a look at the 10-year, 4.334. The 2-year, 4.736.
Look at that was fast, wasn't it? Let's look at the meme stocks. We'll see. It can always come roaring back, but see GameStop now down 6.33. I think it got up to more than double that. AMC had been more than double where it is. It's down about 65 cents, still well above some of the recent lows for those shares. But GameStop and AMC fell during yesterday's session. AMC, as it has in the past, took advantage of this week's rally yesterday, announcing a debt for equity swap. It completed a $250 million stock sale on Monday, and there's the weekly chart. So there's length contraction and time dilation were two of the things about general relativity. And do you think that is a meme stock craze now lasts 4 days? I mean, the last one lasted and went to much higher
levels. Well, that's
It
what
lasted
people
much
said this was,
longer.
but they said that GameStop was much harder to short because much harder to get a loan on that stuff.
Right, but could it be a week phenomenon instead of a 6 month? How long was it last? Probably 3, 4, 5 months at least, wasn't it
Right.
last time?
Yeah. So we got.
And much higher. It went into the hundreds, didn't it?
So that's why I said.
So it happened much more quick, but people really wanted it to be
They wanted
happening
it to happen.
happening again.
But I think it'd be hard to keep any of these things really.
So do you think we're going to see a meme from
falling?
here to back like this, and I'm not watching anymore, or?
I think we need to get a T-shirt of you doing that.
I mean, I'm a performance. Most people, they're
Sit up
just
straight.
like this, and they sit up straight, and they never move or anything else. I'm a performance artist.
I know you are. We've finally learned, talking about a performance artist, this guy is a performance artist, his name is Warren Buffett. We learned which stock Warren Buffett and Berkshire Hathaway had requested to keep secret in 2 quarterly SEC filings as it amassed a position. Berkshire bought nearly 26 million shares of Zurich-based insurer Chubb for a stake worth $6.7 billion. It became Berkshire's 9th biggest holdings as of the end of March. Insurance Ace Limited acquired the original Chubb back in 2016, I should say, for $29.5 billion, and the combined company adopted the Chubb name. CEO of Chubb is Evan Greenberg, son of former AIG CEO Hank Greenberg. It's quite a company. Chubb is a remarkable company.
It's good company. I had it for a while for a like a blanket liability. You know why you need them? You know why you need that? If you got any money at all,
Yeah.
and you have a German Shepherd, you need one of those because someone, if it happens,
Something bad happens.
yeah, they're gonna try and get everything that you have, and eventually I think they'll have 2 now, and I think they wouldn't do it anymore.
Now that
somebody else
Warren's
now.
involved, he really won't do
He
it.
really won't do it now because he's risk averse. He only wants good risks. He only wants good credit risk. But parachute, I forget what it's called, but it's like covers all, kind of covers whatever
Right.
you built up in your life. So that someone just, can't. I guess you could slip on your walk or something.
But this is a demonstration of just how hard it is
right to find value.
to find value.
Well, I was
So
hoping
this
for
is-
something more exciting.
That's the hard part. It's very hard to find value.
Yeah. Well, it was a long wait to find out what it was, and then it was Chubb. But that's okay. I like Chubb. Greenberg. It's exciting. It's exciting in the way it's run.
Yep.
I guess. Shares of Cisco are higher. The company reported earnings of 88 cents a share, beating estimates of 82 cents. Revenue of $12.7 billion was down 13% year over year, but beat analyst expectations. Cisco said the decline in revenue was a result of clients taking time to set up the equipment they received in recent quarters. Cisco offered similar commentary in its previous earnings report. CEO Chuck Robbins said they expect the customers to complete the installation of the majority of their inventory by July. He said Cisco is approaching the end of years long supply chain challenges. Cisco raised its full year revenue guidance. This is all kind of like deja vu, because I talked all about this last night on that groundbreaking CNBC show Fast Money.
Yep.
Because we talked all about Cisco. And I know what did you set the DVR, or were you watching live?
I mean, I stopped everything that we were doing. I had the whole family sit down on the couch.
I hook up a polygraph to you right now. It's going to be going
Off the charts.
Can we look at, do we have a 10-year chart?
They put me in prison if they.
Yeah, exactly. Do we have a longer term, something going back to 2018 for Cisco? You know, this is where the stock was in 2000. This has been completely dead money since, you can get back to a point in 2018 where it was trading at 50. So it's been tough. So they're talking about maybe working off the post-pandemic supply chain issues. It just, and I also mentioned, do you remember I think it's about 200 billion market cap. Do you remember where it was at one point? 600. When GE was like 500 or 600.
Back in the day.
Like
Cisco, do you remember when they
20
had
years ago.
the flip camera? Remember that?
That
was something that
like
you would,
Austin Powers, yeah.
there was a camera,
yeah.
and that was, I think that was the high. When Cisco decided they were going to be in the consumer business of making these cameras.
Yeah, that didn't work. It's better what they make, those fancy servers. But they never had the color I wanted. I'd always ask, remember? I used to ask, can I get that in like a pale blue? And they gave me a look that I get from you a lot.
Yeah?
Yeah, the person that we were interviewing. Like, what?
Okay.
This fool talk. Go
So
ahead.
talk about looks. There's going to be a lot of looks.
Did you see that it took to get a 13-second tape? He had like 8 cuts in the tape. Did you see the jumps?
I did not, but let me just tell the audience what we're talking about first. So President Joe Biden and former President Donald Trump, talking about looks, they're going to be giving a lot of them to each other because they've now scheduled 2 debates. One to air on CNN, that's going to happen on June 27th, and another one to air on ABC on September 10th. You can mark both of those dates on your calendar. Both showdowns will be held without the involvement of the nonpartisan Commission on Presidential Debates, which has organized presidential debates since 1988. The Biden campaign calling that commission out of step with changes in the structure of our elections and the interests of voters. Trump's campaign called for 2 additional debates. He's looking for ones in July and August. And later this hour, we're going to talk a lot more about the risk-reward calculations of a debate for both candidates with Axios national political correspondent Alex Thompson. I feel like this is like going to be like a cage match.
There were a lot of conditions. I think Trump was going to say yes no matter what. I think that's, I don't know. I might have had some counter conditions that I'd ask. Mics get turned off when the other candidate is answering. No studio audience. CNN. I mean, say what you will, but we'll see whether. I don't know how long the debate is. They may get past talking about January 6th. I'm not really sure. I'm not sure they'll talk about any policies or any, the border. Jake Tapper, who's the other, and Dana Bash. With Trump, I think he's going. Hopefully, he goes in eyes wide open, because. What am I saying? I'm saying that it's going to be very hard. I would have.
You think it's going to be hard for Trump?
I think.
You think it's going to be a hard debate?
No, I think he would accept any. I think he would accept anything just to get Biden off script, to see, so people can get a look at that. But if you had to go to a friendly place for Biden, that I would do CNN 7 days a week for Biden.
I don't know. I think it's going to be very, very tough for Biden.
You do?
I do.
We're missing. Again, see,
I think it's going to be very. I think it's going to be very challenging. I think under all circumstances, it's going to be challenging.
Jake Tapper might answer.
That's not true. No. I don't believe. I actually think that Dana Jake will do a great job with it. That's not. I wouldn't criticize the questioners.
I saw a clip yesterday. My people send me these clips. Someone yesterday where Trump, all he was doing was buying some people some pizzas or something, and CNN happened to be in looking at that for just 5 seconds, and Tapper almost had a heart attack. Oh my God, this is turning into, and immediately dumped out. That place is crazy. Come on.
I have great admiration for Jake, and I have great admiration for Dana. I do, and so I wouldn't.
Well, he can't do anything for you. You
Can't do anything for me, but I'm not gonna. Those are stones I will not
Great
throw.
admiration for Brett Baer.
I really like Brett.
Okay, how about
I do.
Sean Hannity?
I think Sean Hannity is very good at what he is, what he tries to, what he tries to do. He's very good at it. I don't agree with him, but I think he's very good at what he's trying to do.
We're getting out of our lane, I think, at this point, right?
Let's talk about Netflix.
You want to
We can do it after the break.
read the news? Netflix says searching a deal to stream NFL games this year. The company also revealed subscriber numbers and announced plans to launch its own advertising platform. That story next. Then later, Walmart set to report. We're bringing the numbers in the instant market reaction. Squawk Box will be right back.
Welcome back to Squawk Box. Deere shares falling. We're not laughing at that, though. The company just reporting earnings of $8.53 a share, better than $7.86 the street was expecting. Revenue falling 12% to $15.24 billion. Also a beat, but shares moving lower after the agricultural equipment manufacturer cutting its profit forecast for the full year. That stock now up off about 5%.
Netflix says its cheaper ad-supported subscription plan now has 40 million users, and then it's struck a deal to stream 2 NFL games. When on Christmas Day. For more insight, let's bring in Mark Mahaney, head of internet research at Evercore ISI. We're watching this play out. It's taken years for streaming to see what it's finally going to look like. I've been struck by the new bundles it's like what's old is new, and I feel like deja vu all over again. Am I going to have a streaming bundle? That's the way it's eventually going to work.
You probably will, and most people do now. So what's so interesting about this deal is just what it reflects. So Netflix is actually now big enough to economically afford to carry NFL football games? And the answer is yes. They've got 270 million paid subs. And for them, the cost of any NFL game, these 2 NFL Christmas games, it's the cost of a medium-sized movie for them. So it's already in their $17 billion content budget for this year. And now they've got 40 million viewers. They had 5 million last year at this time. My guess is that next year they'll probably be close to 80 million. And they're doing this globally too. That's one thing they offer to any content provider, which is that they offer this global reach. Because believe it or not, there are a lot of people who really enjoy NFL that don't live in the U.S. And so Netflix can actually give those viewers an audience.
They have someone that can bargain for which games and matchups that they. I mean, I wouldn't want a bunch of crappy matchups. And you have to have someone who's smart enough to know who's going to be good in advance of the season, don't you?
I guess you do. If somebody hopefully has figured that out. But to me, this is kind of a coming out moment, another coming out moment for Netflix. They're big enough, they're material enough, they're substantive enough, they got the cash to do it. Now you're going to look at more. Several years ago, they said they would never do live sports. They've clearly been creeping towards that, just like they said they would never do ads. Now they're creeping towards that. They're not just creeping.
It's not at an all-time high. It's the best of the media stocks in terms of what we've seen, but it's still. You know, it's not back to 700, or what was the high? I
think 680, 690, and that's when Squid Games came out. And my guess is that when Squid Games 2 comes out later this year, that's probably the catalyst that takes them back there.
What is the incremental improvement you think that will come from these games? Meaning in terms of new subs, or do you think preventing churn? That to me is the fundamental question. When you add games like this, by the way, Peacock's done it, others have done it before, where you add a live sports event, and there are people who sign up just for that event. What I don't know, when Peacock did it, it was a little bit different.
It is.
On a Christmas day, how valuable in those days do people say, oh my God, we don't have Netflix in the house, we got to get Netflix today?
Who doesn't have Netflix?
I think it's probably more, Andrew, to your question, I think it's probably more a driver of engagement. It probably does get a few more extra subs in some markets. Again, I think it's overseas markets. I think it's more engagement. And now they got more and more inventory to go after advertisers. I think they're close to a $1.5 billion ad revenue run rate now. They don't disclose it, but that's a decent guess. I think next year they're going to be close to $4 billion in ad revenue. When they first launched it, they said they thought they could get to 10% of their total revenue being advertising. I think they're going to get there next year, and that's a good, healthy diversification move for the company.
And how much do you think that these kind of, I don't want to call them stunts, but efforts like this are used effectively to promote the rest of the platform? Meaning, you go on the platform, you go to watch the game, and by the way, this is how the big linear networks did it. You go to watch the game, and then they would promote during the commercial breaks, not just paid commercials, but commercials for all the other programming.
I'm sure that's it. It's just like the Mike Tyson, Jake Paul fight, and worldwide wrestling coming up next year. Like, all of these are just kind of more and more tentpole opportunities for the company to bring in more users and increase engagement.
And the future looks like no ads, just a few ads.
No, there'll be ads.
I know on this, but how does it finally shake? I like a minute and a half, and they got the little thing up there I can watch. I don't like 4 minutes, which you still see sometimes. Is that what it's going to be, or are people still going to have totally ad-free and pay for that?
I think what they're going to do is give you both and let users decide. So, Netflix was always without ads, and there's half of the market, I don't know, 30 to 40 to 50% of the market out there certainly is fine with ads for a cheaper price. Right. And so if you want to play it, if you want ads, and you just have to. You can have ads and get a cheaper price, and there's a large market for that. That's one of the things that Netflix did. They took so long to embrace advertising, but they finally have, and it expanded their market. Like this was a company that kept taking up prices. They came in with an aggressive low price plan with this ad-supported $6.99. I think that's a cup of latte somewhere out here in New York. And for that, you get all of this content, now including NFL football games. What a great deal. And I think that they just expanded their TAM by doing that.
Did we find out yesterday even these ads don't work? From Gary Vaynerchuk?
Well, his view is
He
that
thinks 80% of it is
most of
just
it's on the
a waste.
phone,
Yeah, a waste
right?
of money. 80%.
I don't know if that's true. I actually think that I sit through those ads and actually see them in a way that actually these are even more the ads that are on.
Yeah, more annoying. Do you
ephemeral.
Do you mind a minute and a half, or do you rather have none at all?
My preference is none at all, and I'm probably, luckily, happily in a position to pay the fee for not having the ads. Having said that, by the way, I actually think with this you're going to have the ads no matter what. So you don't have a choice. I was going to ask you what you thought of the package deal now between Peacock, which of course is owned by the parent company of this network, Netflix, and Apple Plus, which I thought was an unusual package.
I'm not sure I've got a lot of great detail on it. I know Comcast recently did something.
Yes.
To me, it's just kind of a sign of the times. If you're going to put together a streaming bundle, you pretty much have to include Netflix in there. Now, you'll negotiate the terms, but you pretty much have to because that's what consumers want. I think the surveys that we've run over the years, larger and larger percentage of people want a streaming bundle. And because the content isn't the same, there's some stuff that you can only get on Netflix, stuff you can only get on Peacock, et cetera. So people will recreate their bundles. They may end up even paying more than they did in the past.
Exactly.
But still, Netflix is going to be part of that bundle.
Keep in mind, Xfinity. We're going to bring out some really hot wings for you right now. Have you seen? I'm learning so much this week, Andrew.
Yeah.
Yeah. How many times have you seen that show on YouTube, the Hot Wings show?
A lot.
You have.
Yeah.
Have you seen it?
No.
No. My wife got it. She goes, "What are you talking about?" I'm telling you that.
Big deal, that show.
And they get young demos too, apparently.
Yeah.
Okay.
Coming up, an interesting note on yesterday's inflation numbers. Some of the data was inadvertently posted 30 minutes early on the BLS website. We're going to bring you the details of what happened after this.
Initially, when I came to the U.S., I didn't speak any English, so I had to listen first before I spoke. And I think that's allowed me to observe trends happening as they unfold and really shift what I'm doing, what I'm thinking, what I'm working on. And that's how I think I was able to kind of see the early social media wave and then more recently on the AI side.
FA.
This one's a fascinating story. Some of yesterday's CPI data, guess what? It was inadvertently published 30 minutes early. The Bureau of Labor Statistics loaded a subset of its files to its website before the release time. There were no obvious signs that the early publication seemed to move markets. We were on the air and we didn't see the move, but, and I should say also no sharp movements in the half-hour stretch between the time the data was uploaded and the scheduled release. Now, the agency is saying it's conducting a full investigation into its procedures and controls to ensure the incident is not repeated, but there's been lots of questions about data coming out of that bureau, from the Fed, all sorts of folks.
This is different than the data Jay Powell probably got, to be able to say we're still going to, earlier when he said we're still on track to.
Well, I think it was Richard Fisher yesterday who said he thought that it's possible that Jay
did
got
have
information.
yeah, that's what I was talking about, yeah.
They do. Look,
They're allowed. He's allowed.
The question is when they get it.
Right.
Oftentimes, the president of the United States often gets the data, I believe, in the afternoon before it's announced.
They
the
just
next day.
shouldn't tell any of those guys in Congress, or guys and gals in Congress that have done so well.
Who are good at calling fidelity, right? They
Exactly.
calling the broker.
There are some members of Congress that I saw today. They have tens of millions of dollars. Some of the people.
Some of them do. Some of them do. Hopefully, they made that money prior to becoming congressman. Coming up, we are going whale watching this morning. New filings revealing some big moves by some of the biggest investors in the world. We'll tell you about those investments next. As we head to a break, a look at yesterday's S&P 500 winners and losers.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Let's check the futures quickly. Got some green arrows across the board. Little ones. A lot can change between now and the opening bell. We had 2 great sessions in a row, bringing the averages to new highs as bond yields backed up sharply. Gold rallied, all based on what those two, both days, the PPI and the CPI. One seemed to be hot, but revisions weren't as hot. On the PPI, and then the CPI across the board was received with the notion that inflation was again starting to moderate. New this hour, the EU says it's investigating Facebook parent Meta over alleged breaches of an online content law related to child safety risks. The EU is looking into whether Facebook and Instagram may stimulate behavioral addictions in children and create so-called rabbit hole effects. The commission also said it's concerned about age verification on Meta's platforms. Meta didn't immediately respond to CNBC in a request for comment.
Meantime, it's time to talk about some whale watching. Some of the world's biggest money managers revealing their first quarter investments and new filings. Want to get over to Leslie Picker, who's been going through those filings. Leslie.
Hey, Andrew. Yeah, Chubb shares, at least yesterday, spiked on this revelation that Berkshire named the insurer as its long-awaited mystery pick. Berkshire disclosed a stake worth $6.7 billion at the end of Q1, comprising 25.9 million shares. We had been tracking an unnamed position in Q3 and Q4, but the SEC had given the firm a waiver to keep it confidential. Yesterday, we learned the mystery name is indeed Chubb, now its 9th biggest holding. Now, there were other interesting financial moves during the quarter as well. We don't always see this. Third Point took a new stake in Goldman Sachs, which hit another record high yesterday, and Dan Loeb's firm boosted exposure to Apollo. Staying in the alternative space, Viking, Corvex, and ValueAct each pared back KKR, while Michael Burry boosted his bet on Citigroup during the quarter. Bridgewater also bought more Citigroup during the quarter, as did it buy Bank of New York Mellon and Wells Fargo shares as well. Now, in fact, among the 20 high-profile fund managers that we track, financial services saw the biggest influx of capital during the quarter. That's according to data pulled by Blue Flame AI, a firm specializing in AI for professional investors. The majority of that was driven by Berkshire's Chubb purchase. However, the renewed popularity of the sector helped drive gains of 12% this year, which is outperforming the S&P, with the XLF hitting a record high yesterday. So it's certainly largely good times for the financials, guys.
Are you surprised that there's been so much interest in the financials?
A little surprised, although I think a lot of this is part of the catch-up trade last year going into the year. Most people were expecting a recession, which would have been bad for the vast majority of publicly traded financials that are out there. Now that there's this notion and this narrative that we really have achieved a soft landing, people are starting to feel more comfortable buying banks, buying firms that dabble in private equity, because the overall macro picture has shifted so much. And then the regulatory picture has also shifted, with those capital rules appearing to be changed. That all bodes well for bank investors who had largely been on the sidelines and are now, as we can see from these filings, coming back into
well, the
the
question
sector.
though is, now if you piggyback these trades, are you always going to be late? I mean, by default, you're always going to be late, but are you, in this case, are you late?
Yeah. Well, these are as of the end of March. So these are already 6 weeks delayed. They may have changed in the 6 weeks since. And you're right, Andrew. Oftentimes, people who do try to chase these positions are doing so only to find that the manager has traded out shortly thereafter.
Leslie Picker, great to see you. Thank you.
Coming up, the debates are on. We're going to take a closer look at the upside and downside risk to each candidate. That's next. Squawk Box. We'll be right back.
Always one.
Welcome back to Squawk Box. President Joe Biden and former President Trump, they're going to be taking the debate stage. I don't know if it's going to be like a cage match or not. Both agreeing for 2 dates. The first one's going to happen June 27th. And joining us right now, Alex Thompson, national political correspondent at Axios. Good morning to you. Let's talk about the idea this is even happening and the rules that have been imposed or not imposed on this debate. What are we supposed to expect?
Yeah, so a few important things. There's not going to be an audience. At the moment, it's just one-on-one, no third-party candidate. The first one's going to be hosted by CNN, the second one by ABC. And really striking that this is the earliest presidential debate ever. And not by a little bit, by a long shot. The earliest presidential debate ever before this was September 21st. So that means even the second presidential debate is going to be the earliest general election debate ever. And June 27th, what this allows the Joe Biden campaign to do, let's say he has a terrible debate, this gives them 4 months to make up whatever damage that may be done before Election Day.
That seems like a very strange strategy. So to try to do something, thinking you're not going to do well, so you have another chance at it?
Okay.
What is the rationale?
It'll be 4 months older, which matters probably at this time. I mean, we see every 4 months. You could decline in 4 months when you get to that age, which was what we've seen in the past couple of years, right? He's a totally different guy 2 years ago.
Well, think of it this way. It's basically, it is a risk by getting on stage with Donald Trump. Donald Trump has shown basically no regard for normal debate rules. You may remember 4 years ago, he likely had COVID and got on stage with Joe Biden. So the Biden campaign does not trust that that Donald Trump is going to be, a rational or a fair actor here. Basically by having it early it's a hedge on this bet. So, basically, Joe Biden wanted to debate. That's the only reason this is happening right now. Joe Biden thinks that if he gets on stage with Donald Trump, it will rebound to his benefit, that it will help with some of these polls. And that is why this is happening. But it's a hedge saying,
what do his advisors think?
Sorry?
What do his advisors think?
They're split. I have to be honest with you. Basically, there are some advisors, and you saw Nancy Pelosi sort of speak up to this yesterday when she said that she would advise nobody to get on a stage with Donald Trump, but the president has decided what he wants to do. Now, some of his advisors think he's going to be fine, but there are definitely some people in the Biden camp that don't see that basically see this as more risky than not.
I saw the opposite put forth, and that was that he saw the swing state numbers last week. I think it was in the New York Times, and it was that where it was. Saw those, and some of those numbers are staggering, and also with Hispanics and other groups that he thought he could count on. He saw those and is being forced to consider a debate. I guess it's possible that the president himself says he wants to be in a debate, but anybody around him would say, Mr. President, let's think about this, probably, I would think. But the notion was that he was forced, his hand was forced to accept. I'd say the opposite. I'd say Trump definitely wants a debate to get Biden off script, off reading a teleprompter.
I mean, I think it can be all these things, and everyone has sort of their own interests, but I would not underestimate the power of ego in both of these candidates pushing for these debates. Donald Trump's campaign responded yesterday that they wanted not just 2 debates, but they wanted a debate every month. They already did a counter proposal to have another debate in July, another one in August, and another one in October. They've already accepted the invitation of Fox News with Brett Baird and Martha McCallum to do a debate in October. The Biden campaign has basically said no deal, that we proposed 2 debates, and that's it. That's all you're going to get.
Yeah, see? They got CNN and ABC and saying absolutely no to Brett Baird and Martha. We've seen Brett Baird and Martha McCallum. We know what kind of, and we've actually seen debates from those other places. I think Trump, I don't know. Do you think this is cast in stone? He can't back out and say, look, I want a studio audience. I want, a different, some other network to moderate. You don't see any changes, Alex? I think he kind of got, he wants to do it so badly. I think he agreed to some terms he shouldn't have agreed to.
Absolutely. Donald Trump gave up all of his leverage in these negotiations when he said he would debate Joe Biden anytime, anywhere, any place. I mean, his staff just weeks ago in Washington was handing out cards to reporters. I have one in my apartment here about anytime, anywhere, any place. So once Joe Biden agreed to any debate, Donald Trump was basically forced to accept those conditions.
I just don't know. I mean, if you let's say you watch different now, you watch Fox. Let's say you watch 12 hours of Fox one day. Let's say the next day you watch 12 hours of CNN. It's like an Venn diagram. It's like this. They don't cover the same thing, and so he's agreeing to go. I mean, into I would say enemy territory for a debate. I'm talking about Trump. It's a very friendly place for Biden.
And certainly the Biden campaign feels that, which is why this came together. So yeah, that's why this came together so quickly. Now, in terms of your other question, is this set in stone? There is an X factor here, which I think is like underreported, that could unravel this entire thing, which is the RFK Jr. of it all. Joe Biden and Donald Trump agreed to a one-on-one debate. If you look closely at both CNN and ABC's parameters, RFK Jr. can qualify for both of these debates. And RFK Jr. said yesterday that they believe they're going to make it. Now, it requires a certain number of polls, and it requires getting on the ballot in enough states to get 270 electoral votes. RFK Jr. is only on the ballot in 4 states right now, so he has a ways to go, but he has until a week before the debate to qualify. CNN told me yesterday that the guidelines remain the same, and the Biden campaign said they only agreed to a one-on-one debate. So what happens if he actually qualifies? We don't know.
Alex, I want to thank you for walking us through this. We will be debating the debates, I imagine, for quite some time. Thank you.
Thank you.
Coming up, a new partnership in cloud security software as 2 big companies look to compete with Cisco's acquisition of Splunk. Details next. And Walmart is set to report. We're going to bring you the numbers and the market reaction at the top of the hour. Palo Alto Networks is buying cloud security software QRadar from IBM. The purchase price was not disclosed. Palo Alto will migrate existing customers to its platform, and as part of the partnership deal, IBM will train more than 1,000 of its consulting employees on Palo Alto's products. And Palo Alto CEO Nikesh Arora said his company needs to be better prepared to go up against Splunk, which, as you know, we just talked about, was acquired by Cisco back in March.
Dell jumped more than 11% yesterday to an all-time high after Morgan Stanley raising its price target on the stock. Excuse me, the analysts there are predicting that Dell will continue to grow sales of AI servers. Dell shares are now up about 95% year to date. They jumped back in March after the company revealed in its earnings report that it had benefited from the AI boom. When we come back, a lot more on Squawk. We're going to talk to the CEO of Educator, with the 10th ranked company on this year's CNBC Disruptor list. That's next. And later, quarterly results and instant reaction from retail giant Walmart. It's a biggie. Squawk Box comes right back after this.
Disruptors.
CNBC's 12th annual Disruptor 50 list is out. One sector well represented in this year's roster is logistics. And our next guest is the CEO of warehousing robotics company Exotech, and it's coming in at number 10 on the list. It's Romain Moulin. He's CEO of the company. Can you describe exactly some of your products to us and to viewers Romain, can we see any of them, or at least describe them vividly for us?
I will describe. Thanks a lot for having me. I'm the CEO of Exotech. Exotech is a warehouse robotics provider, and the core technology that we provide is the SkyPod system. The SkyPod system is a system which is based on a fleet of robots moving in 3 dimensions in the warehouse to bring goods to the picker. So anytime you have a distribution center, you might use this technology. And what does it provide to our customer? It's density. You will find up to the ceiling, so 5 times more dense. Throughput, your picker will work 5 times faster, and also better ergonomics and working condition for the operators. So that's really what our customers are looking for their warehouse and what we provide them.
It seems to be both good and bad for existing workforces, Romain. It seems much safer, and a lot of it is work that is difficult, dangerous, I wouldn't say menial, but in warehouses that vertically, as you say, go up 40 feet or whatever. This would be a game changer, and I guess that's why we call it a disruptors 50 list, because of the disruption. Will your company employ enough people to make up for some of the people that no longer need to be in the warehouses?
Yes, in fact, it's not the problem that our customers are facing is that they don't find the people that they are looking for. There is a labor shortage which is worldwide, and to get back to your first remark, that's because of the working condition. You should imagine that a worker is doing 10 miles a day, a usual picker. So these are tough conditions, and with our robotic system, we really want to improve this condition and to improve the safety, as you said. So yes, it's a tremendous market, and customers are really looking for the next generation solution. That's why they come to us.
You already have a pretty good client list too. If you can tell, I know Carrefour and Gap, and headcount up 80%, $1 billion of systems you recently sold at a $2 billion valuation. Long term, what kind of compound growth do you think you can?
Yeah, we think it's only the beginning. As you said, we have reached 1 billion order intake in 8 years. We are quite a young company, and it is incredible to reach such an install base in such a short time, and we are proud of that. Our customers are in different verticals, like apparel, you said grocery for Carrefour, Ariat in e-commerce, The Gap, Decathlon, sports goods. So our system is applied to many different logistics, many different verticals, which I think has explained our growth. And if I take only the example of the US, we have doubled our revenue each time in the past 3 years. So I think the system, the products resonate very well with the market need right now. And Exotech growth is, in terms of headcount, is also extremely important. We have reached 1,000 people now.
Real quick, in terms of what AI is doing and what it could present as a challenge to your business in terms of competition, I assume that most of these robots originally were built with machine learning, and so and there's an install base, so that's fabulous. And maybe it's just too hard for people to scale up very quickly. But do you have any concern about that, and what are you doing on the other side of that in terms of AI yourself?
Yeah, I see AI as a huge opportunity. We already use AI in our robots. We have an automated picker, a robot that can manipulate goods in the totes that we transport. And typically this automated picker is based on AI. AI can solve things in warehouses that were never solved before. We are manipulating goods which are very different, where you don't have many informations. So this is a technology that will be key, and we have integrated it very soon in our R&D, because we know it will change again once again. I think we changed the game the first time with robotics, which means a lot of software and less hardware. If I show you the R&D team, you would see that in fact 70% of these people are doing software. And when you see our system, you only see the visible part of the iceberg, which is the hardware part. So the algorithm, the software, the AI are key in delivering more performance from our system. So AI is only a part of it, but it's a part that can have a great impact in the coming years. And all the players are working on these topics because we can solve, once again, things that were never solved in the past 40 years with AI.
It's interesting. Well, I hope you're steadily moving up the list, Roman. I know you were at and your co-founder at General Electric Medical, working on medical robot features prior to this, and then this application must have occurred to you, which is pretty amazing. But we appreciate your time this morning. Good luck. Thanks.
Thanks a lot.
It is just before 7 a.m. right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan. Becky is out this morning on assignment. Meantime, got a lot of stories to tell you about. Some of the top ones. Take a look at this. The meme stocks. I don't know if they're meme stocks anymore because they've now tumbled. I don't even know what we call them. They've tumbled for a second day. The likes of GameStop, AMC, BlackBerry, and costs all lower ahead of the open after falling yesterday, halting their 2-day win streak. Despite the pullbacks, GameStop and AMC still up more than 120% and 80% respectively so far this week. So maybe they still are meme stocks. Meantime, Netflix saying its ad-supported tier has topped 40 million monthly users. That's up from just 5 million a year ago. Netflix launching the ad-supported plan at the end of 2022. It says 40% of all signups come from those plans in countries where they're available. And Netflix also revealing it will launch its own advertising platform and no longer partner with Microsoft for that technology. And the Wall Street Journal saying Microsoft now asking hundreds of its employees in its China AI division to consider transferring outside the country. Move coming as tensions between Washington and Beijing around the technology continue to accelerate. As we check on futures right now, the Dow up about 35 points, the NASDAQ looking to open about 30 points higher, the S&P 500 looking to open about 4 points higher. I want to send it over to our friend Don Chu, who's taking a close look at this morning's pre-market movers. Dom.
Good morning, Andrew. Good morning, Joe. We'll kick things off with an earnings headliner from last night's close, and that's computer networking equipment giant and Dow component Cisco Systems. Those shares right now are up just about over 4% pre-market on shares of just like 75,000 shares or so of volume. It topped consensus estimates for both profits and revenues, even though sales did drop by roughly 13% over the same time last year. That's, by the way, the biggest drop since 2009. But there's optimism that customers are working through inventory and getting things done better in the coming months, so Cisco up 4%. The mystery stock has now been revealed. For multiple quarters now, Warren Buffett's Berkshire Hathaway has been building a sizable stake in an unknown company. We found out late yesterday that it is Switzerland-based insurer and reinsurance giant Chubb. Those shares are higher, right? You can see just roughly 8.5%, around 25,000 shares of volume pre-market for its U.S.-listed stock. Berkshire Hathaway received a special exemption from U.S. securities regulators that let it put off public disclosure of that investment until it had enough time to build up that stake. That stake, by the way, is 26 million shares, nearly that amount, giving it a 6.4% stake in Chubb. It now becomes, by the way, Berkshire's 9th largest holding. So we'll keep an eye on those shares of Chubb. I know we got breaking earnings, Joe. I'll send things back over to you.
Yeah, we're waiting for Walmart. Looks pretty good here. Let's look at this should be able to tough on the stock. Back up.
But it's really the guidance that's what's
Guidance
good.
is good. 60 cents a share was 8 cents above estimates. Revenue also grew and beat estimates. $161.5 billion. Yep, that's a quarter. Also beating estimates. U.S. comp store sales grew 3.8%, and analysts were looking for 3.5%. The retail giant is issuing guidance for the second quarter. Net sales growth expected in the range of 3.5% to 4.5% for the full fiscal year. The company now expects to be at the high end or slightly above its previous guidance for net sales growth and operating income growth. Melissa Repko joins us now with more. She's on set. She has some commentary from Walmart's CFO as well. Hey, Melissa.
Hey, great to see you. I spoke to John David Rainey, the CFO of Walmart, and he said that while inflation is still a factor, what's really driving Walmart's performance is gains with a lot of shoppers that are of higher incomes. And he's also seeing that a lot of people are buying online through their third-party marketplace. So he said this is coming from growth in units and trips to the store and website, not from inflation.
Is that going to be taking away share from Amazon, or is Amazon just growing so fast that that's not what we're talking about?
That's a good question. And it's worth noting that one of the drivers of Walmart's performance this time around was its newer businesses like advertising. He told me 1/3 of their improvement in operating income this quarter came from newer businesses like their membership program, their advertising, their fulfillment services for their marketplace. And that's straight out of that's straight out of Amazon's playbook.
Right. Are any sign from Walmart about overall the low end consumer? We keep waiting to see stress, but if you're going to go anywhere as a low end consumer, it might be Walmart. So
I asked him specifically about the low income consumer, and he said, the low income consumer is still hanging in there. And while he said the pattern has held that people are buying fewer things like home goods and electronics, they are still sticking with Walmart, and Walmart's also benefited from having things like delivery. For the first time, he said delivery actually surpassed store pickup. And he said, we've got customers that are coming to us more frequently than they have before, and newer customers that we haven't traditionally had. And one of the things, interestingly, he mentioned is he said the gap between food at home, so cooking your own food, versus going out to dinner has grown. And he thinks that is benefiting their grocery business and causing people to come to them rather than maybe going to some of the names we heard from last week.
Is there an explanation for how they're capturing this sort of higher end customer?
They are really adding those services that Amazon has been known for. So that speedier delivery, express delivery to people's homes, and then the wider assortment through the marketplace has allowed them to add things like Dyson products or some of those higher end brands.
new high all time. I guess we shouldn't be surprised. Dow's at a lot of the averages are at all time highs, closing in on $500 billion. Walmart is really quite a company. How about competition? E-commerce competition with Amazon.
We'll have to see how it plays out, but e-commerce in the U.S. was up 22%, and that was something he pointed out. But one of the other factors that Walmart is being watched for is a couple days ago they announced that they will be moving a lot of people to Bentonville and to offices, and as the nation's largest private employer, they are signaling that they're moving away from remote work and back to the office. So it's interesting to see what that will mean for other employers as well.
The rest of the country.
Certainly. Thanks for coming in, Melissa. Appreciate it.
Thank you.
Okay, you're welcome. Coming up, Russian President Vladimir Putin visiting China. Council of Foreign Relations President Emeritus Richard Haass is going to join us after the break. Didn't we warn him not to cozy up to Russia? No, he doesn't care. And later, from Wall Street to the White House and back, the Mooch, Anthony Scaramucci, will talk crypto, the markets, and his new book. Sparkbox will be right back.
well.com.
Welcome back to Squawk Box. Russian President Vladimir Putin arriving in Beijing earlier today for talks with Chinese President Xi Jinping. Joining us right now to talk more about the growing Russia-China relationship, and I don't know if there's something that needs to be done about it or not. Richard Haas, Senior Counsel at Centerview Partners, President Emeritus of the Council on Foreign Relations. It's great to see you.
Good to be back.
You see those images and you think what?
Putin and Xi?
Yeah.
Look, this is an axis that's been growing in the last couple of years.
Evil axis.
They clearly oppose an American-led, dominated world. The Chinese have moved awfully close to the Russians in Ukraine, and the Chinese, well, as best I can tell, Andrew, are not providing them arms. They're providing them with the capacity to make arms. And you know, I think what we live in a world now where all the hopes that you would have great power, coordination, and cooperation are dashed. And the real question, for the most part, is not what we can achieve in foreign policy, but what we can avoid. Because quite honestly, neither of these countries has emerged as a partner.
Okay, do we have any leverage?
Over Russia? Not a whole lot.
No, over Russia we have no leverage, but do we have any?
Well, less leverage over Russia is our support for Ukraine. And now that the spigot's been turned on, we'll see how that plays out over time. Over China, look, not a whole lot. You know, what the administration did the other day with the higher tariffs is one form of leverage. It's basically telling the Chinese you can't get away with a return to an export-led growth model. You can't subsidize your workers and your factories at the expense of ours. That gives us a little bit of leverage. We can strengthen Taiwan. We can work closely with Japan. Again, we're not going to bring about a China that's going to be a partner. The question is, can we push back against China so it doesn't do things that we don't want to see?
Richard, it seems like any other country, objective country other than Russia, would look at what happened in Ukraine and, you know, at least see that in world order and just whatever you want to call it, that was horrific, what Russia orchestrated. So is China so, I guess, its own self-interest align it with Russia, or is it just completely ignore all the you know, what's happened in terms of the human casualties and the cost? Or does China not care because they do the same thing to the Uyghurs? Is that basically it? They're both. Is it an evil axis, I guess is what I'm
It's
saying.
a little bit too strong. I don't think that's a priority for them, what you're getting at. I think, look, the good news is China was sobered by the Russian experience in Ukraine. The fact that the West went to bat for Ukraine as strongly as it did. Xi Jinping must think a little bit about, Putin's army didn't perform so well. My own army's untested.
But no second thoughts about look what they did to look at what they did to those cities and the number of. But I guess people say that about us backing Israel, so it's all in the eye of the beholder.
I think from the Chinese point of view, this is the cost, if you will, of foreign policy. I don't think that gives them
no recriminations.
And look, think about it. What's the biggest priority for China? When Xi Jinping speaks about the rejuvenation, which is his favorite word, of the Chinese nation, it's no longer about high levels of economic growth, which it would have been 10 or 20 years ago. It's about Taiwan. It's a foreign policy goal, not an economic goal. It's not a goal about what's going to happen inside Chinese society. This is a somewhat different China.
But let me ask you this. This is Jamie Dimon, who was speaking with Wilford Frost yesterday. He says, we should be strategic, be very thoughtful, and fully engage with China. Fully engage with China. They are not an enemy, he says. They are competing, and they want to, but then he goes on to say, they want a different world than we want. The free, democratic Western world. It is worth fighting for. So,
I'll let you parse Jamie's use of language there, but look, it's not the Cold War. China, unlike the Soviet Union, is fully integrated economically in the world. They're everywhere. We can't keep them out. But look, we've got to have 2020 vision. We can selectively economically cooperate. Big market still, but for strategic goods, we've got to be really wary about helping them. We've got to understand the threat they pose to our own workers and all that. And foreign policy, in most instances, we are not on the same page. Can we maybe find some ways limited to cooperate? I don't know, but they haven't used their influence with North Korea. North Korea continues to build up its missile force and its nuclear force. They haven't been a big help with Iran, as best I can tell, though the Chinese are Iran's biggest importer of oil. They haven't been, and we just talked about, they haven't been helpful with Ukraine. It doesn't make them an enemy, but I think you've got to get up in the morning and say the United States and China are not aligned.
where do you think the relationship is between Israel and the United States and the Biden administration in particular? Sarah Eisen had a good interview yesterday. with President
The
Netanyahu.
arms embargo starting to crack.
Well, it's not, it never was an arms
No,
embargo.
but
That phrase, 99% of U.S. military aid, close to $4 billion a year, is going to Israel. So enough with the arms embargo talk. The United States has been and is extraordinarily supportive. The interesting story out of Israel, and I was just there a few days ago, the interesting story is what is going on inside the Israeli government. You've got the Israeli defense minister openly breaking with the Israeli prime minister and saying it makes no sense to just go after Hamas militarily. This idea that you can be sequential, let's try to quote unquote eliminate Hamas, which is an impossible task, and then we're going to think about what comes after. He said, no, we've got to think about what comes after now. We need an integrated policy. We need a political track in addition to a military track. This is a member of the inner war cabinet. For the first time, the pressures inside the Israeli government have surfaced.
And so how does that play out in your mind, and how does that change the relationship with the Biden administration, if it does at all? And I say, by the way, I keep raising the Biden administration because I think politically in the United States, this may politically be helping Biden in some ways by not sending some of this ammunition to, and I know you're saying you don't think that's what's really happening here, but I will also tell you, I think that the perception among some people in the United States has actually moved against President Biden as a result of those comments.
Look, I think President Biden is trying to thread a needle, and what he's doing is too much for Israel from the point of view of some, and from others he's doing too little. It's a no-win situation there for him. No, but what's interesting is what the Biden administration is arguing for is just what you're hearing from the Israeli defense minister.
Right.
There's got to be a strategy for if you want the Arab countries to send thousands of forces to govern Gaza, to police Gaza, they'll only do it if there's a Palestinian dimension to Israeli policy. Bibi Netanyahu's dilemma is if he introduces such a Palestinian political dimension, parts of his coalition may crack, and then you might be going in the direction of new elections. The word dilemma is overused. He may face a dilemma. The realities on the ground versus the realities of his
I
politics.
told Sarah it's not months, it's weeks. He doesn't sound like, in his own mind, he's not saying what you just said the defense minister is saying. He's going. But will that work? And is it, someone said, I don't want to use whack-a-mole, but now Hamas is reemerging in northern Gaza. Someone said it was like cutting the grass. It's like you cut it and then 2 weeks later.
It's a really ugly expression, mowing the grass.
Yeah.
But no, it can't work. Because you can't fight a conventional war in an unconventional setting. There's got to be a little bit of hearts and minds. If you want to persuade the people of Gaza.
We've only been trying to change hearts and minds for 40 years, Richard. I mean, how do you do
But here it's a narrow thing. You want to basically say you don't want to support Hamas. There's got to be a better way for Palestinians to achieve some of their political ambitions. That's a legitimate goal.
Voting in Hamas to govern Gaza was
Well, it was a colossal mistake that we had elections there in that kind of a setting, the way the elections were structured. It's a good example that no one should ever confuse.
So what is it, a two-state solution again? Are we back to that?
Well, ultimately, we're not there now. In Israel, people aren't ready to talk about a two-state solution after what happened on October 7th, but there's got to be separation. And I think ultimately there's got to be a Palestinian state, maybe a three-state solution. The point is simply, if you want Israel to remain a Jewish democratic state, it cannot remain forever an occupation of 5, 6, 7 million Palestinians. That's a non-starter. So this is something the Israelis need to do for themselves as well as for the Palestinians. But, it's a big but, you need a Palestinian partner. You need Palestinians who aren't Hamas, can't be the current Palestinian Authority that's feckless. We need a new generation. That's going to take time. It's going to take not months, but years to build Palestinians who are willing and able to coexist peacefully with Israel and to govern their own territory. That's got to be a problem.
Well, in the meantime, how does Israel prevent another October 7th then?
Well, partially they've got to strengthen their own defense and intelligence. October 7th never should have happened. That in large part is on Israel's own failures. And you do not allow Hamas to come back. That's why you work with Saudi Arabia, with the United Arab Emirates, with Egypt, and say, okay, we want you guys to police Gaza. What will it take for you to do that? What do you need from us? That's the conversation that has to happen. I was just in the UAE, I was just in Kuwait, and so forth. These countries are ready to have that conversation if Israel's ready.
You sound like, do you think Netanyahu's days should be numbered? Is that, I just sort of hear that in your voice.
I think he needs to change his policy. Whether he stays or not, that's for Israelis to decide. But I do believe right now his military only, first we sort this out militarily, then we turn to politics, that cannot succeed. So I think whether he stays or not, that's up to Israelis. I believe the policy has to change. I think the Israeli defense.
Okay, I'm going to make it
minister is
really
fine.
complicated for you.
Yes, sir.
If there is a transition of government inside Israel over the next 6 months, what does that do to the politics here in the United States as it relates to President Biden and former President Trump?
I don't think it has a big change on us, on our politics. Andrew, do you really think most Americans going to the polls this November are going to be focusing on this as opposed to the border, as opposed to inflation, as opposed to 100 other domestic issues? I really don't think this is going to be driving the election. Maybe some voters.
But the reason I mention it is I think that you could argue that some of the things that are happening on campuses around the country are driving elections, or at least driving perceptions of things, and so they all are interrelated in a way.
Well, the best hope there is summer vacation. It just, and
Right.
the end of the school year.
Richard, I mean, Iran, I thought something was starting there, and both sides.
That was impressive.
They didn't want, it's like both sides said, look, we don't want to do this.
And that was really interesting. There's not a lot of good news coming out of the Middle East.
Yeah.
The ability of Israel and Iran to have informal rules of the road so that didn't escalate.
Yeah.
I thought that was a rare piece of impressive diplomacy. That they
This
basically.
was, I mean, things were fired from both countries at each other.
That was impressive. The administration, Biden administration, deserves some credit for basically keeping the lid on that. And what we haven't seen is the situation in the north with Hezbollah get out of hand yet. I'm not going to sit here and be positive about the Middle East, but that was a rare piece of careful diplomacy in a part of the world where you don't see an awful lot of it.
Richard Haas, thank you, sir. It's great to see you.
Good to be back.
Been a while, yeah. Up next, Tesla planning to test robo-taxis in China, but it faces some stiff competition there. A live report from Beijing is next. And then Bitcoin yesterday surging something $34,000, back above 66,000. Trading above now its 50-day moving average for the first time since mid-April. We'll talk crypto and much more with Anthony Scaramucci in just a bit. Squawk Box will be right back.
Time now for today's Aflac trivia question. Which novelist published The Strange Case of Dr. Jekyll and Mr. Hyde? The answer when Squawk Box returns.
The answer is Washboardjim. The answer is Washboardjim. I wrote the book. Good morning, retail traders. Up, down, turn around, pick a bale of cotton. Up, down, turn around, pick a bale a day. Well. Such a pretty world today. Bureau of Labor Statistics. Inflation was accidentally released 30 minutes. BLS is conducting a probe. Interesting. Oh, I just got that one. Well, that's no big. I guess it is a big deal for the hedge funders. I'll tell you what, we live in one of the most corrupt countries ever since the Biden regime. The rich are getting filthy rich. And the poor are getting poorer.
answer to today's Aflac trivia question. Which novelist published The Strange Case of Dr. Jekyll and Mr. Hyde? The answer, Robert Louis Stevenson.
That's a lie. That's a lie.
Tesla CEO Elon Musk hopes to test his robo-taxis in China, but the EV maker is entering a market with some stiff competition, and Eunice Yoon joins us now from Beijing with more. Hey, Eunice.
Peggy has 85 million in volume.
Giant Baidu has a fleet of 500 robo-taxis already in the city of Wuhan, and this week the company announced that it plans to expand that to 1,000 fully self-driving robo-taxis by the end of this year. So we went to Wuhan
Tesla
to find out just what the service is like today. I'm at my hotel in Wuhan and I'm going out to dinner, and I decided that I'm going to take Baidu's self-driving robo-taxi. You need a special app, but not everyone can ride. A notice pops up and warns no young children, pregnant women, elderly, the infirm, or anyone with a bad heart. I'm in the right part of town to get the service, but the app says that I need to walk about 100 feet to get to the closest station to board the robotaxi. The trip costs about $3, and thanks to steep discounts, that's about the same as a regular taxi. We got one, and it's coming in 15 minutes. So here's the robotaxi, but there's a driver inside. The staffer told us to catch an unmanned cab, we needed to go to another pickup point. Less than half of the taxis still come with safety personnel. We did, and another showed with another assistant. Finally, we got one without a human. Wait, no one is inside except for us. We're on our way, but we're moving kind of slowly, about 30 miles an hour. On China's notoriously chaotic roads, the robotaxi drove up a ramp, made a U-turn, and negotiated its way around bikers riding tandem and a timid driver. In an emergency, you press this for help.
But
we finally got here. The Baidu Robo service is 24/7, and it looks like the car is going to go off for another trip.
Woo!
And what we learned is that this is a real experiment, because from the time that we first called for an unmanned cab, Joe, it took us 4 hours before we actually got the cab. But once we were in it, it actually works.
Right. The 500 operating robo-taxis, which you said at the beginning, I was like, that's amazing. And going to 1,000, it's not quite true. Exactly.
Well, no, it is. I mean,
It is,
well, there are some that have the driver assistance.
Safety drivers.
But, no, I know. It's a work in progress, as a Baidu executive told me. But I also thought what was interesting is, you know, what happens if you're in there, you have an emergency. So I asked the Baidu executive, you know, what do you do in that kind of situation? And they said that you would have to have like kind of the peace of mind to go onto the app and change the destination. So in case you were going to the office and suddenly you have to go to the hospital, you would have to just change the destination on the app. Or you could do what I did, which is like you called the SOS button, and then an agent comes on and they can remotely stop the car for you. And one thing that she said to reassure us is that they have 360-degree cameras both inside and outside of the car. So they're constantly monitoring you for safety purposes. And in fact, at one point, we opened the door accidentally in the cab, and they told us, please close the door.
Is Elon's technology superior to this right now? You think, Sorkin? What he wants to do. It's going to be years till this is really.
Rub it in, Joe, rub it in.
No. I was going to just say that, you know, obviously he's not here yet. There is a lot of expectation that Tesla is going to be rolling out robo-taxis here and experimenting as well. There was actually some commentary about that in the state press. Just yesterday, there was an article about how Baidu had spoken to some of the local reporters and said that they would be open to the idea of working with Tesla on the robotaxi, on Tesla's robotaxi, but you know, depending on the progress and the rollout of that robotaxi, but Baidu wouldn't comment on that report.
Use from a technological perspective, those vehicles that you were in, they have LiDAR, they have radar, they're using just cameras. This has obviously been one of the big sort of technological questions here in the United States about how, for example, Cruise and Waymo produce their cars and what technology they use in Tesla, which is camera only.
Yeah, so it's obviously not camera only. So my assumption is that it would be LiDAR, just because there are now 6 generations of these cars, and Baidu is working with different car manufacturers, all local, to be able to bring the price down. In fact, this week they announced the 6th generation of their car, and they said that they can now sell it for $28,000 per car, which is less than half of what they were selling the previous generation. So you could see the ways in which Baidu is trying to get ahead and really try to roll this out, obviously here in China, but perhaps internationally.
All right. Okay. Eunice Yoon in Beijing this morning. Thank you. Coming up, Skybridge Capital's Anthony Scaramucci out with a new book. He's going to join us, talk about his journey from Wall Street to Washington.
Oh, God.
Very quickly. And some other topics
Idiot.
as well this morning. And then in the next hour, Transportation Secretary Pete Buttigieg is our special guest. Do not go anywhere. Squawk Box coming right back.
Yeah, where you been, Puda? Pooty? The crowd goes wild in the sports arena. Okay, well, I'll be back.
The trial.
Boom.
Welcome back to Squawk Box. A couple of quick corporate stories to tell you about. Walmart shares, they are rising this morning. The retailer posting a better than expected earnings and revenue number. Also, and perhaps this is what's really pushing the stock higher, raising its full year forecast. Meantime, Deere shares falling, earnings and revenue topping estimates, but the agricultural equipment manufacturer cutting its profit forecast for the full year. And Pfizer has agreed to pay up to $250 million to settle more than 10,000 lawsuits over cancer risks associated with Zantac. It's now a discontinued heartburn drug. That's according to a report in the FT that says the exact settlement amount has not yet been finalized. Pfizer saying it continues to vigorously defend against Zantac lawsuits, which it believes are not supported by reliable science, it says, but it will explore opportunistic settlements of certain cases if appropriate. Opportunistic settlements.
Would it make sense again? Coming up, Anthony Scaramucci talks Bitcoin in the market, plus the return of the McDonald's value meal for a month anyway, as it looks to lure customers back to its locations and high food prices, but will it work? Plus, Under Armour.
Walmart's only 62 bucks a share.
Has approved a restructuring plan.
Very undervalued.
It's a $500 million share buyback. The stock under pressure. We'll dig through the report with an analyst straight ahead. Squawk Box coming right back.
Oh. Okay. Well. Okay. I see what you're doing. Boom. Sport channel today. Francis. What are you talking about? That's a horrible job. It's such a pretty world today. Let me see. I gotta get me a good song going here for this morning. Let me think. There's a band I used to play with. Well, that was kind of funny.
With dual motor equals all-wheel drive, that helps put you in control.
Bitcoin surges more than 7% on Wednesday, having its best day since March 25th. Cryptocurrency.
I walk on down to the grocery store. Buy just a thing. The things that I like. Make it back home when I'm damn well good and ready. Stay out and drink till I'm done.
Nighttime drives me crazy, bang my fist on the wall. Used to call me crazy, now you call me it all.
My brother Phil came on
Over yesterday.
played Donkey Kong all the day long.
crazy, I bang my fist on the wall. Used to call me baby, and now you don't call me at all. Me crazy, I bang my fist on the wall. Used to call me baby, and now you don't call me at all. Split Lip Rayfield.
Some percentage of what the gold market is. Why it should be, I mean, Tom Lee says 150 by the end of the year, which I have no idea what to think about 150,000 by the end. But it seems like if that is a given, that it should be moving up even more quickly.
Okay, well, let's just do the math together for a second. Let's say gold is $16 trillion.
Right.
And let's say Tom Lee is wrong by half, which I don't think he is, and I appreciate him coming to my book party last night, but I think Tom Lee's going to be right. But just if Bitcoin got to $8 trillion.
Was it the coiffed Tom Lee, or was it the wild TomLee? Because
it was a little wild
when he comes on here.
Yeah, I'll be back.
He's
Let's
an
kill it today.
incredibly analytic guy.
He's so smart. I know.
Doesn't have your or my emotional wavelength, Joe. You know, we have.
I got 1178
cosine and cosine.
to hold. Keep this thing bullish. I might.
And I need more product.
I'll wait until open
Not
trade
less
it.
product, more product. Go ahead.
I already got out of it.
Go ahead.
I have a political.
Go ahead.
Go ahead.
I know where you're going.
What do you think I'm going to say?
I know where you're going.
I was going to name it the conversation. I'm going to sit over here and I'm going to represent 80 million.
No.
I'm going to represent 80 million
debates. So the big news of the morning.
I'm going to be
the last
the
24 hours.
You're going to gang up on me.
Hold on. The big news of the past 24 hours is Biden's going to debate Trump. Trump's going to debate Biden.
Yes.
What do you think of this decision? Is this a good idea for Biden, a bad idea for Biden, a good idea for Trump, a bad idea for Trump?
Fuck, we got a
what
debate.
does the match look like? The results.
Well, I think it's a great idea for Biden, and I think the Trump team is probably now looking at those conditions that Mr. Trump impetuously agreed to, and they're probably worried about a few of those conditions. And so now, what's at issue? Trump said, "You make up the rules. I'll debate you any place, anytime." They made up the rules. He hit the bid, and now the question is, he's going to.
Why do you think this is going to be very good for Biden?
Oh, because there's low expectations. Anytime that you enter a debate with
Even Andrew has low expectations.
No, but anytime you enter a debate with low expectations, you know, the president is way more put together, and he's way sharper than people want to give him credit for. He does have a stutter that's plagued him his entire life, and he is older. But as I've said on this show and other shows, I would take somebody older and slightly forgetful over somebody that's full on crazy. And so to me, I love NATO. I love the international order. I love the fact that we have very, very smart people that are working on things like the economy.
What do you
I don't like the impetuous?
What do you make of a number of your peers on Wall Street, who I think had moved away from Trump and are now moving back? And I'm thinking of, you know, I don't know if they ever moved away, but Ken Griffin or so many others. You go out to Milken and you know, there's a whole bunch of people that are moving back into Trump camp. And then there are folks even like a Bill Ackman, who I don't know if he's fully in a Trump camp, but he's clearly in an anti-Biden camp with the hope that somehow he's going to find some, you know, new candidate who's going to emerge.
Well, you know, I had then Vice President Biden and Bill at a dinner at the SALT conference in 2017. And there
this is Ackman.
Yeah, Bill Ackman. Right, yeah. And so there was some soreness there, and I think it spilled over into where we are now. And I think Bill's a very analytical guy. I don't think I think that's his objective view. He thinks Mr. Trump is going to win. That's his objective view. I think Mr. Trump is going to lose because this is a get out the vote situation. These are two candidates that have been in the public spotlight for 5 decades. There's very few people in the United States that don't know who they are. This is not the Barack Obama 2008 introduction tour. These are two known entities.
So what do you think, though? There is an argument to be made, though, and I don't know if you think it's
way more funded than.
I don't know if you think it's helping him or hurting him, but the fact that Trump is, down at a courthouse and has effectively been muzzled, does that help him? I mean, but no, there's a view that the public doesn't see him that much, that actually people forget about some of the things that might be considered on the crazy side. But then there's another view that he needs to be out there in front of a lot of people to sort of get them excited and riled up. How do you think that this cuts?
Is he getting a lot of attention being at the courthouse? So I think he is. I think the former president.
It's a different type of attention.
Well, no, but you see, the former president would tell you that any type of attention is good. Good attention, bad attention, negative attention. You pick the attention. Get the spotlight on me. If you get the spotlight on me, my name recognition goes up.
Right.
And these presidential contests are generally popularity contests. They're not hiring decisions by the American people. It is a popularity contest, and so he likes this sort of stuff. He also
It's not really popular. It's who do you like or who do you hate the least?
Hey, I'm just talking about what he says, but also he loves all of these guys showing up with the long red tie and the white shirt, and they're doing this in front of the camera outside the courthouse. He loves that stuff.
But at the same time, Bill Ackman tweeted out, and that's how we happen to see it, of Victor David Hansen, I think, a kind of a synopsis of the back. Did you read that? The background of Joe? I just, when you say he's had, and I feel anybody that has a stuttering problem, I feel bad for, and that, that conjures sympathy. There's a lot more in Joe Biden's history than stuttering, and a lot more of his problems that he has right now are not tied to stuttering.
I think that the American people, 70% of the American people, would prefer two other choices.
Right.
These two.
Right. That's what I'm saying. Both sides are holding their nose. Okay.
And this is sort of the relics of the baby.
But you're a lifelong Republican, and maybe you don't believe. Maybe you think that
conservative-minded person, even though socially I'm liberal.
Right.
I think you share that.
Right. Exactly. But you probably, there are times when President Biden is saying certain things about corporate America, or where you probably say, "Oh, he's just appealing to the populist side of things." He doesn't really believe in those, because a lot of what he does is anathema, and his policies are anathema to what you've stood for your whole life. And so is Trump.
Let me ask you something.
Oh, I don't want to, because I'm not here to defend Trump.
No, but if there were 40 people that worked at a pharmaceutical company, or 40 people that worked at an aircraft manufacturer or an automobile company, and they said to you, "Hey, this is not working." Okay, you've got 40 people in the cabinet. You have the former vice president of the United States that will not endorse the current potential Republican nominee. He was on the ballot with them.
You can find, Anthony, you can find both now. You can find both. I can mention other people that Mnuchin, I can mention. No, I can mention
the Secretary of Commerce, Wilbur Ross.
I'm not going to out people, but I can.
But you can't find people who worked with Biden, interestingly, who won't vote.
Well, they went in knowing what they were going to do.
If I told you the drug, I was there, I watched the drug getting made, it's going to kill you, Joe. You going to take the drug? The drug's going to kill you, Joe.
Most people remember, there is a nostalgia coming back to what we had for 4 years versus where we are right now, and you can't deny it. So you need, don't talk to me.
The nostalgia is for the checks that were being written to every American family.
That happened in
I'm denying that, but I'm just trying to tell you something. There's a Surgeon General's warning label on the candidate.
That's fine.
This candidate's dangerous for your health. This candidate is dangerous for the institutions of your democracy.
The country's split down the middle, Anthony. So you've either got stupid people or traitors. So just respect the other side, that they have a different they have a different point of view than you.
I grew up with the other side.
Okay, they have a different point of view. Not everyone who's a Trump backer is either stupid or a traitor.
I didn't say that they were stupid or traitors. A lot of
well, they're just not listening to you.
No, it's not it, Joe. We grew up. You and I grew up in a blue collar, aspirational America. We turned it into a blue-collar, desperational America, and Trump is an avatar for those people, and I respect that. But he's too
it's not just that. It's not just
presidency, Joe.
Okay, the book is called "From Wall Street to the White House and Back." Anthony Scaramucci, the Scaramucci Guide to Unbreakable Resilience. How do you have this resilience?
I have to deal with Joe.
I told you it was going to be back to me.
50% off.
Welcome back to Squawk Box. McDonald's is rolling out a special $5 value menu next month to try to lure some price-conscious consumers back to its restaurants as inflation sticks around. Will it work? That's the question of the morning, and John Ford is here to weigh in. What do you think?
Well, Andrew, yes, a $5 value meal and a national ad campaign will have people loving it again. The problem is consumers at the lower end of the income spectrum have just been painfully stretched lately. As we saw in Wednesday's CPI report, rent prices are hogging family budgets, leaving less for splurges like eating out. It's not just McDonald's issue. Remember Starbucks earnings 2 weeks ago? Ugly. More consumers looking for deals. Same with fast food rival Wendy's, where the CFO recently backed off the idea of hiking prices during busy times. Sure, Chipotle is doing well, but they're still in growth mode compared with McDonald's, which is everywhere. So what will $5 at McDonald's and a value menu get you? Well, it sounds great. You get a sandwich, either a McChicken or a McDouble, which I had never heard of, but apparently it's a budget double cheeseburger with only one slice of cheese. Small fries, small drinks, 4 nuggets. Now, getting this value menu approved by the franchisees was like passing an amendment to the Constitution. They sent it back, said the numbers don't work. Coca-Cola had to break the deadlock by kicking in a few $1 million of incentives. But now, McDonald's can do a national ad campaign with a simple message with a low price that people want, Andrew.
Subsidized?
That's
hilarious.
It's like more than $4 million Coke had to, yeah.
Okay, so that might boost traffic in June, but the question is this going to linger, right? Is this discount, what's going to happen when it goes away?
Well, Andrew, on the other hand, the challenge for McDonald's goes a lot deeper than foot traffic and discounts. CEO Chris Kempczynski argued on the earnings call that a national deal with an ad campaign will do wonders, but that's not going to fix the fact that labor costs have risen, food costs are staying high, and there's a lot more competition for the fast food dollar from fast casual on the higher end and from groceries on the lower end. The real setup to this problem was Q1 of last year when McDonald's raised menu prices to cover costs and the average ticket size went down. And that was a warning that a reckoning was coming. Now, there's a bright spot. On the technology side, the touchscreen kiosks that are now in 1 in 4 stores are allowing more low-cost sales, and smartphone ordering and delivery are catching up. And that's where the fix is going to come from for McDonald's, not from value meals and ad campaigns. Franchisees almost blocked the $5 menu because it pinches profits. Yes, McDonald's is going to have to ramp loyalty programs to boost frequency and refresh menus to boost spending, but with labor costs higher, thanks California, the company needs tech, maybe even AI, to boost productivity. Not just lower prices, lower costs.
Yeah, until we really get automated and robots and everything. I feel bad for people there are people that's their first experience with work. It's an entry-level position, and they're going to go away. They're going to go away if you got to pay $25.
Will they go away, or will there just be fewer people per restaurant and maybe more restaurants? Could work. Newsletter.
Oh, go ahead.
You can hash it out in the newsletter. We'll get a QR code on the screen for you even, so you can just open up your phone real quick. You gotta get it. Or you can type in cnbc.com/OTOH. You'll get the full text of both of these arguments, and you can share.
Thanks, John. They're like yelling about it.
I know.
Coming up, Under Armour.
Fast TV.
Yeah, Under Armour under pressure. Yeah. After the company approved restructuring plan, we'll discuss it after the break. We'll be right back.
CNBC.
It's 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with the very talented Mr. Andrew Ross Sorkin.
You're with the talented Joe Kernan.
We were just talking about that. Becky is off today. She'll be back tomorrow. Coming back on a Friday. That's dedication, isn't it?
It is.
It'd be just as easy to say I'll see you on Monday, but you'll be here. Among today's top stories, Walmart shares jumping to an all-time high on better than expected first quarter results. The retailer said it now expects to hit the high end or slightly top its previous full year guidance. Switzerland-based insurer Chubb also jumping. This is the stock that Berkshire Hathaway had built a stake in, the secret mystery stock. Built a stake in the company worth $6.7 billion as of the end of March. He's only got like 200, how much left to go? 200 billion left to try to deploy. This is 6 points. This doesn't really help that much, does it?
No, that's the hardest part. You've got a tough job now.
Yeah.
The job keeps getting tougher and tougher.
And New York Federal Reserve President John Williams telling Reuters in an interview that yesterday's cooler than expected CPI data isn't enough to warrant rate hikes in the near future. Williams said monetary policy is, in his words, in a good place. The futures this morning have been in the positive range after a couple of big sessions, but as you can see, just barely, and that's with a 3-point move in Walmart. So not everything is chipping in, but we're at new highs. Treasuries this morning, 433. That was an immediate move down we saw in yields yesterday on the cooler CPI. Let's get to Dom Chu, because there's a lot of other things moving as well. Some of the pre-market movers. Hey, Dom.
All right, so thank you, the talented Mr. Kernan. Let's get you caught up on some of the other earnings headliners that are not Walmart, as Joe had just mentioned. We'll start with Deere, which is down just about 5% right now, 60,000 shares of pre-market volume. This is the maker of farm, forestry, and construction and heavy equipment. It's considered many to be a global economic bellwether type stock. It actually reported better than expected profits and revenues, but it cut its full year profit forecast as falling crop prices have taken a toll on demand from those farmers buying heavy equipment, so those shares down about 5%. We'll move across the Pacific for our next earnings mover. That's JD.com. The Chinese e-commerce giant is seeing its U.S. listed stock rise by nearly 4% at this stage, over 800,000 shares of volume. It reported better than expected quarterly results, helped in part by discounting and shopper reward strategies that help drive customer transactions, otherwise slowing in the Chinese economy overall. And let's cap things off with news on Netflix. The streaming video giant is up fractionally pre-market, just around 10,000 shares of volume. Netflix says its ad-supported tier has topped 40 million monthly users. That's up from just 5 million about a year ago, so we'll keep an eye on those Netflix shares. And now I will send it back to the talented Mr. Sorkin. Back over to you.
Thank you from the talented Dom Chu. We should show you shares of Under Armour right now because they are tumbling down about 11% right now. Reporting quarterly results, the company's board approving a restructuring plan, and that's part of what's going on here, authorizing a $500 million buyback. Under Armour reported earnings of 11 cents a share during the quarter. That's 3 cents better than estimates. It's on revenue of $1.3 billion. That was in line with estimates, but joining us right now is Williams trading analyst Sam Poser. Sam, what is going on with this company?
I mean, we were very confused why they made the change in leadership a few months ago, and this is the first time we're going to get to hear what's going on. We had thought they were making good progress. Clearly, the progress wasn't up to what Kevin Plank was anticipating. So it's sort of a wait and see still. I guess it could be argued it's good that they're pulling back, but we had sort of thought that they were pulling back enough and making appropriate adjustments. Kevin Plank's been fairly aggressive in his prior leadership at Under Armour, so we just have to see where he's going with this. But I mean, it's certainly the numbers, from a revenue perspective for guidance, $750 million under the Street's numbers. EPS, the Street's looking at 59 cents. They're saying 18 to 21 cents for next year. So that's why we're seeing the big move in the stock right now.
Can you explain, though, for a company that has had folks like Tom Brady involved in it, currently Steph Curry, why they haven't been able to break out of this challenging period? Is it a product issue? Is it a distribution issue?
It's I think the company's been unwilling to pull back enough in past years, and now they're scrambling to do so. I mean, back when Sports Authority and Sports Chalet went out of business, which I think was in like 2016, they kept driving revenue at that time versus and put a lot of product that was distributed in some of their better distribution, like Dick's, into retailers like Kohl's. So they've never done a great job of segmenting the product. That appeared to have been starting, and you know, based on this restructuring, maybe you know, it's happening. But the problem is that they don't have a lot of must-have product. You know, I don't know how much product that Tom Brady would sell, but I mean, I think they may have missed some opportunities with Steph Curry, both from a product and from a marketing perspective over time.
Sam,
you know,
the stock is trading right now at 608. And good, you know, you have an $8 target on it. I don't know if you've changed your target or revised it this morning. Do you buy it at this price, and is it a great value opportunity, or do you see the risks outweighing that?
Well, I mean, just to be when they announced this this change in leadership, I lowered my price target and downgraded the stock to neutral. I haven't touched the rating or the price target since then. Because I really felt like it would all be guesswork in a sense. Right now, I think we got to wait and see. I have a hold rating on the stock, so I mean, you know, I don't think. I mean, there's always opportunity, but I don't really foresee. I think we're gonna have to see how this whole thing plays out over the next.
Sam, I want to thank you for joining us this morning. It's good to see you as we try to make sense of this news this morning from Under Armour. When we come back, a lot more here on Squawk Box. Our can't-miss market conversation. Got Atlas Merchant Capital's Bob Diamond going to join us on the set right after the break.
starting Wednesday. Yeah. Oh, you're back. We're having a conversation. Let's get right to our next guest, who's here to talk markets, banks, inflation, and Fed policy. Bob Diamond, the CEO of Atlas Merchant Capital, former CEO of Barclays, and like all of us, amateur. Well, you're much less amateur than we are about watching the Fed. But I think at the time, 150 to 175 basis points. Did you ever believe what the market thought at that point? I think you said at that point, maybe half that at most.
We talked in January, remember, and it was clearly in the market that it was going to be 150 to more. And my sense at the time was there was far more risk for the Fed, for the chairman of the Fed, to ease rates with the economy as strong as it was. And the worst thing that could happen is an ease. It's a Stokes inflation a little bit, and you have to come back in and raise rates. So I did not believe there would be first half rate cuts. I remember telling you in January, maybe toward the end of the year, maybe one, and I think the economy is a little bit softer right now, so I think it's a bit more balanced, but maybe this year, maybe not.
What you said right at the beginning of when we're speaking here was the worst thing that can happen is if they don't continue tightening. It's Stokes market sentiment or whatever, and then they have to. It sounded like you're describing what we've sort of seen, but you're saying no. You're saying that we are seeing some effect to the restrictive policy that will allow them to cut.
I think so. If you like look at the second half of last year. So we talked in January. We just had the second half of last year. The economy was a bit stronger than anyone thought. Inflation was a bit lower than anyone thought. And the labor force the labor markets were still really, really tight. So in a way, in January, I'm saying to myself, they actually can't cut. Now look at the first half of this year. I would say for most of us, the economy is a little bit softer than maybe we thought.
Maybe.
Inflation's a little bit higher than maybe we thought. And for the first time, we're seeing a little bit of softness in the labor market. So actually, they're in a position right now where they can't raise.
Well, we are seeing highs everywhere in the indexes and Bitcoin, and I mean, you're sure the economy's slowing, and you're sure the labor market's weakening. I'm not sure, and you're sure inflation's moderating. I don't know if any of
we have to watch the numbers, and I think what I feel pretty confident about, which you and I have talked about too, is that if you look at the markets and if you look at the go forward, it's much better with rates at 5% than it was with rates at 0. The abnormal environment was 12, 13, 14 years of 0 to 1% interest rates, and this isn't a big problem.
Why are we rushing to get back? Why are we rushing to get back there? And why do you think does Europe will cut before us?
I think both Europe. I think the UK will lead. Europe will be second, and I think they'll both be ahead of the US. Now, to some extent, I think they need it. Right? Their economies are have not recovered as well as the U.S. economy. So I think they need that impetus to economic growth a little bit more than we do. I think what's fortunate for Europe is as they've come into the first half of this year, the economy's a little bit stronger than people expected and inflation a little bit lower. So I think they are poised to cut, Joe.
The banks have been breaking out. Especially like J.P. Morgan. Why? The yield curve steepening. They're loaning more. What is so positive for the banks? And is there anything on the horizon, commercial real estate, anything that is disturbing?
There's a lot of things, particularly in the portfolios, and you mentioned commercial real estate. But if you kind of zero base it on banks, and obviously J.P. Morgan's performing well, but let's look at the 4,500 banks in the U.S. Just those banks.
Right now, all 4,500?
4,500. And we're going to see consolidation. But let's just
summarize, so we can't go do them all. But go ahead.
Definitely going to consolidate. Really? No question. But let's just say there's a strong bank that's feeling good today. They've weathered the interest rate. They've weathered the commercial real estate. And all they're doing is saying, we're strong today. What's the go forward? Well, forget advisory. Because people talk about advisory as being the litmus test for banks. The real litmus test is, for those banks that take deposits and make loans, what's the go forward? Interest rates at 5 or 5.5% are fantastic for banks, far better than 0% interest rates. The next move is likely to be lower, not higher. That's great for banks. And there is probably as much demand for lending as there has been in a couple of years. So the go forward for core banking, I think the go forward market opportunity and market environment is pretty good.
Said we got to go.
We do.
We always have things to ask Bob Diamond. What's on your mind?
We gotta go, but well, the question I would ask, if you looked at all of these whale filings between Chubb and some of the stuff that Dan Loeb's buying, Goldman, would you be buying financials right here at this point, or do you think that everyone's too late to
We are definitely investing in financial services, but our focus is very much outside of kind of the big publicly listed banks. I think where we're seeing a lot of people invest, to your point, Andrew, is in insurance platforms where they can be married
with something else,
with their portfolios of credit. And I think that's what Dan is looking at, and I think it makes sense.
You like Scotty Scheffler?
You know, I think this is Rory's week.
You do?
Rory's going to get a major.
He's got those personal issues there. Now he's free at last.
I don't know. We gotta go. We gotta go.
I know. So the way Scotty Scheffler's feet move, mine move like that, but I don't hit the ball.
Mine move like that when I'm dancing.
Okay, we got Secretary Pete Buttigieg. He's going to be joining us live right after the break. I don't know if he plays golf, but we'll find out when Squawk Box returns.
One.
I want to welcome another special guest this morning, Transportation Secretary Pete Buttigieg. He joins us on a number of topics: the FAA reauthorization bill, a fight over airline fees, and another ship crashing into a U.S. bridge. We'll talk about that in just a moment. But, Mr. Secretary, I want to thank you for joining us. Why don't we start with this FAA reauthorization bill? What's in it? What's not? and how happy or unhappy you may very well be about it.
So we're really glad to see this pass, glad to see that it passed on a bipartisan basis, first in the Senate and then last night in the House. This includes a number of provisions that help support the FAA continuing in our course of enhancing safety. It's also got a very important consumer protection provision. You'll recall a few weeks ago, our department put forward a requirement that air funds, if they owe a passenger money, that they get that refund out automatically. There was a big question over whether the bill would align with that, and ultimately it did. As a matter of fact, it fortifies that by putting it into law so that a future administration couldn't strip it away. So we're happy with this. We're ready to run with it. Now, there are other things that are important for the FAA that we're still working to do, notably getting the authority for a mandatory account that will help with capital spending to do these big IT upgrades. That will fall in the budget, so that's a different legislative vehicle. But certainly this authorization piece is good news. We're thrilled to see it pass and get to the president's desk.
Well, interrelated to all this conversation is hidden fees. I know it's a little bit of a separate issue, but the airlines and their industry trade group have filed a lawsuit against the Department of Transportation as a result of the effort to try to overturn or this rule for hidden fees. You took to X and said you were speechless. Do you have anything more to say than just being speechless?
Yeah, so the same week we put out that rule on automatic refunds, we also put out a rule on fee transparency. And the basic idea is that before you buy a ticket, the airline ought to tell you all the costs that are associated with that. What kind of change fees, cancel fees, baggage fees, etc. are attached to that ticket. We're especially concerned about these bait and switch situations where they say, hey, airfare is half off, but you go to book the ticket and it turns out a whole bunch of things that are part of the price of the ticket, they don't count as airfare and they're not half off. So we just said that through this rule, an airline or a ticket agent has to put that information out. And the airlines are suing us, the airline industry lobby to be more specific, saying that this information would be confusing for consumers. We're inclined to trust consumers. I think the vast majority of Americans would agree. And we're going to defend this rule because we think it's the right thing to do. We think it's good policy, and we know that it's based on our legal authority to intervene and prevent any kind of unfair or deceptive practices.
Is it about the deception piece, or is it about the trying to put just a total on it? Because it's not just, I mean, there are the times that you're referring to, but there's also times where you go and you see, the airfare, and then you realize that, obviously if you want bags, you got to pay extra. If you want this, you got to pay extra. And if you want this, and so by the time it's over, the price could be, several $100s more.
So we're not setting a cap or a number. We haven't done that since the days of regulation. And we're not saying that you can't have some kind of unbundling because, there's a healthy debate over how far to go with unbundling, but it may be that some customers appreciate being able to get a lower fare knowing that they're not going to take a bag. So we're not saying you can't charge for carry-on bags. I know some consumers might be interested in a rule that does that. We're just saying if you do, you got to tell the passenger up front. And one other thing that's in our refund rule, if you charge for something like a bag, and then the bag doesn't get there, or you charge for Wi-Fi and the Wi-Fi doesn't work, you got to get your money back on that as well.
Help me with that one, by the way, the Wi-Fi one, because the Wi-Fi never works. How are they going to know that the Wi-Fi didn't work for the 2 hours of the 5-hour flight and actually get me my money back?
Tell them, and if they're not being responsive, tell us. We'll follow up. We've gotten billions of dollars in refunds back to consumers, and we're ready to chase this as well to make sure people get what's owed them.
We'll let you know. Meantime, the Department of Justice, and I'm curious about your reaction to their findings on Boeing. And I'm also just curious what you tell the American public when it comes to getting on a Boeing flight. I've actually seen people online and other places say, I'm looking for an Airbus plane.
Look, I get on a Boeing aircraft every few days. I think I'm going to do that in a couple of hours. And every time I get on any aircraft, I know that its safety is backed by the oversight of the FAA, the professionalism of the flight crews. That's precisely why we are putting so much scrutiny on them now. It's why FAA has taken the extraordinary step of restricting their production until they demonstrate that they can expand their production safely. Remember, this is all about taking what is currently the safest form of travel in the world, which is being on a U.S. airliner, and doing everything that it takes to keep it that way. We're going to continue to be extremely rigorous and have extreme scrutiny on the aviation side. Meanwhile, I'm really pushing our country and our culture to get something remotely resembling that level of seriousness about roadway safety. You know, we saw roadway deaths go down by between 3 and 4% last year. That's coming off a number of 40,000, which means something like 1 or 2,000 people didn't die last year just off of that gain. We need to keep driving those numbers down until they get to 0, which is the number of passengers who lost their lives in commercial airliner crashes last year.
Hey, I got actually a related question, but you might think it's a curveball of sorts, which is, you know, we keep talking about robo-taxis on the broadcast. Tesla's obviously wants to get into that business. Waymo's there. Others are trying to play in that space. You talked about number of deaths a year. What do you think the politically palatable number will be where you and government officials say, you know what, we got the number down from 35, 40,000 deaths to 5,000 deaths, but 5,000 of those deaths will be the result not of a human making a mistake, but potentially a computer?
You're right. There's a real paradox here, which is it seems like the public would be more accepting of more deaths and injuries caused by people than caused, so to speak, by machines. But I also think we have an opportunity and a responsibility to say about these new technologies, the standard should be, don't just be as good as a human driver, be much, much better, because they can. This is part of what we have contemplated in our new rule on automatic emergency braking, for example. We set a new regulation means that can't just be a bell and whistle, that's got to be standard on every car. Part of what we're thinking about there is the sensors on those cars can or should see, you know, in the rain and the nighttime better than humans. It's not just make it as good as humans, it's make it much better. And I do think, look, 100 years from now, I wouldn't be surprised if people are scratching their heads that untrained human beings were driving cars at all. But we got to get from here to there.
Mr. Secretary, we got to roll, but I got one final question. You are a pretty good debater, so I want to know, did the president consult you about this decision to debate former President Trump coming up in June and again later in the fall? And
I'm not that involved in the campaign tactics. Got my hands full with what the president's asked me to do on the transportation front. But you know, what I'll say is that we've got a really good story to tell as an administration. I'm proud to tell it when I'm out on the road celebrating the projects. By the way, happy Infrastructure Week. It's actually literally Infrastructure Week, and it's finally not a joke here in Washington because we've got the funding to back it up. And you know, whether it's that or any of the other things we're doing, we're proud of the work the president's led.
Mr. Secretary, we appreciate you joining us this morning. Thank you.
Thank you.
Squawk Box coming right back. We got some numbers for you in just a moment.
Welcome back to Squawk Box. Rick Santella here live at CME HQ with the breaking news of the morning. Let's start out with initial jobless claims. Very close to expectations, 222,000. That follows a slightly revised 232,000, so we're down 10K. Continuing claims, 1,794,000. That is definitely a little bit hotter than expectations. In the rearview mirror, a subtle lower revision from 1,785,000 to 1,781,000. So we continue to remain under 1.8 million. The last time we were over that was the last week in March. Let's move towards April housing starts. Expected to be 1,421,000 seasonally adjusted annualized units. Comes in super light, 1,360,000, and of course this is just the lowest since the rearview mirror, which took a huge downward revision to 1,287,000. These are really weak numbers. If you look at last month is the weakest level going all the way back to June of 2020. So these are huge misses on starts. Let's look at permits, 1,440,000. That is less than the 1,480,000 we were expecting. In the rearview mirror, a positive revision from 1,458,000 to 1,485,000. So the 1,440,000, that is the weakest going back to April of last year. Let's look at Philly Fed Business Outlook for May. That's a May number. 4.5, we're expecting a number closer to 8, so a little bit of a disappointment, but not much. And if you look back, we've had quite a streak of negative numbers, so this remaining positive is a fairly good thing. Now let's look at April import prices. On a month-over-month basis, up 0.9%. That is the hottest going all the way back to March of 22. And if we look at ex-petroleum, comes down, but not very much, up 0.7. Up 0.7 is the hottest number since December of 22. If we look at import prices on a long-term basis, year over year, expecting up 0.4, almost triple, up 1.1%. That is the hottest going back to, you guessed it, Dece of 22. Dece of 22. Now let's look at export prices on a month-over-month basis, expecting up 0.2, more than double, up 0.5%, the hottest since February when it was up 0.7. And finally, export prices year over year, expected to be down a little over 1%, finally comes close to expectations, down 1%. And down 1%, well, consider this. This is the 15th consecutive negative month-over-month change on year-over-year export prices. That is a good thing. That's a good thing. And last month moves from -1.4 to -1.6. So at least export prices are coming down a bit. And most likely, as we continue to watch the give and take on global trade, we should keep in mind that countries outside the U.S. are starting to look a whole lot better, especially in the Eurozone and to some extent the UK. So we want to pay really close attention to those numbers and the implications for such things as what their central banks are going to do and their currencies are going to do. Right now we have a 4.75 2-year, so we're up about a basis point since the numbers were up. That means it's up 3 basis points on the session. If you look at 10-year, currently at 4.34, they're up 2 basis points on these numbers and unchanged on the session. Joe, back to you.
Yeah, that's you got a 2 basis point and unchanged. I'm not sure there are too many surprises there, Rick. But let's bring in our own Diana Olick and Steve Leisman. Diana, let's go to you first. Good morning.
Good morning, Joe. Yeah, as Rick said on that housing starts and building permits number, it was a huge miss, but it should come as no surprise. I'm not actually sure why the forecasts were for an increase, because we saw mortgage rates in April go up over 7%, up to 7.5%, and really stayed there for most of the month. And we heard from the home builders that even though they had a strong beginning to the spring market, they really started to see traffic die down a lot. We got home builders sentiment yesterday. That number came down out of the positive territory into the negative territory with buyer traffic being the worst read in that report. And that's because they're just not seeing people come in. They're also saying that they have to start with incentives again. They had been dialing back on incentives, dialing back on putting the extras in and doing some of the mortgage rate buy downs. Now they're going to have to start doing that again, because when you have mortgage rates over 7%, not only are people shying away from buying, but they're just not going to be able to afford it or even to qualify for that mortgage. So when you break out single family versus multifamily, single family is down both on starts and on permits. Permits, of course, being an indicator of future construction. Interesting on multifamily, though, we did see a monthly jump in multifamily. These tend to be volatile numbers on multifamily. A couple of big projects could skew the numbers one way or the other. We know we have a lot of supply in multifamily, but I will say rents have started to tick up again, even with that new supply. So perhaps they're seeing, down the road that they're going to need more supply coming on, especially if people can't buy homes, they're going to have to rent them. So again, disappointing numbers on the home builders, again, because of mortgage rates. The bright side is we did see rates come down a bit this week. In fact, we're at 6.99% on the 30-year fixed, just under 7%. If we can hold back into the 6% range, you might start to see these numbers come back. The builders feel better about it. But right now, they're just not seeing the traffic. Back to you.
6.99 looks a lot better than 7. I think I feel much better, Diana, right at 6.99. Steve, what?
It's psychological.
It is. It's like at the store. It's up for 6.99. I ain't paying 7. What's up with you?
Well, I think the jobless claims numbers is a good number. I would caution that the increase in jobless claims tends to lag the start of recession, so I'm not, just be a little careful with that. I am interested that the downward revision to March in housing follows downward revisions to retail. March is looking at the moment less strong than we thought it was. And I don't know if you caught this yesterday, but we were able to do a rapid update, Joe, towards the end of the day. I know you're usually glued to your TV watching the afternoon coverage on CNBC. You're not smiling.
No. Yes. Yeah. Exactly. Not baseball.
What happened yesterday with the retail sales number? What the good discussion we had yesterday took the flat retail sales together with the inflation number and said, well, what's going on? Yeah. Downward revisions to Q1 by 0.4 in the rapid update, and downward revisions to Q2. Q2 still remains strong, but take that with a grain of salt because we don't have very much data in on this yet. So we're watching this thing, and then it gets to this, ongoing debate between Santelli and Leisman, maybe between optimists and realists or optimists and pessimists. I don't know what you want to call it. Does the lower consumer spending, does the less economic activity bring you less inflation? No. And the markets seem to believe that's the case right now. They may end up being wrong like they have been in the past. And I get to interview Tom Barkin today from the Richmond Fed and ask him that question. But what I will say is everything I say about supply and demand has nothing to do with what Diana was talking about, because it's the housing market. Okay. It's so weird and so in its own way.
You're scared. I'm glad you said I get to interview, because earlier you said the debate between Leisman and Santelli, you're starting to use a third person for yourself. You know who else does that?
Sticky will remain. Sticky's going to stay sticky. Doesn't matter.
They're going after
two-speed consumer.
You're using the third person.
Well, we think that we will be later going on a subway down to the New York Stock Exchange where we will be sitting.
Now that's the royal. Never mind. Rick, Diana, I wasn't with the Steve. Rick was still talking.
I'm happy to, but they said we got to go because we have things to do. But I would love to hear what Rick has to say.
Take us straight to.
I have great respect for his point of view. It's a good one.
Leisman has great respect.
Leisman has great respect for his
point of view.
Coming up after this, we're going to talk meme stocks. Robinhood's chief brokerage officer weighing in on the return of the meme stock trade. Plus, top takeaways from Walmart's first quarter earnings. Stocks jumping this morning in the pre-market. Looking at it up this morning over about 6% right now. You're watching Squawk Box, and this is CNBC.
is one.
Meme stocks seeing some red again today. Dom Chu joins us with a check on how these names are doing. Did you already talk about them in your stocks? So, doesn't matter. Do it again. You're on again. Not more Dom.
I was going to do it before, but we wanted to focus on earnings for that last morning mover. So I'll get you caught up on the meme stocks right now, Joe, to your point. Really quickly here, things have cooled off significantly. That's the headline here. First of all, let's show you GameStop, which is down 11% pre-market. $35 per share right now in the pre-market trade. Now, at one point on Tuesday in the pre-market session, this was an $80 stock, just to tell you how much things have cooled off in just a couple days' time. That's GameStop. Let me show you what's happening with AMC. Similar type story. At one point in the pre-market on Tuesday, we're currently at $5.21. This was north of $13 at one point in the earlier trade, just here on Tuesday. So that's something to watch as well for AMC. And then let's get you caught up on some of the other names out there besides those that have been caught up in this kind of meme stock frenzy. Besides GameStop and besides AMC Entertainment, what you've got are BlackBerry shares now down about 1/3% to $3.22. COS, which is a micro cap. It's, you know, the speaker's headphone maker. It was just worth about $45–50 million at this point. It's down another 5%. SunPower, he has even been caught up in that kind of meme stock trade, although there's some solar kind of fundamental stories to go along with that. But still, the meme stock trades certainly much lower now than they were just a couple days ago. Andrew, I'll send things back over to you.
Okay, talking about meme stocks, let's talk about the return to the meme stock trade this week. And it seems to have meant a lot of business for trading platforms, including Robinhood. Joining us right now is Robinhood's Chief Brokerage Officer, Steve Quirk. Good morning to you.
Good morning.
We're all trying to understand what you think actually happened this week, why this happened, and really how much of this was driven by retail versus institutions.
Yeah, if we just look at the numbers, the last time the meme stocks, had their rally, we're probably doing about in our customer base, we're probably doing about a quarter of the volume that we were at that point in time. So we're not seeing.
Which tells you what?
Well, it tells me, there's a couple things that it tells me. Number one, if you think about all the people that came into the market during that period, I mean, a huge number of new market participants entered that at that point in time. They've grown up. We can see that in our data. 80% of those customers are still with us, but now they're opening retirement accounts. They're looking for yield. They're opening the credit card to get 3%. They've moved on with their life, and they're sort of rounding out their investing experience. In this instance, we did see our volume spike, so there still is interest in this. There's interest in movement and volatility. That's really what it is. But our two biggest days were not anything related to this. They were around NVIDIA earnings and NVIDIA news.
Do you look at this as a positive thing or a negative thing for the marketplace? When you see stocks move like this, I mean, we were talking about sort of the integrity of the market the other day with Jay Clayton, former head of the SEC.
I watched that.
And I think there is genuine concern that when things like this happen and it's not really moving for fundamental reasons, that it undermines that integrity.
Yeah, I think that, by the way, there was a good segment and I watched it. Here, he made a couple points which I thought were really interesting. The number of tradable instruments is down pretty dramatically, right? At the same time, we're at the highest participation rate in the US for households. So now you have more participants with fewer instruments, right? It's naturally going to lead to some concentration in areas. I would also say, even the number of people that came into the marketplace, during COVID and the GameStop era, those people are still in the marketplace. The majority of them are still in the marketplace, and now they're investing in a very different way. So the question always becomes, hey, we all think it's beneficial for every American to participate in the greatest wealth creation vehicle in the world. How they get there, if it's through this.
Right, but if it's through speculation and they lose.
Yes.
That's a problem.
It is a big problem.
Sometimes they leave. They don't stay.
Yeah.
So when you see a GameStop move the way it does, or by the way, Trump Media's company. That's a top 10.
It's one of the top 10. I think it's number 10.
Number 10 on your on Robinhood. I don't know what you think of that. Do you say to yourself that this seems like a completely plausible valuation, or do you say this is insane. And the folks, it's hard to tell your clients that they're not smart, but are they making a big mistake?
Here's the way I'd say it. If you think, like, we can watch what they're doing with their portfolios. And as I said, 80% of those people that came into the marketplace are still with us. Over 2/3 of the people that are even participating in GameStop, AMC, DJT, they're long-term investors. So they're taking a small portion of their portfolio and saying, this is interesting, it's what everybody's talking about.
And they think of it as a trade.
They think of it as a trade, it's not an investment, it's not something that they might, because you can look at, you looked at our RICs, you can see AMC and GameStop are not moving to the top of that.
Right.
This is a trade for them and something interesting, but their core portfolio is going to remain, the most popular names that sit on that.
No, when you said that they're acting differently this time, it's like, yeah, they got about 1/10 of the money they had last time if they stayed in some of those names, right? I mean,
I think, but you have to make the assumption that's the only thing they were doing.
Right, they're doing
Yeah.
But there's been a lot of pain in the meme stocks. Still,
There has been, yeah.
What do you do with the clientele that is not a long-term investor, that's just in there making these trades, or you can tell, I assume, just given their portfolio, whether they think this is a long-term trade? And if that's the case, is there different types of education program? I know you have a whole bunch of education programs on the site, but do you particularly, do you send out a notification to one kind of client that's different than another kind of client?
Well, I mean, it's more on the instrument.
Right.
So, like, you'll see notices, hey, this is a highly volatile stock. Would you like to learn about volatility? Would you like to learn about what can happen with the moves? So you can't we wouldn't be specific for clients. We would be specific for the securities and anything that we're doing with those. And I think that's probably the best methodology to ensure that
What's the correlation these days between what you see happening in the equity markets, NASDAQ and the like, and Bitcoin? For a long time, Bitcoin and NASDAQ sort of tracked each other. I think they diverged again a little bit here.
They did diverge, and I don't think we've seen the same correlations. And so, obviously, we have a native crypto business, but we also have the Bitcoin ETFs. And that was fascinating when those were first launched, because, many, many customers took a very small portion of their portfolio, sold it, and bought one of the Bitcoin ETFs. They aren't customers that are willing to be a native crypto investor, but they want crypto exposure, and that's even in a retirement account.
Have you seen any difference in terms of any big inflows from folks who are using your savings account and the credit card?
We've seen large inflows across the board in the last quarter, and it's continuing right now. So we're taking.
And is that money then getting turned around and invested?
It is getting invested, yes. We're seeing large inflows from all of our major competitors. As we continue to enhance the offering and broaden it, we've become a destination for a lot of the larger customers, and those customers are much larger than the traditional Robinhood customers.
Fair enough. Steve, thank you for coming in this morning.
Thanks for having me.
Absolutely. When we come back, a lot more on Squawk. We're going to go inside Walmart's earnings, talk about what drove its first quarter results. That stock moving higher, much higher in the pre-market on some upbeat guidance on what the future may hold for that company this year. Look at the Dow right now, just about 12 points. Not much, but we'll talk about that and more when we come back right here on Squawk.
5.
Walmart gaining in the pre-market on better than expected first quarter results and some pretty good guidance for more. Let's bring in Susharita Kodali, a retail analyst at Forrester Research. There's a couple of things, Susharita, we try to glean from this. One is, just that Walmart seems to be able to execute with this management team again and again, but also we're trying to figure out the macro environment, which seems to, at the same time it plays into Walmart, there is some signs of stress on the low end of things.
Right. They are certainly able to attract some of those more affluent consumers, but overall the Walmart numbers were pretty strong, definitely stronger than a number of other competitive retailers like Target. Its e-commerce numbers were actually, I would say, off the charts. They reported year-over-year e-com growth of more than 20%, which is higher than the industry is growing, and it was even higher than I believe Amazon's U.S. numbers. So it's definitely picking up share. It also talked a lot about its its Walmart ads business, which is also growing in the strong 20% level. Its international numbers were pretty positive too, at over 10%. So it had a great first quarter, and that is definitely because of a lot of these other businesses, not just what consumers themselves are purchasing.
Were you, as far as the guidance, it was raised obviously, and they were positive, but is it still conservative, do you think?
Well, it's definitely, their numbers, I believe, are in the low to mid single digits is where they're speculating the rest of the year is going to shake out. It's higher than inflation, which suggests that they are certainly picking up transaction volume. They certainly picked up transaction volume this quarter. But when I saw the numbers, it looked like it was a business that was looking more and more like Amazon's business. A significant part of Walmart's business now is coming from its third-party marketplace, which is part of their e-commerce business, and their ads business, which is, of course, consumer packaged goods companies and other brands that sell at Walmart purchasing advertising to be in front of shoppers. So those are definitely high margin businesses. They are monetizing a lot of their foot traffic and the eyeballs to their website. And those are definitely parts of the playbook that some of these larger e-commerce behemoths have succeeded with, and now Walmart is just simply taking pages from those already very successful examples.
It's gotten a little bit political, Susharita. I'm talking about price increases passed along to consumers, and people have even appealed to the big retailers to try to moderate increases and actually bring down prices to help people that are strapped. Do you think, is Walmart done either? Have they raised prices more than they should have for lack of a better term, for profiteering in an inflationary environment? Are they able at this point to bring any prices down to help strap consumers, or is it exactly what it is?
I would not say that Walmart is one of the companies that has been gouging consumers by any stretch of the imagination. I think that some of the other grocery chains have had some of that reputation. I think that even perhaps some of the specialty retailers may fall into that bucket. Walmart has really led on its everyday low price model. It's that EDLP vision that has been part of the company's ethos for decades. And the truth is that part of the growth in transaction volume is largely led not just because of that value equation, but because consumers often do know where they can get the lowest price for milk or eggs or whatever commodities they're purchasing. And often it is going to be a company like Walmart, as well as, there are other players that are in that bucket too, that are trying to win on value. But certainly I would say that Walmart is not one of those violators.
Very good. Thank you, Susharita. I appreciate it. And we'll see you again soon. If I say ELP, to you? Stack ELP? If I say ELP to you, does it mean it? She said everyday low prices.
Yeah.
Doesn't mean anything?
Doesn't. Stack ELP? No. There you go.
Emerson, Lake and Palmer. ELP.
That's what you think.
No, that's what everybody thinks of a certain age. The guy in that final check on the markets. We are up a little bit today. 2 great days that we've seen so far. Maybe a cooler inflation. Not a lot happening today. And the meme stocks are all down. What do we decide? Why they go up or why they go down? People like to do a trade, right?
They like a trade. That's all they got.
At least it moderate a little. Make sure you join us tomorrow. Becky will be back. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer at Post 9 of the New York Stock Exchange. Favors on assignment. Pre-market's pretty steady as the bulls look to defend these all-time highs. Got decent results out of Walmart and Cisco. We're on Dow 40K watch. 10-year 435 on some mixed eco data today. Our roadmap begins with rally mode. S&P eyes its 24th record close of the year. Walmart is on the move. The retailers see some booming e-com sales and wins over some high-income shoppers. And of course, Buffett's big surprise, revealing a secret minority stake in one of the world's biggest insurers in Chubb. Let's begin, though, with the rally. S&P closes above 5,300 first time, and the Dow does inch closer to 40K. Jim, you said this morning overbought, but things can remain overbought for a while.
When it gets this overbought, notice when there's so many different buyers, we've had this a couple times. It's struck with Bill Paul does the great work for the oscillator, basically for S&P marketplace. You can actually have a sustained churn, flop and chop. It doesn't plummet if you're up at these levels. It kind of just marks time. Now, we did have one of these last year where we came in the first couple of days, the NVIDIAs got slammed. The big momentum guys got slammed. Then they came right back. So I know it sounds odd, but you can get it to an exalted level like we are now, and you have some rotation internally, but it's not like when we're like plus 5, 6, really fast, and then boom. So I know, I don't want to be complacent, but when you see a Walmart and you come in and that's the leader, and then the leader yesterday was the industrials, the leader before that with the utilities, that's a really kind of benign rotation. It's not a vicious whip, and it's not being led by the Magnificent Seven, which is really sensational.
Is that why, good example, talking about the headline indices, Goldman's not moving off 5,200. Your Denny today not moving off 5,400.
No, I mean, look, I think that I've been doing this analysis of some managers come on and they really rebel against the idea that there's so much index buying. And I think that as long as people invest, I really don't care how they invest. But you have so much index buying going on. The buybacks are pretty furious. So if you do come in and you want to buy 2 million shares of even an Apple, you will move the stock up. Apple is a big buyback. Obviously, when you buy S&P, you're buying Apple. So there's a little bit of a short supply. I'm not going for a stock shortage call. That's always too glib. But I am saying we didn't have the IPOs. We're above last year for IPOs, but not by a lot. So we don't have a lot of new supply. We've got the investing up. 61% of the people now are buying, are back into common stock. That's the highest since 2008. So you just have a plethora of buyers, not a lot of sellers, and so big buyers move stocks. But again, I come back to the buybacks as being the most significant issue.
Right, now that the window's open.
Yeah, they're in there buying. The banks, geez, the banks buy a lot of stocks. Apple, that buyback turned out to be very, very meaningful. And there are a lot of people who got off the Apple train. And, you know, that was a mistake.
Yeah, the biggest in history. Meanwhile, the sentiment, Jim, is pretty positive.
Yes,
Journal
it
today, soft landing still is intact. B of A, stagflation is so 2022. The risk now is a re-acceleration into services.
I think that one of the things, you got to go back to the Home Depot quarter. And the Home Depot quarter was, like I said, it was a downbeat quarter. But what really struck me was that they were talking about service inflation. They weren't so specific as to say that their own customers, the contractors, are charging more. But we've got to get service inflation down. Look, we're going after rent. We're going after homes. But we have to start talking about services has gone up too much since 2019, and then the very good article in the journal about hospital costs going up. So I don't believe in stagflation because we have good growth. I do believe that there's still inflation and that the Fed will possibly do a surprise cut, but I think the Fed needs to wait. And one of the things that we know, waiting is good for stocks. We didn't think that. We used to think waiting's bad, but this whole anticipation of it is actually better than the actual.
Yes. At least we do have, in these comments out of Walmart today, Jim, general merchandise year-on-year mid-single-digit deflation, and then low single-digit inflation on food.
Okay, so, I mean, you remember today they talk about how the wealthier are back, and look, I joke, but I always tell them when my daughter was here yesterday, she was wearing her combat boots from Walmart. She said, this is what you wear. If you want to be stylish, you want to be styling, you wear your Walmart combat boots. Immediately, of course, I sent that to Doug's crew there. Yes. French bread down $1. Taking big prices down for private brand soda. Big prices down for frozen pot pies. These are just examples. Boneless, skinless chicken, sub $3 per point. They are the inflation fighter. Now, you're not going to get the government to say, the reason why we could have peak inflation is because of Walmart. That's not their style. But I look at the Walmart prices and the Costco prices, and I really am impressed that that's who's really keeping food inflation in check. These Walmart, this is obviously just representative of the things that Walmart's doing. The prices there are really like Eddie, crazy. Yeah, they're insane. I mean, you can't believe aisle after aisle the bargains in Walmart. And Walmart, by the way, is so exciting because they have. The fashion aisle is incredible. And my daughter went to Parsons. She's not a joker, but she's just all her friends shop in the fashion aisle of Walmart.
That's a big move on a huge cap.
Deserving.
By the way, it makes it odd. The Page One journal piece today on how the regime at Walmart is on shaky ground because in order to keep 4% sales growth, you need another $25 billion in sales every year.
I thought that piece was the kind of thing that. I just thought missed the mark because when you get these really incredible companies, they find ways to do these things, and that reminds me of all the articles about how Tim Cook can never outdo the phone. I mean, Walmart can do so many things. E-commerce up 21%. Maybe they get e-commerce to 35%.
E-com is now 22% of total sales. In 2019, it was 9%.
How impressive is that? I mean, they're doing great things. Now, Costco hasn't done as much, so they could come to the stores. But this is in an era when Amazon is ascendant. So I know there's share take, and I think that Walmart's always reluctant to say, listen, we're destroying small business, but there are still some chains. I understand, by the way, why Rodney McMullen from Kroger feels that he's right and the FTC's wrong, that they need to combine with Albertsons, because what a juggernaut Walmart is. But at the same time, Walmart wants prices to be low, and people who shop at Walmart realize that they are indeed getting the bargains that Sam Walton used to talk about.
Meantime, advertising up 24%.
That's found money.
Inventory in the U.S. down 4%.
How about the fact that they closed those mini clinics when they realized they couldn't make any money? Some people were critical of that, saying, well, that's an example of they can't grow. How about they just had the guts to admit they made a mistake? How many managers in this country
were impressed by that.
Oh, my. And when I went over with them, they said, look, staffing's a problem. Why would we want to do that? It turns out to be not as synergistic. And then I started worrying about Karen Lynch and CVS, because if staffing's a problem for Walmart, what's it like for CVS? Especially when Amazon is gunning for the front part of the store and now wants the back part of the store with automatic drugs that are cheaper than CVS. Very challenged.
Let's touch on Cisco, Jim. The year-on-year revenue number is awfully weak, down 13, worst in years. But talk about stabilization of demand. We got Splunk now rolling into results.
Right. Now, that was a quarter that I have. I mean, you can go to Ben Wright, just by the way, it's the kind of coded, which is, listen, don't get too excited. I went over it, and I thought that Chuck Robbins, CEO, did a very good job explaining about how we're done through the D-stock, we've got new orders. Gary Steele's going to stay, which I think is really important, because I was so afraid he'd leave. He was the CEO of Splunk, and he's just a miracle worker. But I have to tell you that in the end, I was surprised to see the orders could be up so big, given about what just that things were not so great just 6 months ago. So I want to see how this works. I don't think that this is I don't think this is like the bell went off and it's good. I want to see how well they integrate with Splunk. And one of the reasons why the stock was up 3 and then lost $2 is I think a lot of people feel like I do, which is like, it's good, but it's still showing. a lot of software, which we like, a lot of long-term contract, which we like, but a lot of Splunk's a big zero. Who anticipated my mind there? Splunk's a big zero.
Meantime, meme stocks we continue to watch.
What is that?
Steam ahead of the open, a day after both GameStop and AMC dropped around 20%. We've been getting these halts, Jim, for volatility now on the downside.
I felt bad. The people at 4 o'clock, they were selling it down to 33, and I said, they didn't get the collapsible chair memo. Remember the other day it started with the Hello Kitty with the chairs, and I find that what's happened is that they just didn't have the short positions. And then Adam Aaron came in and used them to be able to pay down debt because Adam's hysterical. You know, he said, he's a legendary cinema funny man.
So you think there was a plan in a drawer for a return of this moment, and as soon as it came, they're like, let's go?
Well, yeah, Adam definitely. I think that that Ryan Cohen is a great mystery man. He's inscrutable, Ryan. We don't really know what he's up to. We know he made a lot of money in Bed Bath & Beyond. I always salute a guy who made a lot of money, even as I think that I would not necessarily have approached it that way.
It sounds, though, like you think this whole phenomenon may be short-lived this time because of the short.
I think, look, it would help if the company were doing well. The company's not losing the money that it was, but we have a cycle, and you'll hear it from Take-Two later. You know, this is not a great business because everyone did it online, and they picked a company. There's so many companies they could have picked that they could have run and gunned, and this one just isn't as good as when they first ran it and gunned it. You can go back, by the way, if you look at this Kitty guy, he's still got the rationale for why he first gunned it, and there it was pretty compelling, but that was then and this is now.
And yet your criticism of regulators, the 24/7 casino.
Well, they don't care, the regulators. I think they view everything as caveat emptor. I think that they kind of really blew the Bitcoin thing when they had a chance. They could have gone after the coins that were less legit and become a world leader the way Tim Massett, who ran the CFTC, recommended. And they kind of split the CFTC and the SEC. And it's not really clear where the SEC, or they let the SPAC phenomena go. I know that their heart's in the right place. I know that they have a lot of good thoughts, but I thought that Jay Clayton on Squawk was unbelievable. He says, look, there's no place for this. But I think that the SEC maybe feel like the 34 Act says nothing about memeing, so therefore meme away.
Well, do you think, I mean, you've often said the FTC is heavy-handed. Do you think the SEC is too light-handed?
I think the SEC is too caveat emptor. I do think I have felt that there's something. Chubb has an auto insurance business, and Geico is an auto insurance business.
You mentioned this morning on.
I wonder whether, if the FTC wanted to kind of just show, listen, we have guts, maybe they look into that.
We're going to talk about Chubb and a lot of the 13Fs as we finally got that mystery unveiled. When we come back, Dow is holding its investor day here at the NYSE, and Jim Fitterling is going to join us at Post 9, break down the company's growth outlook. Futures awfully close to the flat line today. A lot of retail to get to, including Under Armour, Goose, Dillard's. We'll look back at Disney and Netflix yesterday, talk some deer in a minute.
Send that thingy up. Okay. Good morning. SPY's about to hit the first support. Good morning, retail traders. Good morning, Magnificent.
Here's in America.
Welcome back to Squawk on the Street. Rick Santelli here with live breaking news from CMEHQ. Our April read on industrial production expected up 0.1%, near expectations, unchanged. Goose egg, unchanged. And last month we lost some ground from up 0.4 to only up 1.
I don't believe your numbers.
If you look at the capacity utilization numbers, exactly as expected, 78.4. And in the rearview mirror, that was also 78.4, but that just got revised to 78.5, so it moves up by 1/10. Production levels, utilization rates now are the best since the end of last year. We do see that interest rates across the entire curve outside of 30-year bonds have turned higher. Prices have dropped, mainly due to a very large spike in import prices I brought out at 8:30 Eastern. Squawk on the Street will return after a short break.
Okie dokie. I forgot what 529.42 is. I'll have to look. Okay. Used to drive me crazy.
Cafe.
Let's get Kramer's Mad Dash as we count down to the opening bell.
One of the most enjoyable people in all of business is Kevin Pine. So every time he puts out a
Discord
number,
to pump
I'm
Peggy.
always hopeful that this is the number that breaks out of a very negative spiral. No, his projection here is now for 50 to 70 million in income. People are looking for 352. So this is a giant miss. I hard to find bright spots. And what the international revenue a little bit stronger. North America down 10%.
Under Armour down bad.
This is this changing the guard.
UAA.
Nike not doing that well. Under Armour not doing that well. Hoka doing incredibly well for Deckers. Really, really well.
So the only thing doing well is
doing
tech.
amazingly well. So it's almost as if there's the. By the way, New Balance is private, but they're doing very well. That this brand still needs one more makeover. I don't know what to suggest, but I know that Under Armour is an incredibly popular brand, but they're just not making a lot of money.
They did announce a new restructuring,
Yes, another
$500 million buyback.
Yes, and I thought that was positive, but obviously people think that the buyback is a prop-up. And I think what's a shame is
They all are
when you
prop-ups.
go overseas, the brand resonates, and a lot of people see people that teams wear it, high school kids wear it, but they have not found a way to make a good deal of money. And I know that Kevin has tried a couple of things now, and nothing's worked. But that doesn't mean you can count them out. It's just that I do need to see a couple of quarters before I believe that any sort of
Both the drivers of dollar moves and then that has on things like the trade relationship, as well as the high percentage of sales in an index like the S&P that come from foreign sources.
Okay. Do you think that investors should be celebrating the recent data as the stock market breaking out here, Lizanne, the softening of the data, but also some of these kind of core inflation components that are not really going down? I mean, decelerating to the upside still is the way we should describe these things, right?
No question about it. That's definitionally what disinflation is. But you're right. I think one of the reasons why things like consumer sentiment have been dented is because the real consumer, the average person out there, Main Street, thinks of inflation in level terms, not the minutia of month-over-month changes in core services ex housing type metrics. That's what us, the market watchers and Fed watchers and wonks look at. It's also, I think, the reason why there seems to be this disconnect with milder inflation, meaning disinflation, and the way the society thinks about it is if you break inflation metrics, CPI as a for instance, into the non-discretionary versus discretionary components, those non-discretionary components, things like auto insurance, which continue to skyrocket, the needs, what we spend on, that we have to spend on, that type of inflation, it's more in the 6% plus range year over year versus the discretionary categories are closer to flat. And I think that's one of the reasons why, even though we're still in this mode of disinflation, the sentiment around inflation by the public is quite a bit different than what you would pick up just looking at charts.
And for the stock market, Lizanne, did earnings just show enough power through these sticky inflation metrics, or is it still pinching companies? And does that mean we'll have a concentrated stock market still like we did in the kind of first couple months of the year?
Yeah, I do think there's going to be some concentration, more of a quality concentration, and specific to earnings, protection of profit margins. What we did see throughout earnings season is, even though at the bottom line level, meaning earnings, we saw a better than average beat rate, a better than average percent by which companies beat, decent support for profit margins. The top line, similar numbers, the beat rate, the percent by which companies beat, were actually pretty comfortably below average. So you are seeing that shift down in inflation bring down that top line growth, really exposing who actually has pricing power and where the ability to raise prices was just in line with inflation. So I think we're certainly seeing that get weeded out in earnings season. It's reflected in how stocks have performed. Even double beats, meaning you beat on top line and bottom line, the reward accrued to those stocks in the immediate aftermath of earnings has not been as significant as the punishment accrued to companies that either miss bottom line or have a double miss of bottom line and top line. So I think there's a lot of bifurcation going on. It's happening in the economy with discretionary versus non-discretionary, with high-income consumers to low end, with larger companies versus smaller companies. And that's manifesting itself still within the market. Profitability, high interest coverage, exposure to moves up and down in interest rates. Those have been the stocks that have performed better.
And we've talked many times before about how the kind of shorthand way to think about this has been the small cap universe, just on an index level, broad index level. The Russell's limitations kind of seems like then you would believe, Lizanne, we might still be kind of limited in the participation for those lower quality groups. Fair to say?
Yeah, notwithstanding the pops that we've seen in some of the meme stocks, which, that's just not even worth having a conversation about. I think you do still want to stay up in quality down the cap spectrum and avoid the zombie type companies and non-profitable companies. And Oliver, that's what you.
Oh, come on, girl.
Before. I think not as a
just because you can't look at charts, she's bashing Chartist.
But just as an FYI.
She's bashing Chartist and she's bashing retail traders. Stay away from the meme stocks. Honey, do you know how much I've made on the memes in the last week? Donald J. Trump. That's a meme, honey. Oh, yeah. One heck of a run yesterday. 2 days in a row. Five-day chart. I mean, look, it's just straight. Do 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 do. Okay, we got 2 minutes. Stay away from the memes. Good morning, Michelle. Good morning, Mike. Good morning, Subway. Good morning, Franchise. Where's my Yoko at? Google on watch says Sue.
Customized to align with your goals. All at your fingertips. Schwab investing fees. 40 customizable fees, up to 25 stocks in just a few clicks.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere.
that. Man, look at that thing pop. MNGI. I mean, these penny stocks are just. There's Goose, Goos. Canadian Goose is cheap. I was buying it at 32. Wow. Huh. I haven't looked at this one in a while. We got one up 80% here. Peggy. 156 million in volume. That's just killer. And Walmart. SPRW. PWR. Mimi. Buying. Boeing. Boeing's up. $96 million shares outstanding, getting enough float rotation. Yep. It's being pumped right now. I'm watching the video here. It's kind of hard to. 939. I had Google on here. Where's Google? Got a hammer on Apple with a double top. And the video is still bearish. SMCI down 16 bucks. This had one heck of a run yesterday. I mean, I was really dumb yesterday. I was shocked. Shop has a double bottom. AMD's up $1.678. It broke out of my flag. Yeah, I already did my share on Peggy. Right now we hold the 9. Kind of like to catch it. I should have caught it right there and sold it. Watch that tape. There's Yoko. Walmart had a pretty good pop this morning. On pullback, you're thinking SPY, huh? I've got a megaphone started. Not really, if you count the wicks, but it's holding above VWAP. I need to learn how to use that fan brush. Andrew's Pitchfork Fibonacci fans. We didn't break the 200. We did break it a little bit, the 200. We're kind of squeezing here. I think I don't know. I'm afraid to say it. I want to pull back again, but I got to have a different personality now after yesterday. I got spanking. This is, I think all traders go through this. Everybody's going to have a real bad day, and I'm real good at writing it off, smacking it off. I mean, I ended up green, but I had to fight for it. And it really was an easy day to be green. Meta down $4. See, all that greediness pulled right back to my support level, and I wasn't watching it. I mean, right to the penny. Now this is bullish. Got a symmetrical flag, pennant flag, with 3 white soldiers. I heard they took coffee out of the CPI number because they're so high, the coffee bean. So they're fudging. They're manipulating the numbers. If they'd added that coffee in there, the CPI would have been worse. And they have major concerns still about housing. There you go, hood popped. Good morning, Bull Hog, Boss Hog. Good morning, Mannequin, Parge, Josh, and everybody that's on YouTube. We got hood popping here. But I got to keep an eye on Peggy because it got me a little bit of that going. SLNA. Oh, there's your knife on SLNA. Let me see here. Disney's moving up a little bit, got 29 cents. Nah, I still want to wait for that support level. Oh, we got 3 white soldiers out of the gate, but they're 2 bearish candles. The QQQ meeting the 200 SMA right now. Lily down $8. Lily's getting close. We got an inverse head and shoulders, the right shoulder right now on Lily. Right to it just now. Watch Lily and see what happens here. Tesla's down 83 cents. AMC's under 5 now. Kramer said he would blank a horse's penis on live TV if it got to 1,000 GME. I think horses have penises. Walmart still up there. Do a Fibon. Whoa. Somebody got their mic on. Yo. Breaker 19. Yeah. What the hell? Breaker. Carvo. There you go. KIRVO. Gotcha. I hope you can still hear me. Anybody seen something real nice, let me know. I liked how Hood looked, but it might have already had its fun. It's 40 cents. A double top. We broke, well, no. There's resistance right there. So we got to get above that. And support. Support would be 1842 off the 21. So I'm going to set an alert right there. I think it'll drop below the 9. Things moving slow today. I don't like that. I sure don't like that. I'm going to put a Fibonacci extension on Walmart. Get used to going up here again. At a point, well, so 50%, 62 bucks. I'm going to set an alert right above that. Walmart. Florence, you got anything you're up good on? No, you're not on voice. After yesterday's run, it was a good day for profit, that's for sure. I got to get a different watch list. This is getting boring. Okay, we got A, Walmart, Baba. Baba's up $1.78. We got TDD. Well, this is a nice run. House ad desk, imagine unstoppable bull market. Yep, I've never seen anything like this, so it's kind of new to me. In the 20 years that I've traded, I've not seen nothing like this. ARM at 115. Marvel, that's a good one to watch. It's moving up. Okay, SPY's at the VWAP. SPX, I'm going to set support level of the triple top at 55.0540. I'm not going to, I learned a valuable lesson yesterday. I want to be humble about it. Why didn't you? Because yesterday could have been probably one of my biggest days of the year. But it was Wednesday. Fed. How about the cannabis? Where's the 10%, the 2%? Bitcoins are up. The ETFs. Mira. We called the bottom on Mira. I got in that one. It got out. I bet you it's up today. Yesterday, Mira was just a beautiful trade. Snake breakout, pulled back, double bottom, boom. And now we got a flag. We got a bear flag. It's a descending triangle. Well, it's descending, and it's also ascending triangle. Symmetrical. Symmetrical. So let's get ready to squeeze in a moment. Now, if you knife down to a double bottom, I'll set an alert there. Get back to Peggy. Hey, Peggy Sue. If I do good on Peggy today, I'll play Peggy Sue with my guitar. I'm up on it right now. I just want to see if I can get more. I got 1178 for solid support if we get back down here. So I'm going to set right above 12 because it might stop a little higher. How many people constantly put support alerts in your AMC says it's ready. We got bull flag. Spy. Okay, we're looking for the spy off. Where's the whoa. Get your shit together here. Okay, I got my alert set for Peggy. See, that looks like pretty big. Yeah, we just broke out of it. Maybe. I'm going to say we have to build support above resistance. And we did kind of breach, but we held the 51 EMA on SPY, and we held the 63 on that last dip. So let's see what kind of candle. We got the 200 up on top. The 9 crossed over this morning. Nice little snake breakout, pulled back into a symmetrical flag. There it goes. Where's my... I don't have my platforms up? What the heck? I don't have my trade plan for my options. That's not smart. I don't have... There's one. I thought I had 2 of them. Man, I got a story I got to tell. I want to see if anybody wants to donate money to a homeless guy. Put him up in a hotel for a week. And get him out of my back of my building. So we didn't break. See how we held the body? See, you understand what I mean by we broke the wick, but it's the body that counts to me. And we didn't build a body above that trend line. Put him in a hotel and get him a haircut. I told him, I said, man, I don't feel sorry for you, but I'll try to help you. We got IWM at support. We got I'm going to call it a staggering snake. It's a new word I made up. On what? What was I looking at? Fuck, I can't remember what I was looking at. Man, I missed my entry on. One, 2, and 3 support level. We're going to look at the opening price and raise your low support above that a little bit, your alert. on the SPY at the opening of the candle for now. If we break the 52, I'm going to get a put. I mean the 50. Because we bounced here off of it, we bounced here off of it, and we bounced here off of it. We're bearish now because we're outside of the trend line. Unless we put one right here, then we're still game. We're still game if I keep it there. But I don't trust that. I want to trust this opening price to the next candle. There's a hammer. And what am I going to look at? NVIDIA. I think they're digesting the fake report from the CPI. We're at the 200 on NVIDIA right now. Used to call me baby. Now you don't call me at all. What do you got? Come on. Amazon. Expansion on Amazon. We're going to see a lot of expansion patterns. We're off the 61, it's the 63 right now. You know, I see a symmetrical flag on the minute. And we broke out of its squeeze. So this is your resistance. I'm thinking it's going to come down. Let me look at a bigger time frame. We got a head and shoulders right here. I'm going to put an alert for Amazon at 184.37. Well, two of them. I'm going to put two of them on here. The 200 on the 5 minute. Now, I'm just now started trading a 5 minute here just recently, so I got to adjust to my. So as we have resistance, support. I'm liking the 200 on the 5 minute. That'll keep it bullish. 185.75. Then you got this trend line right here. There's your 1, 2, 3. There's your flag. See, I changed that around. Looking at the 5 minute. Oh, there's the knife on the SPY. Baby, give it to me. I want to see this right down here. Here, I got to change that time frame. What time frame we got it in? 1 minute. God. We just now hit the first support. Where's my chart? YouTubers, watch the SPY right here. we got my first support channel between 528.60 and 529.42. Now I didn't put a Fibby on this. This is so huge of a run. I mean, that's why I was just tripping out yesterday. I just didn't catch it, you know. So it probably get maybe one of them days every 3 months. You got to watch the tape, see how the market's reacting. May 17. So I'm just looking at a straddle right now. Yeah, I missed that one. So this is number 4. If it doesn't break out here, and give it a shot. Putsville. The three aggressive candles right here. Amazon's still in that flag. And then on the 5 minute, I'm going to change this resistance line. On the 5 minute, you get more than the 1 minute. Broke out. What's going on here? What is it? It's SPY. See 3 big candles right there? IWM broke out of the snake, or getting ready to. The IWM double bottom. Now, I've never traded the IWM on the same day. So I'm going to go out a day. got a small order. I'm trying to get more on SLNA here for scalp day trade. Spies at resistance again. Come on, get. Daggum it. Don't move on me yet. You suck. It only took 500 shares. SPX. Oh, that's a SPY. Yeah, the SPX is up. NVIDIA bounced a little bit off the double bottom and just hit the VWAP. NVIDIA. We got to break to 21 on SLNA. Change that around here. SLNA hit the VWAP. That's what happened. Baba's looking good. Baba's at resistance. Head and Shoulders at 84.98 on Baba. Spy boom, double top on a wick. Baba broke resistance. Walmart. Dow is close to 40,000. Woo! Lily's about to hit my support. I think it did trigger it. Boeing, God. Walmart posts upbeat earnings. Boeing shares are trading higher. The stock may be a possible reaction to reports United Airlines can add new plans and routes after the FAA eased an operational freeze. Boeing accused of violating Justice Department's criminal prosecution agreement. Doesn't matter. News don't matter to nobody anymore. Google straight up. We just now hit another resistance.
So right around 61.50 could be supportive if we were to break through our purple 252-day
Well,
EMA.
Oxy ain't
To the
looked at it in a
upside,
while.
we've got our moving averages. Then we had this small gap downward, and then the subsequent high point comes in just below 66. So that's another noteworthy area for price to clear.
Seems like kind of a tough trade to the upside, a kind of riskier trade to the upside if you are feeling positive. It seems like maybe selling downside below the potential support here at that 61.5-ish would kind of be the approach that I would think about, you know, if you do want to be bullish on Oxy. That's kind of what stands out to me on the chart, because it certainly is softened up a bit, and to try and buy it, you'd be going against the momentum right now, but maybe selling below the support level is a way to do it, then to express a positive view. But of course,
XOM's
analysts
moving up though.
kind of losing some of their positivity. We got two tech names here. Intel, which is actually up this morning. Palo Alto as well. So let's go with Intel first, Jenny, as we're looking at chips and semiconductors ahead of Applied Materials tonight.
Okay, yeah, and I think this is the most interesting note. So Wolf Research ended their bearish call, and they upgraded Intel to peer perform from underperform. Wow. Didn't give a price target, but they highlighted the fact that this has been, I mean, it's no secret, a staggered laggard this year. I mean, it's down about 37% since 2024 began. It's trailed the overall stocks index by
It almost hit my support level
points,
too.
So they go on to say their cautious thesis has played out. They see limited margin improvement in calendar 2024 and 2025, despite achieving 5 nodes in their
9
cents
cents
manufacturing strategy. This analyst have been very concerned over these server central processing units that weren't perhaps robust enough to help Intel manage its cost of its overall CapEx and depreciation relative to that same target of delivering 5 nodes, in 4 years. But they think this is critical to helping now it achieve its U.S. leadership in processing technologies. But cost realities, they said, have now been validated by the recent disclosure. Intel does not expect its manufacturing segment to achieve break even until calendar 2025. So they do still see there's the potential to drive now margins for the remainder of this calendar year, and just say that now a lot of this bearish case is played out. It's not exactly them calling for a bottom, though, because they do still mention how the foundry business is, like, you know, hemorrhaging money. It wasn't a super optimistic note, but at least they're willing to say, hey, maybe the case for shares continuing to drop has played out. I was amazed to see that there's only 8 buys of Intel. There's 33 holds, 4 underperforms, and 1 sell. So everyone has taken on a very neutral stance, it seems.
Yeah, only 5 sells after being such a dog in the group and laggard. That I don't know, it's kind of impressive, actually.
Well, I hope it's I think the hope is it's the bottom, right?
Right, yeah, all right. So definitely a less bearish interpretation from this analyst. I mean, the stock just seems like it's been in free fall, though. But last couple days here, Rick, you know, this is like what we got, you know? This is so much bigger, all this down here.
Yeah, definitely doesn't feel like a stock that's part of this whole AI chip, thing here going on lately. And we're down about 38% from these highs. So you can see we had a much more shallow trend line sloping downward here. Earnings didn't do the bulls any favors here. We had a couple big gaps down here, our last couple of earnings, but even before earnings, trending down quite steeply there. And you can see we formed kind of a W shape here in the recent price action, making new lower lows, but not very significant lower lows. At the same time, too, you can see we had kind of a matching W shape in the RSI. But the difference is we saw a little bit of bullish divergence here. Price made new closing lows. RSI was actually trending upward here. So maybe that's a sign that things could be improving a little bit. We're out of the oversold area. We do have to overcome some resistance right here, though. This is our high point after our earnings gap down. Matches up roughly with our yellow 21-day EMA, right around 32.30 or so. That could be a key area. And then from there, if we filled this gap, we've also got our volume profile point of control right around 34.50. The downside, obviously, those yearly lows, our green dashed line there, 26.86.
Boy, Intel chart.
Do a little about break resistance.
Hopeless, but it's about as hopeless as one I can think of. You know?
It's not even any earnings or anything to look forward to change things up. We just had them and they weren't good.
Yeah, exactly. It looks like resistance ahead. Technically, not a lot of support, and the only one really on the 1-year chart still significantly lower. 4.5, almost $5 lower. So the only thing we could really say that's positive is that it's no longer oversold But boy, just a tough one. I can kind of see why the analyst would rather say, that perhaps the bearish trade has played out than a bullish one is back on. So it doesn't look like anything bullish on the chart. All right, let's talk Palo Alto here, Jenny.
So there's earnings on Monday.
Yeah, coming up.
Not just NVIDIA reports next week, we also get Palo Alto Networks. But analysts are so far, I've seen this week, continuing to slightly move their price targets higher. Like we saw KeyBank raise its price target to 384 from 355. I mean, that's substantial, but they're just one of several that are sort of inching up now, sort of highlighting the fact that while we have had mixed investor sentiment around this name, the overall consensus for third quarter now appears just relatively more conservative. They've seen a lot of large deal activity in the quarter, and seemingly that's been strong, as well as their pipeline. And this analyst at KeyBank did highlight these few instances of platformization deals, as well as Palo being aggressive on now the discounting. JP Morgan also did raise its price target to 340 from 330, saying that they're facing this low bar as far as its billing performance, which is disappointed in the last 3 quarters. They said that overall channel conversations have greatly implied a pretty healthy performance actually from Palo Alto Networks. So this is, I think, one of the more interesting charts because you can see exactly what these analysts are talking about. We broke well below highs for the year after its last earnings. We dropped 26% on the session, erased all of the year-to-date gains just for one day, and since then it's been like this slow churn to the upside, or trying to find like this new range basically. So what does that mean for earnings? Hey, I mean, the bar has definitely been set lower as far as maybe expectations, but also just like the price.
Yeah, it's a fun one because there's like always bullish optimism in like the Palo Alto community. People really love this stock.
Well, remember they reported on Friday afternoon and shares sold off into what was a great report, just because of the timing of the report.
Yeah.
This is an interesting one.
PANW. For sure. So the chart kind of firming back up here after that big drop, Rick, but we haven't fully closed the gap.
Yeah, Jenny gave us a great summary of the chart here. We had our big gap downward here. From then, we carved out a low point near 260 and a high point right here near 327. So we've got a bit of a range to be watching here between our green and red lines. However, we also do still have a series of higher lows. So the price has been trending upward here. We've got this steeper white trend line. We're above our moving averages. The faster moving average is crossing above the slower moving average. RSI trending upward, matching price above the 50 midline. Really not looking too bad here. So the next step for the bulls, break out of this range, break above that high point near 327, then fill that gap near 360 or so. To the downside, moving average confluence right near 297 could be supportive, then our purple trend line, and then ultimately our low point that I mentioned before.
All right. So this is a really fun and unique chart because of the massive earnings gap. But it seems pretty good. I mean, it seems like there's a lot of support for it over the last month that has built up that fits into the long term, too.
Nice recovery since we had our gap down here. We're making our way back upward here. Momentum looks good. It's just earnings can be a wild card sometimes. Just keep an eye on those gap levels. Gaps are always important to be mindful of.
All right.
I don't see that
maybe
grade.
We rally. We don't have to close the entire gap in a single session. That would ask a lot, but maybe we can kind of get back to the bottom of that gap, which would be around $328 for Palo Alto. I think that's kind of a goal for bulls, is to get, one big step closer to that. Because once you're there, I mean, there's basically no volume through here because we fell, so sharply that if we could get back to the bottom of that gap, maybe first step towards getting back to highs.
Things can move fast in those areas. Tiny little volume nodes here and here to take note of, but those could be speed bumps if we get a strong move to the upside here. But still, worth being aware of. Near 340, near 365 or so.
Okay, all right, nice. So some good levels to look for Palo Alto if it's going to have a recovery quarter. Thanks, Jenny. Thanks, Rick. When we come back, developing story in the insurance world again, but this time for your pets, for your little guy. Trupanion up double digits this morning.
$32 strike on Intel for June 21st.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
AMAT puts. What was that other one, Brandy? H hat, P hat. AMAT.
Category Trupanion pet insurance up double digits, Renita. So what's going on?
Well, this pet insurance company just got an upgrade from Bank of America to a buy from a neutral, and the company has a price target raise of about $49 from $35 a share. Now, Bank of America describes it like this. They say that there's a period of under-earning that this company has been going through that's going to transition into a period of over-earning, right? And this is likely to happen over the next 18 months. And they describe insurance as really a cyclical industry. You know, the analyst writes, when inflation accelerates more than anticipated, underwriting margins tend to deteriorate, and then insurers need to raise the price of risk.
Walmart posts upbeat earnings, both at securities.
Insurers tend to overshoot the pricing mark with those reactionary price increases as they try to attempt to combat periods of under-earning. And now he's saying that that shift will tide. But this company has also been filing for higher rates with regulators lately, and the company or the analyst believes that it has about a 27% rate flowing through its book right now, and really does see something more positive on the horizon. We do know that shares have been rising over the past 12 months by more than 55%, and it is seen as rising just a little bit higher, Oliver.
Well, gotta take care of your pets.
Yeah. Do you have pet insurance on Donald?
Well, I've got Trupanion, so it is.
So is it?
It ain't cheap.
Is it right? So that's the thing.
At all.
People say, I saw a few reviews on Trupanion. They say it's not cheap, but it's comprehensive. It does pay out veterinarians directly.
I'm pretty sure that the one procedure that Don made it through already made my insurance worth it for like, I don't know, the next 5 years.
Yeah.
They did fully cover
Good.
When he needed it. But they also just jacked up my prices too, so I might have to go revisit that. Yeah. No, it's expensive stuff, but so is the vet. So I guess post-COVID, everybody's sticking with the insurance. Pretty good trade. It seems like basically that was the way to trade the COVID pet adoption boom was to get insurance.
Saw an all-time high in 2022.
Yeah. All right. Nice. Okay, so it's back up there now. Trupanion. Appreciate it. All right. Thanks for the heads up. Winner in today's session. Got a couple insurance winners. Chubb and Trupanion. Coming back, Diane King Hall alongside Michael McCurr this morning for a little meetup discussion. Mike, Director of Schwab Advisor Services. Mr. McCurr, tell me the charts. What are you seeing? What are you hearing? And fresh breakout, what's it mean?
Yeah, so depending on which one we're going to look at, I think they all kind of lead back to what's going on with interest rates, which are really being driven with what's going on in the economic activity space. So recently, economic activity has been, arguably on the weaker side.
Market pulling back AMD new highs.
You had that growth scare. But recently, weaker retail sales, not as bad inflation data continues to put pressure on the 10-year yield. It's actually approaching a pretty critical support level, right around that 4.25%, which is the 100-day moving average. I think that could be sort of a line in the sand or a technical inflection point. So I'm not sure if, the converse aspect within the U.S. equity markets, if they can keep that momentum going. But lately, the U.S. equity markets have broken out. They've had a surge in breadth, not to the level that we saw in November when we had those breadth thrusts. But the S&P at a fresh high. Technically speaking, the equal weight S&P 500 has not yet made a new all-time high on this move.
SMCI is getting ready to squeeze
On the SPX, the
any
S&P
second.
500.
It's going to do something here. Sisson had a real good run yesterday, real big run yesterday, and so did Mr. Mr. ran from they said $400. $400 on Mr. And we do the fibbies on this one. SPY made new highs. 231.19 now. Double bottom at open. Mike, did you get in that SPY? Oh, he's not on.
This is gonna sound so basic, but like, yes, and jinx things, like, exactly.
Why live in the, we got fresh new highs here. I knew that. Who prints those hats, by the way? Did you?
I gotta ask the guys, because I saw one of the guys on the floor, he had a bunch of them. I said, can I have one? He was like, yeah, brought it over, so.
Love it.
Yes, I gotta ask them where they get them.
Big round number, 40K, Mike, so I guess, as long as we can find that delicate balance, we can hold up here, it seems like.
I would say so for the time being. I think the biggest risk to the market now is not that the Fed all of a sudden starts talking hawkishly again. I think the data shows that Q1 data was kind of an anomaly. We've got a lot of Fed speakers coming up. I think that's going to be predictive of where rates move into the next week and a half.
All right. Yeah, Q1 data good. What we've seen the last couple of weeks, not so good. Delicate balance indeed. All right. Thank you, Mike McCurr. Thank you, Diane King Hall. All right. Shoot me a hat. I want one too. Trading 360 with Nicole Petalides is coming up next. Thanks for tuning in to Morning Trade Live.
Keep buying it. The Intel calls are up. No, they're not.
Get each and
They're even.
every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you.
Cost
ready to
new
go
high.
At 12 p.m. Eastern on the Schwab Network.
$16 extra
I'm Nicole
trillion
Petalides,
printed
live
in
from
these
New
here
York Stock Exchange. Catch me on Schwab Network, available
4 years.
anytime, anywhere, any device.
See how much difference
Schwab
printing
Network.
money can do for you?
Schwab Bank Investor Checking, the checking account
Schwab.
for investors, named highest in client satisfaction by J.D. Power for 5 years in a row.
Well, I think I'm gonna go get my second win, make me a sandwich. Selena broke the VWAP. SPX, boom, baby. Intel's up a couple bucks. The 32 strike. I'm going to hold on to this one. I'll go ahead and I like that upgrade at that price level. That's the SMA. I'll type it in there. I like the EMA though. I want to check the EMA out. See, the SMA is closer. So I can readjust that resistance level. Yeah. Yeah. Yeah, I like the SMA better. Damn it, Jimmy. I didn't think it would go in there. SPY dropping to the 63. And that's got to hold. If that doesn't hold, then we're going to be taking more. Oh, here we come. I'm going to get another. I got Intel. I'm at 120 now. Oh, come on. You hit that 529 support level on the money, brother. So watch the VWAP here on the SPY. Damn it. I gotta get me another platform up here. We got charts everywhere. Come on now. VWAP on the SPY. SLNA is now at 1274. Called it out at 10 cents. SLNA. SLNA. We just hit Fibonacci. Trying to form. Now this is a shoulder line, okay? This is a shoulder line. So what we got to do, we've got to break resistance right here. This is resistance. Yeah, this is resistance line. I'm going to type in R line. If that breaks, we'll go higher. What are you doing, Jim? I think it needs to come down more, but could have an expansion pattern here. Yeah. Wait a minute, don't take the trade yet. We could come down to this 350 area and be a strong buy if it does not hold the VWAP. I'm going to put idea down here. That's a double bottom off the VWAP now. It's pretty strong. That damn Intel's back down now. What am I doing? SPY. Got 70K to 531. 10 contracts. Says it's ready. Dadgummit. SLNA. I sold. Oh boy. Break it. It needs to. All right. Oh, that's a spy. Go, baby. We're at 127. I'm 133. Now this is exit idea. But if we break it, we can hit up here. This is important that we break this right here. Where the hell's the bar at? There it is. $135, 37. Oh, shit. 146. I can't believe the SPY's up this much from, I mean, like $26 contract right now. I mean, this is a good spot to be taking profit. Cannabis stocks are flat. There's some big tickets coming in on SLNA, Selena Hospitality. I need this to turn around. Yeah, I'll be right back. Let me my trade. 142 on the SPY. Oh, you got puts when I got calls? That's okay. It's probably a good idea. After the way I traded yesterday. We'll be right back.
All right. 150.
Dow Jones broke 40,000. Magnificent. Boo doo doo. I might have to liven it up here. What time is it? 10:41. SPX will have a triple bottom. Boom boom cha-choo. And if that doesn't hold, then we go down here for the knife. Pop-chee. Bo-bo. Sing it to me. That's a 1, 2, 3, 4, 5. But I'm gonna
cut the cord on the way you get market news. It's Market on Close.
cut the cord.
Oliver Rennick for the biggest earnings
Oliver.
Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere.
I know a guy that kind of acts like Oliver at the IRS building.
Schwab Network.
So supports 531739. Boom,
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you're with us. It's time for developing stories.
Nicole, I'm gonna guess what you're wearing today. You're wearing black.
Here on Schwab Network.
Let me see if I'm right.
Which is down about 3% after the quarterly report. What stood out to you, Diane? Nice to see you.
It's really all about its forecast, and it's good to be with you.
Oh, it's just the opposite.
Deere did better than expected in terms of its last quarter, in terms of EPS, adjusted EPS, and revenue, but its forecast is really concerning for Wall Street. So let's go through all these numbers. Adjusted EPS was $8.53 a share. Expectation was $7.86. Revenue came in at 15 and nearly a quarter billion. The expectation was for 13.26 billion. But here's
Good job.
They're predicting that sales will slide about double digits this year.
Do you like that averaging down?
Sales of large agriculture equipment.
What's that called, resistance? You average down, what's that called, resistance? Up. I don't want to put that number in there, but I'm going to say support line. Ugh. 200 SMA. I think I just got triggered. No. Dadgummit. Inverse head and shoulders. Oh, I missed it. Inverse head and shoulders. This looks like it could break out. Gosh. 1, 2, 3, 4. Come back down and hit the one more. and then take it, or what time? It's 10:45. It's not the best time of the day. I'm about ready to go do the treadmill real fast and walk a mile. Tail's moving back up. Okay, we're coming back down the second time of the head and shoulder. May 16, the 33.25 strike times 3. are just so high. AMC broke out of resistance. But still, it's just got a short turn to VWAP, and the 200's crossing down. It spies at support, but it's just a short squeeze to the upside. Nailed the double bottom today on the IWM. And called out the QQQ also. Double bottom on the QQQ this morning. Look at that. Snake breakout to the 200, pulled back higher low, boom! Now I'm waiting for the SPX. I've traded all, well, I didn't trade that or that, I wanted to. There goes SPX, 350, 360. So we got an inverse head and shoulders.
So we'll see how that kind of plays out over
Cisco.
a couple of years for
Cisco.
Cisco. I think overall, just like the other guest said, it's the compounding book value that this company has done over the years. The fundamentals are definitely there. 30% return on equity. They have very little debt on their balance sheet. They have the nice dividends. So there's definitely the fundamentals there. It seems like they can't always get out of their way, but we do like the stock moving forward. And I think the Splunk is very interesting to see how that kind of plays out. Again, you have to have an AI component. They have it. Hopefully that is a really big growth driver in the future.
So it's interesting because over at Morningstar, William, you did say we already forecast a recovery in fiscal 20.
Cisco Kid was a friend of mine. Cisco Kid was a friend of mine. Can anybody name that band? Name that band, I dare you. War. War. Getting ready for the SPX. Oh, really? I did not know that. I'm a very popular guy. And I bet you they're all baby boomers. Wow, I did not know that. Now I do. I'm going to share that on social media. Oh, here it is, the 200 SMA, guys. Bye. Let's go for it. In. Beautiful. Break it. Where's my price? Jimmy. Oh, God, come on, you idiot. 210. Cisco Kid was a friend of mine. Cisco Kid was a friend of Bobo's. It's got a big hammer on it. Now, are they going to digest this crap? Set a stop. 90%. What? Break it. No, I didn't want to do that. School kid was a friend of mine. Loo. No. We're at 260. Come on, break it. This is resistance here. Resistance. Yeah, the EMA. Come on, hurry up, you chicken. There we go. $265, baby, break it. So this was kind of interesting. On the 2 minute, we called it on the 1 minute. Okay. Now, I don't think I'd have been able to take this trade here on the 2 minute. I don't think I would have been able to, but on the 1 minute, which got me in the trade off the 200 SMA with that big hammer. I noticed that hammer. And the exit idea would have been that we broke the 21, and I was hoping for that 63. Then I went to the 2 minute, and on the 2 minute, both bodies hit the 63. And the wicks came close to the 21, so that was a good idea on the 2 minute time frame. Now we're double bottoming. So I got out at 65. AMD had a nice, now Meta, got to watch Meta here in a day or two. It already had I think it already had its good run. Amazon double bottom. And we got support on Apple. It can go down a little bit more. So I'm going to go do a little bit of walking. And I'll be back.
Auto 6 out. They're talking about 2025, which may be fiscal 26, but the stock sold off hard when they delayed that release of Grand Theft Auto. So this stock, even though it has 2K, that franchise, it has the Borderlands, which is going to come out with a movie that they're a little concerned about. There's a lot going on here, but this, make no mistake, this is a Grand Theft Auto story for this company. Diane King Hall, thanks so much for coming on, as always, sharing some time with us. Have a great day, Diane. Nathan, let's get back to this discussion and then have your trade for Take-Two Interactive. They've got, this seems like, with everything I read, the next 10 years depends on the strength, the popularity, and the release of Grand Theft Auto 6, I believe.
I know it seems like, that is kind of the primary driver for the investment thesis on a stock like this. And, Kevin, we talked about discretionary spend. And, my question is video gaming one of those segments where that, middle income consumer is basically beginning to cut there? Or also, I know we talked about kind of like streaming, exhaustion over the pandemic. Does that also apply to gaming? I'm not sure. I'm not a gamer, Kevin. So I can't be entirely sure. But technically, look, the stock is not great. It's in a downtrend. It's below its 200 SMA. If you look at the guidance from the likes of EA and Roblox, Kevin, look at Roblox, for example, that I was just pulling up from their most recent report. They had bookings grew 19% in Q1. That was the slowest pace in more than a year. Active daily users increased 17%, the lowest growth rate since going public in 2021. And the number of hours spent is at the slowest pace in more than a year.
Let's say you took Jesus' call here. And we pulled back and hit the 63. You wanted to get as much as you could out of it. You got a 1, 2, 3 exit idea. Triple top. Now we pulled back to the 200. Cost is up $12. And I haven't looked at NVIDIA. Surprised Josh wasn't pumping his Uber yesterday. I just don't like that guy. I used to like him. But he's got as bad as the others.
A lot of eggs in that basket. You came with a trade, Nathan. Tell us what you're looking at here. It looks like a back ratio.
Yeah, sure. Back ratio, also called a put front spread. So this is basically if you're bearish on take two, heading into the report. So what I was looking at, first let's take into consideration the implied move. It's about $10. Then I was going to this week's expiration. So basically tomorrow at the close, it expires. This is an earnings type of a bearish play, just an example trade. But what I was looking at is trying to put together some kind of a ratio that I can benefit if it goes down, and then I could also maybe scrape a couple dimes if it does happen to go up post earnings. So what I was looking at is a put front spread, or you can call it a back ratio, buying the 140 put and then selling 2 of the 136 puts for a net credit of 20 cents. Now,
Okay, we got a falling wedge on the SPY.
A bear put spread plus a cash secured put at the 136 strike. So you do have assignment risk below that 136. That is
There goes that walk.
for one
Damn it.
contract, $13,600 less the credit. But look, this is only for 36 hours that your capital is tied up. And at the end of the day, when you think about how you can use options to kind of position yourself either a bullish, bearish, or neutral fashion, here it's bearish, but keep in mind, if you were to put on a bear put spread, for example, and the stock pops, it goes up post earnings, they have some kind of pleasant surprise, or maybe the GTA release date is in line and that's better than expectations. You know how that can work. And you would lose 100% basically of that debit that you paid on the bear put spread. By establishing this ratio, yes, you do have risk to the downside. If this thing falls out of bed and goes to 110, yeah, you're gonna wish you didn't put on this strategy. But here, this allows you to, if we get a gap up to 155, that implied move 156, hey, I can still at least be wrong and collect 20 cents. So this is put front spread or back ratio, like you mentioned, Kevin.
Yeah. Here's what I think is a really advantage of this spread. If, let's say, you're looking to buy the dip and take 2, regardless, right? What this spread does, it lowers your entry point incredibly low. Right now, if you were to do this spread at, let's say it trades for a half,
92,000 contracts.
your entry point would be 131 and a half. So because you've got a $4 put vertical, and then an extra cash secured put. So where you would enter the stock is way lower than what you're looking at in terms of if you were to put in a limit order. But there is downside risk. Remember, any cash secured put has downside risk. That's why the margins are higher on this. But I refer to this, my nickname for this back ratio is a buy the dip spread. Because if you were going to buy it anyway, this one that gives you a little income, and what does really, Nathan, as you know, is lower your entry price.
Yeah, you're exactly right. I mean, you could just say, hey, I'm just going to go sell that 136 put, get my dollar credit, or I don't even know what the market's pricing it at right now, but you're exactly right, Kevin, with something like this, to be able to buy at 131.50, and then let me just take a look.
10 contracts.
I think around that 130-ish level, yeah. If you go back to the chart for those home gamers, take a look at the October low. That's when the S&P bottomed out last year.
Okay, we pulled back. It's a falling wedge. $531 strike. We're at 200 SMA. What time is it? It's 11:29, so it's an hour before the fat cats get back. Let's look at where you spy. Okay, it's bullish. It's bullish. So I think I'm going to take it down here at the bottom. Now we're below the VWAP. So I always say, man, 1, 2, 3, 4. 1, 2, 3, 4. I mean, we're in the sweet spot. It needs to break out here. We can get a higher low and not at bottom. If we get a higher low, that's where I'll get into the trade. Well, we're still good. We're still good. We're still good. Not yet. Okay, here it goes. 106. This is very important. It holds right here. Got it. Nope, didn't get it. I'm going to get 104. Okay, I'm at 104. Hammer. TV's blinking off all day. Come on, children. Make the fat cats mad before we get back. Make them mad. Now, you two, this is risky trade, so you gotta be on your toes. We're still early before the fat cats get back. I didn't even get to leave. Tight stop. Going to squeeze any minute. Break VWAP. Blanket. Come on now. I was up $80. Break the VWAP. Don't second guess it. Do it.
But Zimmy, that's a 1, 2, 3.
Can't you see I'm trying to get my confidence back? Break it. Hello? Yeah, Jim, this is Warren Buffett. Now, I've been watching your trading. Yesterday I was quite disappointed. You know, if you want to work for me, you got to be able to know which way the trend is going. I know, sir. I was nervous. I had a doctor's appointment to get my eyes checked, and I was worried if I was going to have glaucoma. Well, You should have not come to work that day then, James. Well, the good news, Warren, I don't have glaucoma. Fine, young man. I'll add you to the payroll. You'll be my second-hand man. What's that mean? You will get me coffee every morning and clean my toilet after I take a shit. Well, Warren, I didn't really want that kind of job. I want to be a chartist artist for you. Let's see if you break the VWAP. If we break the VWAP, you'll be my chartist artist. NVIDIA sympathy, what? DCF? FFEI hitting 172 at 4 from 4. Oh shit. Come on, break it, you dog. What was that, FFIE? God darn. Cisco Kid was a friend of mine. Break it. I might have to pull out an old trick out of the hat here. I mean, this is tough, but a falling wedge. And we're down, what, 50%? Let me put the fibbies on here. Just to double check. Mike's got me looking at these fibbies every day now. Oh yeah. Oh yeah. We gotta break it. Come on. Ha 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 ha. Do it. We got some garbage. We gotta break it. Cisco Kid was a friend of mine. Cisco Kid was a friend of mine. Cisco Kid was a friend of mine. Until break the line. SPX.
Still looks a little bearish. Come on, you cowards. There we go, baby. I'm up $100, 120. Break it. Give it to me. We're at the 200 SMA. Break it. Do it.
At that as well, since we're talking about video games, do you have the sense that, and you were mentioning there,
Cannabis got some kind of news here. Blanket. Break it. 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 Retest the 200.
I need to go walk. Brig it. Coming back down. Secure that profit in there.
Intel, baby. $121. Sava, I'm looking for an entry. SAVA. Let me see here. Sava earnings beats 40. Okay, earnings per share is 43. Beats. How does that beat 46? Science 25 million. Science reports clinical update on phase 3 trial of semifilm. Process of 2 global double-blinded what? Patients. Okay. Our phase 3 consists of 2 global double-blind randomized placebo-controlled studies of Stimuflam in patients with mid to moderate Alzheimer's disease dementia. I got the perfect patient for you to try this on. His name is Brandon. So, Break it! Break it! Break it! This is it. Let's do it. James. Break it. Break it. Did I ever tell you about the birds and the bees? The crowd's patiently waiting. Oh God, SLNA. Break it. That SSLNA, boy, it was a good one today. Called it off this 10 cents this morning, and we just hit 14 on the Fibby, and there goes the SPY. Break it! Oh, you can't see that on that monitor. $0.10. You're at resistance. Anybody take the SPY? Randy? Randy. Randy is no longer in the building. Oh, Ocean, don't you ever say that. I'll punch you right in the nose. Well, this is looking good for Bobo. I got it again. One rusty day. That's all it takes to reinvent yourself. Found the four-leaf clover, what's left to eat?
No rabbit's foot, no lucky star, no magic wishing tree.
But I got lucky, yes, I got lucky when I traded you. Ooh.
Got no rainbow around my shoulder, no horseshoe on my door.
Whoop.
But I got you to hold me tight, and who could ask for more?
And I got lucky when I traded you.
I always walk around with all my fingers crossed. I am afraid the love I found
Just might get lost.
So won't you tell
me that you love me? You can make it. You here to stay, but I got lucky. I got lucky when I traded you.
I always walk around with all my
Fingers crossed.
I am afraid the love I found
Just might get lost. Tell me that you love me. Up to make it there. Oh, no, that might cost. They here to stay, but I got lucky. I got lucky when I traded you. I got lucky. I got lucky when I traded you. Boom. How dare you? Retest. Retest. That's all. Let's go to a higher level. Okay. Sava, we're going to take her down a little farther. Got news on phase 3 trial. So it's not news you'd want to buy a stock on. Back to the VWAP. INTC has hit my resistance. We need to break it. I'm long on this one, so I'm not really going to be too worried about it for now. I think I got in on the early upgrade like I did before. But we do need to break 3189. Give me a little mo. Damn, there goes the knife. God. Stopped out of that, baby. Could I have silence, please? I blocked him. Ladies and gentlemen, the President of the United States has a message to give us.
This is monumental. Today, my administration took a major step to reclassify marijuana from a Schedule I drug to a Schedule III drug. It's an important move toward reversing long-standing inequities. Today's announcement builds on the work we've already done to pardon a record number of federal offenses for simple possession of marijuana. And it adds to the action we've taken to lift barriers to housing, employment, small business loans, and so much more for tens of thousands of Americans. Look, folks, no one should be in jail merely for using or possessing marijuana, period. Far too many lives have been upended because of failed approach to marijuana, and I'm committed to righting those wrongs. You have my word on it.
How about the crack? Can we get the crack?
Monumental.
Oh.
Today, my administration took a major step to reclassify marijuana from a Schedule I drug to a Schedule III drug. It's an important move toward reversing long-standing inequities. Today's announcement builds on the work we've already done to pardon a record number of federal offenses for simple possession of marijuana. And it adds to the action we've taken to lift barriers to housing, employment, small business loans, and so much more for tens of thousands of Americans. Look, folks.
Tens of thousands.
Should be in jail merely for using or possessing
I think a few more smoke it than you think there.
marijuana. Period. Far too many lives have been upended because of failed approach to marijuana.
Marijuana.
I'm committed to righting those wrongs. You have my word on it. This is my...
I can't hear you 3 times in a row. That's a little bit too much for me. Dinglebat. My name's Joe Biden. I just got through smoking a big fat one right before I come out here. And my approach is that I want to make it legal for all Americans, even the illegals. What do you think of that, Putin? We're going to blow a puff of smoke your way and make you a very happy man. Well, I hate to share this. I'm actually going to share someone. Kamala put a lot of people in jail over marijuana. Pandering for votes? This is disgusting, Joe. I'm a youth football coach, legend. And I can tell you that as sensible injections have forcibly administered by my players are much healthier than weed. Steroids come to earth, but weed is grown in a lab. What? How about just making it legal to begin with, Sleepy Joe? Thanks, President Biden, for doing something Trump didn't have the guts to do. Okay. Oh! Meanwhile, the rest of the world, but marijuana is going to blow up. Oh. 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 God. Look at that piece of shit. Step into help, but become a target too. Ring around the rosy. Oh. Too much violence on the internet. Fed Minister says Fed won't do digital currency without Congress's involvement. It says no decision made on the digital currency. Justice Department poised and planned of marijuana. U.S. Treasury, IRS, and guidance to boost American clean energy. What? I tell you what, I don't see how anybody could be a Democrat. Guidance to boost. What's the IRS got to do with this? Now, the IRS should not be making policy, that's for sure. The Inflation Reduction Act, IRA domestic content bonus, part of President Biden's economic strategy to boost America's manufacture of iron and steel production. Well, that's not good for the environment. Digging up raw materials out of the ground and making steel. That's horrible for the environment. Biden-Harris partners, including the U.S. Yeah, let's think about it. It's not that big of a spread today. What is FFIE, a cannabis stock? Intelligent Electric Company, no. I'm telling you what, these penny stocks, I've never seen so exciting in 2 to 3 years. Faraday. Oh, it's a car. Wow, this one got down bad. We got a triple bottom here. Anybody YouTube get stuck in that trade when it dropped? Beautiful singing? Wow. Nobody's ever told me that before. You have a charming neck for great music there, mannequin. I've been trying to get Mike to say that for years. Jim, you have a wonderful voice. It reminds me of Frank Sinatra. Anybody in the SPY? Cannabis is on fire. I think cannabis can make us a lot of money. I'm going to do a video tonight. Yes. That's about the only... I don't even know if it's a good idea. To legalize. Well, it is and it ain't. Florence, we're moving up on our intel. I got 10 contracts. Target 35 and then 37. NVIDIA on track for record high into earnings.
Its friends and family discounts to try to get rid of it, but now the company is planning to temporarily reduce some of its production levels and then shift the focus to increasing this inventory efficiency that it talks about and bring up working capital, also improve what it calls its cash conversion. And that's why looking ahead to fiscal 2025, it's seeing slower growth in revenue, but higher profitability in fiscal.
You know, as a business owner, it seems like you'd always want to do that. Just not come out and make a statement, well, we're going to reduce it. You're not very keen on their books. Your inputs? We're definitely at a support level. It'll destroy the youth. Yep. Oh, Florence. What do you think about that, Magnificent? Are you going to admit that I can sing? Mike just doesn't get it. The singing day trader. Hello, this is radio station KSCP. Today's broadcast will be brought to you by Brendan. He's got the determination to legalize cannabis and to drive all of our teenagers into what used to be young boys into women and young women into men at the very early age of 13. Also in the news, we're going to legalize cannabis, and if you look out your door, there's a nuclear bomb going off in Ukraine. That's it for today's newscast. We'll see you at 6.
Nancy, may I have a Valium and a shot of vodka?
SPX, I'm watching it real close here. We have an inverse head and shoulders on the 1 minute. You're out. See what these here doing. Do. Where are we today? Oh gosh, my intel's at 135 a contract. I'm looking very good on these right now. Enough to sell them if I wanted to. Magnificent, did you see my intel call I made? Oh, you did? Very good. Oh yeah, you did thank me. Where's that Alzheimer's drug at? Yeah. Born free as the whippoorwill. Mm-hmm.
if you could, in Lulu and Nike, this sort of athleisure space, which has just clearly been struggling throughout this year. Both those stocks trade near their lows. Did we just buy too many of these athleisure apparels over COVID? We just don't need them anymore as the baggy styles and the Abercrombie and Fitch stores are getting all of our money?
Don't give up on Lululemon just yet. Just so you know, at 3%, same-store sales reflects healthy consumer spending, and Lululemon is on track to post a 7.8. That's very robust for the first quarter, considering the difficult comparisons from a year ago. So Lululemon still has some traction there. In terms of the other big names like Nike, watch out because we have the Olympics are coming up this summer, and traditionally what we see is that when a big sports event of that magnitude happens, those sales tend to pick up. So analysts polled by LSEC are bullish that Nike will have a turnaround come the summertime.
So really quick before we let you go, because you mentioned my favorite space of retail, which is athleisure. Is it right now we're seeing some of these more traditional names like Under Armour, Nike start to fall out to favor, and Lululemon On, for example, really coming into light, or is it just one of these rising tide lifts all boats where the Olympics will be great for all these brands?
Well, so they each have their customer loyalty. Lululemon is one in particular that has a very strong customer loyalty. It's not just about looking good, but those consumers also want to feel good, and they're all about that wellness lifestyle. So Lululemon has a very loyal customer following. When it comes to the other names, more like Nike and Under Armour, those tend to be more seasonal with the sports events, with basketballs and things of that nature. So we could see that change. Going back to another point that you made earlier, yes, consumers are still gravitating towards more of the stay-at-home outfits like what Abercrombie is offering. So they indeed have stolen some of that market share since the holiday season. But again, you know, a lot of those names, the sports names, are more seasonal, and that could change, you know, as we progress into the Olympics.
Yeah, really good point. I can definitely understand the want to no longer put on jeans and wear the athleisure attire every single day, as I wish I was in that, I think, right now. But appreciate the insight. So great having you on the show today, Jerome Ortiz, Director of Consumer Research at LSEG. Now time to shift gears here away from retail. We're talking Trupanion coming up next with a nice move to the upside today of 18%, now up around 30% just on this week.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Damn, SPX has no fallen wedge.
One of
back to Next Gen Investing. It's time for Under 30 today. Looking at another name that I believe is making its Next Gen debut. That is Trupanion. Joining us now, George Chilla, Senior Markets Correspondent. George, let's talk some pet health insurance services. Hey, I don't have Trupanion, so I feel comfortable saying this. Covers nothing. Pet insurance does not, at least mine, covers nothing.
Well, I'm sure it covers something, but at the end of the day, all insurance is borne by the consumer, and we end up paying for essentially what we use. And that's health insurance from an individual standpoint, but I think that's the case for health insurance for pets, which is essentially what Trupanion is. It's really an all-encompassing healthcare service company or insurance company for pets. It's something people pay as pet owners on a monthly basis, subscription services on a recurring basis, but I think, if you look at the demands for their services, I'm just going back looking at, the last 8 years from the history that I have from a financial statement standpoint. The company's actually grown its sales by tenfold in that time period. And I think that speaks to, one, the brand this company has, and two, the amount of owners of pets that has increased in the past decade or so is pretty tremendous. But at the end of the day, if you look at the company's stock, it's higher over the last year by about 60%. In the last 3 years, unfortunately, it's down by about 65%. But it's been moving as of late, and it's not necessarily based on earnings. It's really based on some expectations. And the biggest expectation, and I think this is something that's more macro-centric, is even if you look at CPI, the biggest component of service inflation, or one of the biggest components, is insurance services. And I think that, again, this is what Bank of America is looking at with this company, in particular, if they're able to increase prices for their insurance services on a forward basis. And so Bank of America now has re-rated the stock in terms of their price from $39 to $49. Now, if you think about this company,
SPX.
look at it hasn't made any profits this entire time.
Intel's a 138 now.
In the last few years, the company's share count has remained stable, around 40 million shares, give or take. But the company's losses last year amounted to about 27 million on 1.15 billion in sales. So if you just take the numbers in terms of sales at 1.1 billion, and let's just estimate they can increase that
5 contracts,
assuming no other
31,
embedded in that
15.
increased service charges. That's effectively where the company will
We got to wait for it to pull back and hit the 21.
We're looking at a re-rating for Bank of America, because all they have to do is marginally increase their prices, assuming, again, they don't lose a lot of attrition in terms of their service customers that are still in demand for their services. They'll get closer to break even over the next 18 months.
So George, this name ironically came up in my scan of stocks that are heavily shorted, and it's 37% of its shares are sold short. So why is that? I mean, this isn't a meme stock. I mean, maybe it isn't. I wasn't aware, but why does this name trade with, historically such high short interest?
Honestly, Jenny, I don't know. From a short seller standpoint, either one, they probably anticipate additional share issuances. I don't see the case or need for it. I mean, ideally speaking, they only have about 130 million in cash, which is essentially effectively 4 times their annual burn rate right now. So they have 4 years of cash, and that's, again, all else equal. Nothing else is expenses that are not seen or unfounded. I think if you look at the way the stock has performed over the last 3 years, it's really reflective of the fact that the company's not making profits. They don't have a debt issue. They're not issuing new shares, and they're getting closer to break even. So I think the shorts may be a little bit wary right now, considering, again, the way things are going from an insurance premium price increase standpoint. It's coming across the board. Everything from home insurance, property insurance, property casualty insurance, car insurance, and health insurance, and now pet insurance. So, like I said, all they have to do, and this is based on my estimation, increase their premiums by 2 or 3%, and they'll get closer to break even. All else equal, not inclusive of additional cost.
George, is this a tough industry to break into? We look at all these big players. We know it's a scale game. There's a reason that these mathematicians, these actuaries make the fortunes that they do. It's a proven business model, right? But how is a company like Trupanion not profitable when it's just such a straightforward business?
Well, I think it may be based upon their inability from an actuarial standpoint to get to pinpoint probabilities of, needs or defaults. If you think about pets, there's so many different breeds and there's so many different variables that go into animal and health care. And so that might be one of the things that's a challenging element to from an actuarial standpoint, pinpoint, where there's probability of or an edge, if you will, from underwriting the policies. But what I see is a company that's growing its sales, but also see its operating expenses are also increasing. So what they need to do is they need to raise prices. And if they can do that, like I said, they'll get closer to profits because they were already on that route to break even. And if they can increase prices, that'll push them over the edge towards profits.
I totally agree, George. It just makes me shake my head because anyone that has a pet knows how expensive going to the vet with or without insurance is, regardless of raising prices. So that's frustrating, but we will leave there. Great insight as always, George Tillis, Senior Markets Correspondent. That also does it for Alex and myself for Next Gen Investing for this Thursday. Coming up next, we have the watch list with Nicole Petalides.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features.
Sorry, I don't know who that J.D. Powers is. If I don't know who it is, I don't even do business with him. I really liked how this trade turned out today. I was worried about it at first. Up $200. And Nike. I think Nike's going to be something here soon too. So I got to keep a good eye on Nike. We're starting to curl up on the TTM squeeze. And we're at the 1, 2, 3. Higher low, snake, breakout, pullback. We got 1, 2, 3 was up here. Oh, I see. I moved a dot down. Okay, I see what I did now. I gotta move that back. So we got to break the 9 before I jump in it. That's what we're going to do. Okay. Nike has to break the 9 EMA. So put a resistance. Ah, I got you. Jimmy. Resistance to break. And when I get the alert at 95.12. Damn, that's $3 down. Man, I could probably get a good deal here. Let me look at Nike in June. Oh, we have an experienced option trader in here. Oh my gosh, Intel's at 143. I'm up 20 some dollars a contract. I'm up $200 already on that thing. I'm going to get a good grade, am I? Magnificent. Coming from an F yesterday, I think I deserve an A+. A+. Good job, Florence. Now Nike's going to be in the same kind of boat here, and we're going to look way far out for Nike. I don't want to sell that shit yet. I was thinking about the SPX too, but let me look at Nike here. Earnings will be June 21st. So let's go into December 20th. Oh, $3 for the 110. If we don't get nuked. Hey June, where are you now? Remove. Hey June, where are you now? Oh God, SLNA 1640 all of a sudden. I'm back into pennies, Florence. You better be watching close. That's the first time I've said it in what, how many years? 4 or 5? 3, 4? I've not been so excited about pennies since I started trading. It's been 4 years since I've even thought about trading penny stocks. And this one here, I'm in at 10 cents and we're at 16. That's $300 today on this. And I'm going to take profit. Now, Jimmy wants to trade this one, Nike. I just might wait until tomorrow. I mean, I'm out of all the traders out there, I'm probably one of the first ones that ever started trading pennies. Me and 2007, I became a master penny trader. You're going to do it? Oh, I just found it. I found it. I think I found it. It took me a while to figure it out. Okay. Okay. Oh, yeah. Oh, yeah. I got it. I got it. I found a four-leaf clover. Bring this love to you. When I got lucky, when I traded you, when I got lucky. All this learning round. There's the Head and Shoulders. I'm digesting the chart. I want to make sure I make the right decision. That's not an N. That's an at. Oh, I got another song I want to listen to. What time is it? 1:08? Fat Cats are already back. You idiot. Yeah, you got a problem? I got a problem. Jim, if you'd look at what you're typing, well, I can't do that. How dare you? Are you typing with, I type with 2 fingers, sometimes 3. Okay, we got to break the 9 EMA. Gots to break it. Beautiful. Damn, your typing's got good. Make it bigger, Jimmy. Make it bigger. Oh, it's too big. Well, that's what she said. Remove. Long to the 200 SMA. We got a pivot point. I'm going to type that in there. PP. At the Head and Shoulders. Pivot point. Jim, make that a capital P, please. Do I have to? And then what I say, stopping, final resting place, the 200 SMA. Final resting place at 200 SMA. Jim, is it true that you put on a dress one time and went trick-or-treating? Yes. That's why I'm disqualified to become a president of the United States. And all this running round just got you found. Oh, you stupid. Did I put the Nike in here? No. Okay. Did you get any on you? I got lucky. Watch Spy here. Now I got these YouTubers. I'm watching Nike. Looking at calls for December 20th strike at 110 at 305. Gots to break the 9 EMA. I'm going to take the lady's word. We got the Olympics coming up. We've got Christmas coming up. I don't think I probably bought one pair of Nike in my life. I'm going to try these on-ons next. I don't know. I was raised Converse. If anybody knows anything about Converse, they were like if you wore a pair of Converse, you were looked at. Back in the day, back in the 70s. You got a pair of Converse? God, you must be rich. Damn. You must be filthy rich. Did you hear that, Jim? Yeah, let's go steal his sneakers. I've always wanted a pair of Converse, low cut. Them things are $19.99. I get stuck with these Walmart specials. Converse? Really? Are you serious? Jim has Converse? Let's go steal them. We can't have this. Yeah, I got the Converse All-Stars. You got a problem with that? Damn. That kid wears Converse All-Star shoes. And he lives in Portland. And goes to Lentz school. That'd be dangerous to wear them shoes to school. Yeah, we did, man. Me and Chuck Tabor and what's that guy? Ted. I forgot Ted's name. Played for Portland. Ted Williams. Was it Ted Williams? He was born in the greatest state in the nation, Springfield, Missouri. I'm going to be in calls. Florence, we're going to watch it close. If you want to buy one now. It's a long shot. Always clean. This is Jim. May I help you? Brendan, can't you see we're close to power hour here? How dare you? I don't appreciate you hanging up on me. You know how hard it is to try to get a hold of you, Brendan? Becky Quick yesterday said, "Can them retail traders be arrested? Are they breaking the law? How dare them make $100,000 a day?" I really like Becky Quick, and she's really turned me off here lately. It was right after they called the 6 rate cuts at the end of the year. And then they found out that they weren't going to get them. So she gets on there and she gets real nasty with somebody. "Well, you said we were going to do this." Like she was being the police of Wall Street. I listened to her yesterday or the day before, talking about AMC and GME. And she was interviewing this guy. She was really getting nasty about us retail traders. I mean, that's it. Is that legal? Can they buy a stock at low price and sell it at the high? And then right after she says it, she pumps in the video. And she acts like she, she's trying to set a point, make a clear message. Because she talked about, well, the guy says, well, they got to have something behind it, for you to believe it. You got to have some kind of news or something, just not throw out a picture of a guy sitting in a chair leaning over taking a shit and saying, "I'm ready to buy GME," and then run it up 400%, and then he's done for the day. He's done for the year. He doesn't need to trade no more. So she's sitting there, "Well, that should be illegal. Can people be arrested like that?" I've always said, if you got an alert, it's good to back something up to show, why you're taking the trade, or have a reason. Read the news, just don't go in blindly and follow somebody that says such and such is called out GME, so we're going to take the trade. It was cheap. Just like NVIDIA was cheap. At $108 off the 200 SMA on the weekly. It was cheap. It ain't cheap no more. So she gets on there wagging her tail. A year and a half later, NVIDIA is going to go up to 1150 by Goldman Sachs. And she shook her head, and did that little nod. I can understand. It's like me walking into I lived in Memphis. I was going to move to Memphis. So I went to the dog track and got plastered. I started walking the streets and I found a bar. And I walked in the bar and it was all black. I walked all black bar. And I'm glad I didn't have my date with me. I had my harmonica in my pocket. So the bar just got real quiet. And I said, oh shit, what have I got myself into? And this is West Memphis. It's not it's a pretty tough place. And I get up there and I order a beer. The guy comes up to me and sniffs on me a little bit. So I pull out my harmonica in my pocket. I started playing some blues. And all of a sudden everybody started playing pool and, hey, can I borrow your harmonica and play it? I said, hell, you can have it, man. Just don't beat me up. But, there's definitely a small joint with probably 50 big men in there. And I'm just a little scrunt.
And shift your perspective into full gear. Real-time example trades, a full hour.
$128. Belch.
All things Shark Tank as it enters into its 16th season. Kevin O'Leary, Market Overtime, 4:30 p.m. Eastern Time all week long. It also streams on our YouTube page and also schwabnetwork.com. Don't miss it. Welcome back to the Watch List. I'm Nicole Petalides, live on the New York Stock Exchange floor. Busy week, lots of developments coming from AI and big names in the space. So we want to try and go over some of these. It's hard to keep up. In fact, our next guest, Stephen Dickens, VP and practice lead at the Futurum Group, he keeps up and keeps ahead of what's coming next. It's good to see you. Thank you for being here. We were talking first with Google about Alphabet, and it's beefed up AI chatbot and Gemini, and we were talking about this earlier in the week. A lot going on with Google, which has hit a new high of 175. Tell me a little bit about the Google story.
Google's on fire at the moment. Google I/O was this week. I would say I took their big Cloud Next show just a few weeks ago. Lots of announcements coming out of those guys. Gemini 1.5 Pro, huge context window there, up to 1 million tokens. Just to put that in context for the listeners, that's 96 Cheesecake Factory menus that you can now ingest. Great stat that stood out for me. When you compare that to some of the biggest competitors, those million tokens versus 128,000. So what that means is you can just put more data into this system, get better insights out. Also, what they announced, the 6th generation of their in-house developed chip, Trillium, what you could call TPU6, 4.7x improvement. So they're really crushing it on a number of fronts right now.
Yeah, and the Project Astra, what is that exactly?
So that's more multimodal understanding. We're starting to see AI. It's not just about text. It's about it's about audio. It's about visual. It's about images. How can these models support a multimodal interface? I've been playing with ChatGPT 4.0 this week, creating images, creating pictures, having it ingest PDF documents, PowerPoints, all that type of stuff. So this is on trend here with what we're seeing with Project Astra from Google.
When you're talking about the menus, I mean, this is like, I couldn't send a video that was more than 55 seconds to a friend, right? But now we'll be able to send stuff major right? That's the point.
One of the other big things that Google's been focused on in its announcements this week is what it's doing around networking. Some of the stats around what they're doing: over 10 times the reach, 2 million miles of terrestrial and subsea fiber. You've got to put this in context. Google's got over 12 services with 1 billion users and 5 services with 2 billion users.
Right.
We're all on YouTube. We all use Gmail. These services are huge, so the backbone that Google's got is fantastic.
Yeah. Tell me about Microsoft and obviously OpenAI, big part of this. Tell me about this story and where we stand in that development.
Well, all of the guys are trying to one-up themselves and one-up each other. So Google I/O's been in the calendar for a while. That's been a big event for them. Microsoft and ChatGPT with 4.0 decided to come out a couple of days earlier and maybe steal a bit of the thunder. There's 8 key announcements there as part of that. Expanded knowledge base, and that contextual understanding that I mentioned, multimodal capabilities. But one thing that stood out for me was the ethical and safety improvements. If we're going to knock AI, it's these concerns around indemnification. We've got the New York Times lawsuit that's going on around ingesting content. There's a lot of thoughts and a lot of commentators talking about what's going on with AI. So I think it was good that ChatGPT with the 4.0 release got out ahead of some of this.
Right, and so obviously everybody gets a lot to sink their teeth into, and to your point on the ethics side, so much of this is exciting, but it costs a lot to get to the next level, to upgrade to the next AI level, right? To your point, billions. And that slows it down at least, but at the same time, people are worried about AI and how it affects humanity. Even how about AI weapons? That's another thing too that people are worried about.
Well, we're seeing that in the cybersecurity space. The enterprises are starting to use cybersecurity tools powered by AI, but so are the hackers. So there's a lot of concerns here. I think overall, though, we should be looking at this as a net positive for humanity.
A big picture, right? Well,
Yeah, for
it should
sure.
be good. And then you have Amazon Web Services. We're going to have a changing of the guard there too. But in the big picture of how Amazon's developing, I feel like Amazon's just ever evolving.
Yeah,
really.
so they've had a change of CEO in Amazon Web Services this week. Adam Selipsky stepping down, Matt Garmin taking over. Laura, big numbers. Their latest earnings, reported 22.2 billion for Q1 2024. That was up 16%. Not as good as we were seeing with Microsoft and with Google.
I don't know why.
They
should ban
31%.
They should ban George Soros trading any American company. You know what? They should just
dollar business in that short period of time. Just fantastic performance by those.
Bill Ackman, Pershing Square shakeup, home retailer dump.
This funded EV startup, and they're trying to get some of Tesla's laid off employees. I mean, when I think about Amazon Web Services and all the things that Alphabet Google is doing, and I know they had this other thing that they acquired, that Amazon had acquired back.
David Trepper's bullish on China.
Zoox or something.
Alibaba,'s #1 holding.
We're going to hear more about EVs from Amazon and Google. Not what we expected, I think.
From an Amazon perspective, they've got a partnership with Rivian.
Yeah,
obviously,
good
a huge delivery
Oh.
fleet.
Right.
Really strong focus in
What's
the
it got
Amazon
to do
group
with
and in Amazon Web
approach to
Services
marijuana?
On ESG.
To me, lives have
with their
been
environmental footprint.
pended because of our failed approach to marijuana.
And deliveries with those guys,
Right.
but I think the Rivian partnership.
Well, that ain't what I wanted to
is
look
gonna be
at.
crucial.
And then IBM is actually selling some cloud
That's not what I
security
wanted to
software
see.
over to Palo Alto, but IBM in itself, and we think about AI and how all these things are developing. You have some updates for us pertaining to IBM, which actually has had some nice targets. I mean, RBC Capital as IBM is a $200 price target.
David Tripper.
Liking this one, I see some outperform ratings.
Yeah, I checked the stock this morning. They're up 36% year to date.
Mhm.
I don't think a lot of people
Who
would
the
maybe
fuck's
give
the
that
news
credit. IBM's on fire. Arvind Krishna, the CEO, is doing a really good job of focusing that business
There we go.
around hybrid cloud and AI. I was out at one of their events, and they've got another huge event next week. They open source some of their large language models with Granite, also put in some tuning around an announcement around Instruct Lab. I expect to see more. They've got a pending acquisition of HashiCorp. They announced just yesterday that, and I was chatting to one of their general managers of strategy just this morning on a call about how the selling of the QRadar assets to Palo Alto.
Right, which I just mentioned,
Yeah, Palo Alto has been on fire. Those guys are going to buy the security assets from IBM. Further focuses IBM.
I guess all of these, in your mind, are buys to a certain extent.
I think so.
Because of what they're doing.
It's
I have to get going, and you have to get going, but Google, Microsoft, Amazon, IBM, even Palo Alto. I mean, you see growth ahead for all of these and their ideas?
Absolutely. Picks and shovels of the AI revolution is how I picked all of these. Obviously, you've got Microsoft and Google with a more public-facing LLM strategy. IBM maybe in the background a little bit with providing that infrastructure to enterprises. But Palo Alto, this is good news for those guys as well with this acquisition.
And IBM and Red Hat collaborating in AI. Thank you so much, Stephen. It's great to see you.
Always a
love
pleasure.
These AI updates, because that's what everybody wants to sink their teeth into. Started last year, and it certainly seems to still be going. Thank you so much, Stephen Dickens of the Futurum Group. Still ahead.
What's it like sitting next to her, guy?
More than 20% returns this year, while avoiding some big tech meme stocks and the Magnificent Seven. So how'd they do it? Let's get some details there. Here's a look at winners and losers.
HFMDX ETF next. Florence, we want to break the 9 EMA on the weekly on Nike. So I'm going to set an alert for that position. I want to start hearing them in the news. I heard something today, so. You got them at 310? That's a long trade. They're at $3 now.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets.
I'm going to jump in them here.
Anytime, anywhere,
A day or two.
Device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Intel's at 138.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And
So I'm going to go and jog a little bit, and I'll be right back. I got to get up. I got to make myself get up 2 or 3 times today and go on the treadmill and just run a little bit or walk.
Morning. It was, whoa, down 40,000, and the hats came out. Look, we're not at down 40,000 anymore. In fact, we haven't closed above down 40,000 yet, ever. We did hit all-time highs on the NASDAQ, S&P, and Dow today, but we pulled back. I want to hear more about some of the thoughts that Ben Lichtenstein has in his market update.
Lichtenstein.
As we said, 90 minutes left in the trading day, and used to be, I need to go have some consultations, because it used to be they didn't give the hats out until you closed above that crucial point. But I don't know what happened today. The hats came out. People just were too excited.
Yeah, well, I was going to say, Nicole, it must be neat to be in that environment still where you can see the hats being put on, right? I mean, I'm kind of reminded of back in the old trading floor days when you would reach a major hurdle like this. It was definitely, there was energy associated with that, for sure. And so a little bit different being distanced and off the trading floor as we reach this new historic level. But yeah, as you mentioned, up and through 40,000, but limited in terms of follow through right now. We're still hanging on to these upper levels, though not much in terms of rejection of the new all-time highs. I wanted to start with a look at the S&Ps here and the SPX, the new historic level that we saw there, which is up to 53.25. We've got a chart here. It's a 1-minute candle. Look at price activity off the lows from yesterday. You're going to see we were down around 52.63. The big move up throughout the day in reaction to the CPI data and some of the green lighting that we've seen, really investors kind of just putting their foot on the pedal and the pedal to the metal. And again, as a result here, 53.25 is the new all-time high. You mentioned we're off that level. So here's the close from yesterday. We're basically unchanged, as you can see. We're up by just a matter of ticks here right now, or a tick, I should say. But let's take a step back here. I want to show you what's going on bigger picture, because it really speaks to the strength in terms of what we've seen off the lows. If you remember, it was just October of last year. We were trading 4,100 to coal. We're talking 1,200 plus points to the upside. This is where I think your attention should be directed, right? Because you have a high, we're talking about the levels that we saw back in March, early April, and then you've got a low that we saw in the middle of last month. And again, we didn't spend a lot of time down there, right? After taking out the March lows in the beginning of April, nice rally back through the middle of that range that we've established basically since the beginning of February. And again, back to the attempt to get something going here in continuation of this longer-term trend to the upside. So we're looking for follow-through, and we're also looking for a new area of consolidation value to form at this higher level.
Yeah. And what about crude? I mean, you know, not back above 80 anytime recently. You know, it pulled back, and it's been at this 78, 79. What's going on with crude these days?
Yeah, well, everybody's talking about stocks, they're talking about yields, which have been coming off and contributing to this rally that we just looked at in the chart behind me and the move up in the S&Ps. But I think kind of below the radar is the fact that we've seen crude come off. Let me show you why, because if you remember this low we just talked about that was from the middle of April? Well, let me show you, because that's when crude was trading, well, up around $90, if you remember. Real quick, just to look at some of the intraday price activity we've seen today. Nice run up from the lows that we saw down around 78 all the way up to 79.85, and here we are currently trading at 79.27. But getting back to that April spike high that we saw, here it is. We were just shy of $90 at that time. And you remember that sent stocks, in addition to some of the other headwinds we were talking about at the time, rates, yields, which were inching their way back up. But to see crude come off, I think that's helping stocks get a little bit of a lift. You got the dollar, as mentioned, yields, earnings, eco data. I mean, we were joking around on the Future Show earlier this morning, Nicole. I was saying we could blindfold ourselves, throw a dart, and hit something that's been bullish for the S&Ps.
That's good. You know, I'd be careful doing that. And I wish I had my Dow 10,000 hat, which we hit when I was standing here in 1999. We were right in the tech boom before it burst. In March of 1999, I had a great Dow 10,000 hat. Well, I don't have that anymore. But anyway.
I was just thinking, lastly, Nicole, when we first started the network out, talking 7 years ago, the S&Ps were trading 2,200. So to see them at 51 right now, 52, I mean, this is significant.
Right, unbelievable. 53, we're getting just up and away. Okay, Ben Lichtenstein, great to see you. Ben's a little sad he's not getting a hat today. Okay. Take a closer look at the ETFs. Strong returns in the past year, avoiding the trends, the Magnificent Seven, large cap tech, meme stocks, but somehow these Hennessy funds are doing really great, really highly rated over at Morningstar. I want to hear the details. Ryan Kelly, Chief Investment Officer at Hennessy Funds. When we look at the funds, I was looking top 1% Morningstar category, 1, 3, 5, 10 years as of March 2024. I mean, wow, you know, nobody can, it's just unbelievable when you get that kind of ranking and ratings. A lot of pressure that gets involved in that, so congratulations to you and the team. I'd love to just hear your big picture on some of the strategy and thoughts on the markets.
Yeah, absolutely, and thanks for having me on, Nicole. And interesting, last night, it was actually 1% for the 15-year as well, so we really had some real success in this fund, obviously recently and over many years. Interestingly, this fund is probably a bit more straightforward and potentially even simpler than maybe some other funds and fund managers that you've had on before. We stick to a very basic formula of investing. We look at time-tested fundamentals that have worked over many, many, many years. We use this formula to pick stocks and to pick a new portfolio only once per year, and we let that ride for an entire period, an entire year period. So what we've seen is that this is really a good way to do it. We think that when you buy a stock, when you create this portfolio, and this fund only has 30 stocks in it, so it's pretty concentrated. If you let those stocks really move and don't sell them too early, that can really benefit over the long time. An example of this was last year we owned Super Microcomputers. We don't own it anymore, but Super Micro is involved in the AI boom. They're on the hardware side, and they did exceptionally well. Along the way, honestly, if it had been in my own PA, when it was up 200%, 300%, I probably would have thought about selling it. But because we're disciplined, because we stay with what we have, it seems to work better over the long term.
Right, understood. You know, when I think about what goes on here, you talk about the discipline that's needed. You add the 15-year in the category here for Morningstar in the top 1%. So congratulations for that. But you look at, and you take this disciplined investment strategy and you look at some of these sectors such as industrials, consumer discretionary, and energy. Those are some of your top holdings. You stay away from what? I mean, people may scratch their heads and can't believe it, right?
Sure. Well, I think what you're getting at is we don't have any tech. We have very little tech. And that's been an interesting part about this portfolio and running this fund. You know, I don't do it alone. You know, we have a portfolio management team. And we really let the formula dictate what we own. And at this point in time, almost 80% of the fund is industrials, consumer discretionary, and energy. And so, you know, this outperformance, we haven't had any exposure to the large cap tech names. And in fact, you know, this fund also is a mid cap focused fund. So we have we look at companies only between 1 and 10 billion in market cap at purchase. So, you know, it's really different, I'd say, than some of the other outperforming funds over the last few years. It's driven more by the idea that we want to buy companies that we look for cheaper valuations. We look at price to sales. We look for companies that have momentum. And we look for companies that have some earnings growth. It doesn't have to be significant earnings growth. We just want them to be growing in general. You marry those three together and you come up with 30 stocks that go into the portfolio. And, you know, so far it's done pretty well.
Understood. And then when we go over some of the top names, I mean, you have some of the retailers, Gap, Abercrombie. I think people might say, I'm surprised because those are, I mean, if you said Lulu and Nike, you have more of the guests that come on and say they like those brands and such. Whereas Gap maybe has a harder time, you know, or Abercrombie's more in the malls and has more of a wild card versus the higher end shopper for something like Lululemon and Nike. You have manufacturing and comfort systems. You look at some of the other things. Tell me about some of the names that you chose to be in here, and are you sticking with those?
Sure, and you have a very good point. A lot of the names that come into this portfolio are either names that are out of favor, sectors that are out of favor sometimes, maybe less covered companies, and it's happened that way for many, many years. For instance, in this particular case, it was last October that we rebalanced the portfolio. That meant that we pretty much pulled in about 27 new stocks out of the 30. We pulled in Gap, Guess, and Abercrombie and Fitch. That was probably not a very popular thing to do. You know, talk about malls and retailing and apparel. Yet those stocks have just absolutely flown. They're up. Abercrombie's up about 140%, I believe. Gap is 100% or more. And they've done exceptionally well for us. We entered the holiday season owning these stocks, and they were each about a 3% position in the fund. And now they've moved up to about a 5% position because of their outperformance. We also own you mentioned a couple of them. We own industrial companies. We own two really heating and cooling system companies. And these are not companies that we talk too much about in the press or you hear much about, but they've done exceptionally well for us as well.
Thank you so much. Ryan Kelly of Hennessy Funds, great to have you on. Fun to hear what you're investing in and how you're staying away from meme stocks, tech stocks, and going with some of the old reliables and having that discipline, and it's working. So thank you for that. We appreciate it.
Thank you for having me.
Still ahead, we will bring in our panel to discuss the housing market, what today's housing starts data and high mortgage rates do mean for that sector. We'll be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to the watch list. We watched the April housing starts report, and it's giving us some updated perspective on what's going on in the U.S. housing market, real estate overall. Our panel is ready. We have Melissa Cohn with us, Regional Vice President William Ravis Mortgage, and Kate Kaminsky, COO at Walton Global. Thank you both so much for being with us. Kate, now we got in some more data. How do you feel about the market overall?
We're pretty flat month over month. I mean, we saw the data come out a couple of hours ago, and really, we saw a slight decline from last month, but year over year we're still up 17%. So I don't think we're at a point yet where we can say that things are starting to decline, especially with the little pullback that we saw in mortgage rates. I think that's set everyone's minds at ease a little bit. And most of the builders that we're talking to are still saying that they anticipate starting more homes this year than they did in 2023. Or over half of them recently came out with a survey that they're going to have 10% or higher home starts than last year.
And so I wanted to ask you, Melissa, when you see what's going on here, I mean, you still have elevated prices, and even if mortgage rates have come off the highs, the housing prices are still really hot, and it's my understanding the demand's still there. What do we see now for a summer? Are parts of it waning?
I think that there are enough people that have decided that they've waited long enough in order to go ahead and make a purchase, that they are getting off the fence, understanding that they're going to buy today in today's higher rate environment with higher prices, knowing that when interest rates do eventually come down in the next 12 to 24 months, the prices are likely to go up, and that now is the time to get going. Of course, we are headed into summer, and the velocity of the transactions will slow down as people go on vacation and kids are out of school. But, I still see that there's, continued interest in purchasing.
So, yeah, I want to talk more about that. You have a lack of inventory. I know the new homes have been doing better than existing homes. Kate, tell me a little bit about that theme, because this is such a part of our inflation print too, housing, shelter, rent. But the inventory is such a big part of it. Where do we stand on that?
This is a huge factor for consideration today. I mean, typically, new home construction is sitting around 13% for all home sale inventory, and right now it's at around 33% of all for sale inventory, and so we're continuing to see those numbers increase literally every month. as that lock-in effect really just continues to hold tight on the resale market. I was just off of 2 weeks of back-to-back conferences here, the John Burns conference and then the Builder 100 last week. So two well-respected industry conferences, and there's no question that this continues to be a driving force behind some of these record numbers that you're seeing home builders put out. I think D.R. Horton just had one of their best quarters ever. And that really is a result of these home builders all being in a position to continue to take advantage of market share because of the fact that they can help buy down mortgage rates. Buyers simply cannot, or have not, I should say, wrapped their heads around rates.
I'm going to jump in here. Melissa, overall, I know you're looking at what the Fed may or may not do. I mean, a lot of folks still hoping for a cut, and maybe that could help mortgage rates. But the housing shortage, from all the things I read, is not going away. And we even saw multifamily jumping once again. For the new home construction, that has swung back to positive, and because the other people are stuck in their homes, they already have good mortgages. They don't want to mess around with that. I'm going to give you some of the final words here, Melissa.
I mean, no, it's absolutely correct. If you have a 3 or 4% mortgage, you're going to hold on to your mortgage into your home for as long as you can. You know, people do end up eventually having to move for life cycles. They get married, they have children, they get divorced, they die, they get relocated for work. You know, and we are seeing people moving away from their low rate mortgages for those reasons, but other people are improving their homes, applying for home equity loans, and just trying to stick for as long as they can until rates really come down. And it may be another 2 years before we see inventory levels, especially of, you know, previously existing home sales, really starting to increase again, and new home builders are absolutely taking advantage of the moment.
Yeah, and look, the new home builders also have some leeway for buyers when it comes to those mortgages. They make it more attractive for them over a long term too. Melissa Cohn, Regional Vice President, William Ravis Mortgage, also Kate Kaminsky, COO at Walton Global. Kate, Melissa, thank you. That's it for the watch list. Download our free Schwab Network app in the Apple App Store. 24/7, schwabnetwork.com. I'm Nicole Pedalides. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Young lady who's mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know
I'm back.
how much you care.
One 2-bits freebie. Inverse Head and Shoulders. Look at this. Jimmy said, watch, before I head out, I headed out, I said, watch this. Boom to the 200. I love the SPY. I would rather trade the SPY. The SPY is a stock that runs all the time. It's always got a volume and always in rhyme. Hey, hey, she's got rhythm. Oh yeah, she's got rhythm. Almost an inverse head and shoulders. It is one here though. I can call it one there. I sure can. We had a big sell-off on the 1, 2, 3. Then you had the head. You had a spinning top and a hammer. Spinning top and a hammer. Tussa. Falling wedge. It's now 12 after. Well, here's this guy.
Supportive flows coming, right? And we have a Memorial Day, Memorial Day coming up. We have an end of month, beginning of month flows, right? From the positive move of this month that should come in as a re-leveraging effect. All of these things should be supportive in the context of a vol market that's very, very well supplied.
Okay.
Several years ago, in 2021, we coined this term, the Summer of George.
Yeah, I've been getting all your tweets. What does that mean?
Summer of George is when markets are very placid, right? There's nothing going on, just go to the beach, hang out. The market's very well pinned. When vol is this well supplied, that means the dealers are long vol. If the market goes down, they have to buy vol. If the market goes up, they need to, buy the market. If the market goes up, they need to sell the market. It pins the market, right? And in the context of that, there are these Vana charm flows, these supportive flows. So you get a very kind of grinding type market. This is like 2017.
Okay.
Right?
I mean,
All was
hey, that's
very well supplied.
That's like a VIX 11 market.
Right.
2017.
Now, we won't get there because of other things, from a macro perspective, but that represents a massive opportunity if realized gets that low and implied stays a bit higher, right?
Sure.
Historically, actually, the best time to sell vol is it's more of a U. Most people think, when vol gets high, you sell it. When vol gets low, you buy it. No, it doesn't work that way. When vol gets low, there's a reflexive effect where the markets get pinned. So even on a risk-adjusted basis, selling vol when
Unless
it's
we
low,
make the 10 EMA on the 30 minute.
where it's implied is one of the most profitable times to do it. So this is a good time to do that. Now, to be clear, that vol supply is happening at the index level. That doesn't mean all the single name stocks are having vol supplied. It's really at the index level. And that leads to something we've also talked a lot about, which is dispersion.
Okay.
Right? That means the index can be very pinned, much like it was in 2017.
Stocks are going everywhere.
But the correlation starts to break down. There's a structural effect that when the index is pinned and something goes up, by definition, something has to go down. So it actually exacerbates correlation breakdown when vol is pinned on the index level. We're likely to see that for the next 3 months through the summer. And what that means is, people are like, well, what's going to go up and what's going to go down? Listen, you don't necessarily need to know that. You can play in the vol markets, this dispersion and the breakdown in correlation. You will get rotations violently one way for a month and then violently the other way. The most likely places to see up moves are places where hedge funds in particular who are over-levered. And
We're squeezing right now.
Market this summer. They're short.
On
SPY. And we're starting to see some of this kind of GME, AMC kind of narrative meme stuff again. That's kind of a clue, I think, till we're going to get the running of the memes, I think, again this summer. Maybe different memes, maybe different things. But I think this idea of do the opposite, right? Jerry Seinfeld said to George Costanza, if every instinct you ever had was wrong, then do the opposite.
Turn
right?
on toast.
Exactly.
Well, of course, the only catch is that he falls down the stairs at the end of the episode.
Right.
But
It's
it
a great
seems
analogy.
like those stairs, firstly, the weakness part in June is that fully off now that we've established this, now that we took advantage of this opening from the last 3 weeks?
The way I would paint it is that tinderbox, which is that June skew open interest to the downside, which could have represented risk, has now moved very far away, and its vol is low enough at the money and around that it's going to be very hard for it to get down there. Now, to be clear, if something happened in this window and we broke some very serious levels, right? Those could engage, but it would have to happen very quickly. The probabilities of it have dramatically increased. In the absence of that happening, it is positive support.
Okay.
So I would say highly unlikely, but if it starts to go, there is this kind of little bomb sitting down there. But it only, again, is for the first couple of weeks of the June options expiration cycle. And again, you have now Memorial Day, you have the beginning of month, end of month positive support. And so it's incredibly unlikely, in my opinion, at this point. It was like this opportunity. The path we took was different,
right?
And now the outcomes are different.
I remember you very specifically saying, May 1st to 17 is the opportunity to rally. If it doesn't happen, then you open up the door to the downside for the June situation. And I guess since we rallied to then, the levels that would have created that trapdoor to open are now so far below us, right? That it would have to create, you'd have to have something really, really almost like Black Swan style, surprisingly exogenous force.
That's right. It's not just the distance, that is part of it, but it is also just the vol supply, the amount of vol that is now supplied. Given that distance, it's not just far, it's just very hard given the actual supply and demand constructs in the market at this point. So that combination makes it very hard. NVIDIA earnings May 22nd after the close, I think is the last kind of hurdle here. That's likely to be supportive. That there's a event vol in there, which again will drive some Vonatron flows paired with, unless they really, do report really poorly.
Sure.
Which I don't think is particularly likely, but we'll see. Then you have that again, that Memorial Day period, and then all that kind of acceleration of flows and decay, which is important. June Fed meeting on June 12th. I think that's appeared May 22nd to June 12th after that first move on the NVIDIA earnings, which will probably again be just a bump up. You're gonna again just get a grind again. We're gonna get these runs on big events and then sit, run, decay, digest, chop, run again. And that's kind of how this works. Now, to your point,
to use that rattled term, barring some unforeseen incident.
Exactly.
Well, let me ask you about NVIDIA real quick, Jim, because I think something that you said was really interesting, because you said there's a high probability of dispersion within the market, where the index gets kind of fixed, but dispersion underneath. And just from hindsight and recency bias, I would have assumed that the dispersion would come from like the NVIDIA kind of concentration, where you get the tech stuff working, the other stuff doesn't. But you mentioned that it might come from somewhere else, which is the squeezing of the short position. I want to come back to that, because that was not on a lot of people's radar. And from somebody who goes from the macro perspective, when it's such a different environment, macro-wise, where rates are still, compared to 3 years ago, I'm shocked that this is happening.
Yeah. Do the opposite. It's about supply and demand. The market is a voting machine in the short term, right? It's a weighing machine in the long term, but in this very short term, particularly when it's a liquid, who's long, who's short? That's potential supply and demand, right? And that potential supply and demand is more relevant and more important when markets are pinned and things are liquid. And so we're likely to see a period where if you have big positions and you're betting on something and it gets a liquid and everybody's in the same position, a kind of squeeze on those positions during a period like this. And again, the dispersion will exacerbate that. I think people sitting bored at home over the summer might also exacerbate that, right?
Sure.
I think this is a time not to be short narrative names.
Okay.
Again, I think some things that may seem very logical are probably more likely to happen than the opposite.
I want to make sure before we go to get your macro connection to this, to offer to kind of connect those points. Will these squeezes of these meme-style names be shorter in duration than a couple of years ago? Will the macro kick in, because your view has basically been that we're going to tighten through either inflation or growth slowing for the most part?
Absolutely, yeah. I don't think we're going back to that type of a run. The truth is the vol is still very well supplied. We're not going into some massive upside run, I don't think, in the short term. My general view is that by August, by Labor Day, we'll be around 5,600, 5,575 area, or we'll at least hit that area. But it'll be some chop, some slow periods, vol very compressed. I think after a pullback then pre-election, I think we can see a Q4 that really takes us up to 6,000.
Wow.
I really do think, again, we talked about the election year and all the positive, supportive things happening. The administration is going to find ways to try and keep goosing this market. That's what happens during election years, during populist cycles. There's stuff that we haven't even talked about, but there's this liquidity bazooka that nobody's really talking about. That's Freddie Mae and Fannie Mae, Fannie Mae and Freddie Mac. They're potentially going to release $2 to $5 trillion of potential liquidity on second mortgages. There's all kinds of things like this that people are kind of sleeping on. The administration is working behind the scenes to provide liquidity to the market in all kinds of ways. And
printing money, you idiot.
Vol is well supplied, so I don't think it's going to goose to the moon. People are relatively long positions, so again, hard to get things moving.
I don't understand
too
it.
fast in that scenario, but going to be supportive.
I wish I could just print money, like the government can, and just spend, and then bid us deeper and deeper in debt. And then our children are going to have to, grandchildren, the newborns, they wake up and say, what the you stuck me with $200,000 debt and I'm not even born yet? I mean, look at the debt clock. I'm ashamed. I didn't vote for Joe Biden, that's for sure. $34 trillion. Food stamp recipients have gone down. No, they've gone up. 34. Bottom 50% wealth. There's 23 million millionaires in America. $43 are living in poverty. 123,000 drug deaths. 614,000 homeless. Average new car is 51,000. There's 100 million not in the labor force. Unfunded liabilities are 215 trillion. Unfunded liabilities. It was 65 during the Bush years. 65 trillion unfunded liabilities. Liability per citizen, you owe $639,000 to the federal government if you're a U.S. citizen. Now, the illegals, they're going to add to this unfunded liability like you've never seen before. 12 million welfare recipients for the next 20, 30 years.
But I mean, they are coming off like really, deep value, super lows. Nobody has loved China for a long time. In the ETF, in terms of demand, is just starting to show up. So
it dropped.
We're starting to see, a few $100 million here and there going into funds like Asher or like some mainland stocks, ETFs. But if this rally persists, there's no better time to buy than when things are oversold. So we're watching it closely.
Does any of the factor-based models like pick up China value, or is it when you're investing in China, you're basically going to like pure China-focused funds? Like, are there any funds that loop them into broad stock exposures, or when you're trading China, is it basically you're just trading China directly?
No, I mean, any emerging market ETF, you're going to get a big chunk of China in there.
Okay.
So you can go this trade full
FXI?
right on China. You go for some, broad-based big ETFs, your large cap names, some of your classic trades. But today you can access China through, a lot of different ways. And I think what's cool about that in the ETF space, and at VettaFi we've done a lot of research on it this week, is the fact that you can actually play a little bit more defensively if you're not too comfortable yet with China, if you want to, tiptoe into this water. There's different ways to access it that are not necessarily sector-based. They could be things like you just want to own tech, but they could also be different, like more, buyback opportunities, dividend plays, free cash flow plays, that kind of stuff.
So more than just FXI. So the FXI is like for the brutes. What should I be using? Is there a better way?
Don't be a brute.
Yeah, but that's it's either that or like the K-Web stuff. In fact, you've got a pretty good, we're going to pull this up. It's a little bit hard to see, but there's a lot in here, and I want to make sure we see it because there's a lot of Chinese funds. FXI is actually the fourth best performer, so for folks on mobile, you're going to have to squint a little bit. Top performers, KTEC. Boat is right behind it, and then K-Web, then FXI. Tell me about the first two. You've got Boat circled on here. Why is that?
Because it's the outliers, the only non-China fund among the best performing ETFs in recent
So China's got 3 out of 4 of the top.
They got 12 out of 13 at the top.
Wow.
It's all China ETFs.
That's incredible.
So they are just running this show. It's the China showtime.
And the flows don't match up with the performance right now?
Not yet. I think we've seen like maybe $300 million go into Asher, which is mainland stocks. We're seeing, $50 million here and there. They're just starting to come in. But I think it's just people have been really burned. They've been really disappointed. I mean, it's a long period for China to underperform. And so I think this might just take a little bit of time for people to warm up. But
what are my options to use as my benchmark outside of FXI? Like and what are the holdbacks of that versus some of the other funds? Is it just like about how specific you want to get? I mean, the Hang Seng KTEC, the Crane Shares one is doing pretty great.
Well, Crane Shares, all their funds are pretty great. I mean, that's their expertise. So the amount of research those guys are doing and, the boots on the ground, they're talking to these companies. I mean, they have K-Web, which is the internet fund, which is your growth story. I mean, you have to remember China, and a lot like the emerging markets, they tend to be very heavy financials, the commodities, energy plays. They're not often like big tech funds, and that's part of the reason why they've underperformed relative to the U.S. for such a long time. So a fund like K-Web has done a great job. The tech-focused ETFs have really captured that growth story, which has been a U.S. story more so than an emerging market story. But like if you really dive in, there's different ways. Like you can go actively managed in China right now. There's a couple new entrants in the space. These are folks that either live in China that are managing these portfolios, or they're there all the time. And the notion is, I'm rubbing elbows with this company's CEO, so I have better intel. So if you believe in that, there's options like that. Funds like SeaGrow or MCH from Matthews Asia are interesting plays there.
Do those get expensive given the kind of like inside baseball? They can say, hey, look, this is hard to get access to. I'm rubbing shoulders with
alpha will always cost you a little bit more, right? So they will get a little bit more expensive, but they're not cost prohibitive at all. But it's really like if you want to step outside, not be a brute, step outside of your traditional exposure, you have that active angle, which is a growing space. I mean, it's been a decimated space. There's not a lot of active managers left in EM anymore because we've been in a love affair with U.S. stocks for a long time. But so it's a growing space.
There were a bunch of funds that shut down, too. Looking at a list of 16 China-focused ETFs that shut down. Well,
16 this year plus 2 last year, so 18 total in a very short time.
Just because they got smoked or what?
No demand. I mean, there's no assets. They go. Global X shut down their entire China sector lineup. That's gone. No appetite. I mean, running ETFs costs money, and if you're not gathering assets, after a while, you just clean up shop and you let go of the idea. But some really cool stuff. And now you even have a covered call ETF in China, which is, we're
loving covered call ETFs now. That's our thing.
Yeah, I've noticed.
And so now there's Clip from CraneShares as well. So you can do covered calls on KWeb. So picking up 50% annualized distributions, which
there you go.
It's impressive. So you name it. There's different ways to think about this other than FXI. FXI is a great fund.
Right. Well, that's why we need you, so we can figure out, other more nuanced ways to approach it. Tell me real quick what you guys are doing at Verifying, the main mission, because you joined recently, and there's been some kind of consolidation within the ETF database world and stuff. So what's your guys' main priority right now?
So Verify is, an indexing business, a data business, digital marketing business, and content business. I just joined their research team, and we're out there, looking under every rock and figuring out everything there is to know about ETFs. And, we're working with issuers, working with advisors, and it's a great place to be. Only week 2, but
well, bringing us good data, as always. Great to have you back, Cynthia.
Thank you so much.
Thanks so much. Good to see you, and good to run us through some of the top performing China funds. Wow, a lot of good performance from the China ETFs, at least the ones that made it through after a bunch of closures from a rough year. But the stocks are back on the mend. Thanks, Cynthia Murphy, investment strategist at Verify. We're going to trade some options when we get back. Take another look at Walmart, which has been holding up about 6% plus throughout the day. Look at that, now up 7%, so almost back to where we were in the first tick higher this morning. AMD also with some interesting news. Analysts are putting it above NVIDIA on its favorite list. And then Chubb still riding the wave from the Berkshire investment. More ahead here on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker.
He was.
He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500.
Window.
He just didn't want to do that. He was
Window.
price he was charging. My dad instilled in me.
Your dad didn't ever teach you how to say window?
Proud of offering a good product at a fair price.
They're not window.
He'd be extremely proud of me. Yeah.
You're a jolly old soul.
Binge watch the market with Schwab.
Your dad used to take me to the bar when I was 6 years old. They're on Commercial Street. Your mama didn't know about it. Nor did you, Norman. Your daddy taught me how to drink, how to fraternize. So I would be bragging about your daddy. Your daddy.
the DRAM and NAND were largely transitory and now appear to be
transitory.
That's been the catch with AMD is they've got that trailing legacy business that's more cyclical, and so the earnings haven't been as pure as good. But he says $210 for AMD. So
I would say too, it's historically just like one of the higher beta names in this space. It's always been, especially before it became kind of a $100 stock or $200 stock, when it was sort of trading in that, let's call it $20 to $30 range. I would speak with clients, and it always seemed to be the one that garnered interest, and it exploded to the upside, of course, in the last, half decade. It's been a premier player. We used to joke about it always sort of being that David Goliath story with Intel. Well, it's a Goliath of its own now here in real time.
Totally. All right. So some love for AMD from the analyst. Wolf Research, $210 bullish. Call option buyers. And
pretty aggressive, out of the money, only a couple months too.
What strike was it again?
185, break even, 191.
Okay, so I mean they're really hoping this analyst is correct for sure because they'll
Big
be
size too,
very much in the clear. Wow, all right, that's pretty bullish. Okay, Walmart, let's go there. We're at the highs of the session basically. Walmart now almost back where it was. It was at 64.50 when the bell rang this morning.
Yeah, this is twice the expected move from yesterday too. So big move for a consumer staple and a company with the float of Walmart too. So you're thinking, I think it was 8 billion outstanding shares or thereabouts in Walmart. Yeah, just over 8 billion. So you're looking at $32 billion.
Baba's really doing well.
Tonight. Bullish trader though piling on. Same expiration August 16th. 3,000 of the 65 calls, so a little bit less out of the money, but again maybe a lower beta stock with a little bit less volatility. So still out of the money, still need an upside move. $1.74 debit though would bring the break even to 66.74.
The major resistance.
Some upside over the next few months.
There's the next one right there.
Just over $500,000 in premium. For a position that could potentially turn into 300,000 shares of stock if they wanted to.
Right there's a good one. We broke it.
But $522,000 in risk for a $66.74 break even going out to late summer.
Okay.
I'm going to say the next one's going to be right around 89.
But one exception.
Right there in between two gaps.
Trade, which is Chubb. Someone
3 gaps. 1, 2 bits, and a freebie. Okay, I got an interesting idea. Baba breaks $88. We'll go to $89.64 on Baba. Now, they're pumping China. Everybody's in China now. That one guy said, I've been in China since February. So is it Head and Shoulders? Inverse Head and Shoulders where he got in at. Then you had a bull flag. Yeah. I used to make good money on Baba.
Or essentially the kind of protective nature of the put. That'd be essentially where you'd be locking in that sale price for whatever share position you may or may not have.
CB had a breakout.
So we've really got kind of the opposite.
Cholo.
Someone just speculating to the downside.
Wow.
Buying puts. So 2 call buyers in Walmart and AMD, and someone fading Chubb.
Dow hits.
Okay. Thanks, Alex Coffee. When we come back, some important news for the cannabis trade as further
all-time high
drug scheduling is coming from DC. Pretty big deal. Pot stocks keep ripping.
As
the administration continues
it's not hitting the bucket.
Steps towards further legalization, but right now classification changes. We'll give you the details next.
Yeah. I'm going to be putting out a cannabis video tonight.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern.
I'm glad you're doing paper trading.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends.
like wearable tech. Trends.
All that research.
That's good to know there.
Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Canada Goose is taking flight today with shares up more than 16% after earnings. The maker of upscale coats and apparel beat on earnings and revenue, but offered softer guidance. There's a lot to unpack with today's move. First, consider that price is on pace to close above its upper Bollinger Band. Bollinger Bands are created by taking a 20-day simple moving average, then creating bands 2 standard deviations to the upside and the downside. This signifies a high volatility move relative to its recent price history and typically is regarded as a sign of further bullishness to come. However, price couldn't hang on above its 252-day exponential moving average and also couldn't clear its previous relative highs from late February of 1441. Both of these points represent potential resistance areas going forward. To learn more, download the Schwab Network app or visit schwabnetwork.com.
All right, let's talk some commodities and check in on the rest of the market. We've been talking the stocks a lot this afternoon. Mr. Bob Iacchino joins us, founder and chief strategist of Path Trading Partners. Great to have you back, Bob. Maybe let's start with crude oil. Your specialty is we are inching our way back to $80, but man, it kind of fell off the map there for a couple of weeks. So how are you thinking about it, Bob?
Yeah, it's definitely inching. When you look at a crude oil chart, it's in a down channel, and it's been in a down channel for about 2.5 weeks. And that down channel, that $80.5, $81 is the top of that channel. So I would expect it to fail from there, given no other news or no changes in the structure of the supply and demand curve. But this still leaves us in a range. You know, when I talk about crude oil, I talk a lot about crude oil moves in these wide ranges. And it has been in this range almost all year, almost broke out a couple times, but got right back into this range. We've got a couple of things, maybe putting a floor in crude oil, a floor that we haven't reached yet. Number one, the administration is now slowly buying more SPR reserves, and they've actually made a commitment to buy them on higher prices. Number two, OPEC, I think the most likely scenario is they leave production cuts in place. The least is that they increase production. That's the least likely scenario, in my view. And there are some sort of rumblings from OPEC Plus. Deputy Prime Minister Alexander Novak from Russia saying there could be room for more production. But I don't think that that's necessarily in complete agreement. And we'll see that sometime around June 1st. They tend to move that meeting. But the volume has been declining. It's been in a steady downtrend in the crude oil patch. So that to me shows that the potential for an upside breakout is there. I don't have a position.
Okay, so what would tell you that the potential is being realized? At what point does it start to get interesting to nibble again?
About 82, because that'd be a breakout of that channel. And normally it's a weird sort of a strategy, but what I like to see is a close above the channel, then a retest of the channel line, the upper channel line, which will be a little bit lower. So it'll actually come down below your breakout area and then turn back up. And that's likely when I'd participate.
Okay. What do you think is sort of possible here, big picture, longer term, Bob? I mean, if we kind of take the geopolitics out of it and kind of go more to the macro take, essentially I'm kind of asking for an Iacchino update on your macro view. Does the data look like it can support higher crude prices, or are the supply elements just going to overwhelm, keep us down no matter what happens?
If you're talking medium to long term, OJ, you're talking about higher oil prices.
Okay.
Because again, I've said this on your show before, and it was a while back, that the picture for the U.S. is going to be declining production and rapidly declining production. The Biden administration took away a bunch of leases. They stopped the auction process or shortened it. fewer auctions is what I mean by that. And as we've talked about before, the shale oil patch produces the majority of its crude oil in the early stages of wells, and CapEx has only just started to ramp up a little bit with prices having stuck above 70. You add that into the fact that China is now starting to recover, developing markets are getting stronger with a slightly weaker dollar. That's going to be a crude oil story, not an electrification story.
Okay. And Bob, looking at how some of the other commodities have moved, I mean, copper's been pretty nuts. Other than that, though, fairly calm, but is there some messaging in there? I'm curious how you've been reading that as we kind of switched from gold being the hot trade over to copper.
Well, copper is interesting because like the demand dynamics for copper over the long term are nothing but up. Nothing but up. Ivanhoe Capital CEO and founder said in an interview on Bloomberg that over the next 20 to 25 years, we're going to have to mine as much copper as we've done over the previous 10,000 to remain at 3% GDP growth globally, to remain there. So not to increase it at all. So the longer term view for copper is probably double where we're at now. Now, having said that, copper can fall another 4-5% from here without breaking any support. So I think I'll let it do that. In terms of gold, I'm still long gold. I don't see any reason to get out of gold because, again, same situation with copper, except it's shown some recent weakness, is you got to go a lot lower to break any support in gold, and we're going to get eases that we shouldn't get. So what does that mean? It means reflation. We're seeing 6-month annualized inflation, both core and headline, turn up. 6-month core inflation is running at close to 6%, and the Fed's going to cut rates. So we're likely to see gold pick back up, and on a weekly chart, it looks like a really good time to buy it if you're a longer-term gold holder.
All right, sticking with it, ready to double down. All right, good to catch up. Thanks, Bob. Appreciate the chart work. Helpful. Washboardjim, founder, chief strategist at Path Trading Partners. All right, maybe in the same realm of commodities, let's talk about some grass. So marijuana stocks are on the move today. Renita Young joins us, a senior market correspondent, with the latest on government reclassification efforts. So how's this work, Renita?
Pot stocks sky high today.
Yeah.
A lot of them are. We're looking at
moving.
Aurora Cannabis, Curaleaf, Green Thumb Industries, Tilray, the ones that we always talk about when we talk about marijuana. But the DEA has advanced the process to reclassify marijuana as a less dangerous substance. This is something that we've heard of over the past few months, and even internationally there's been a greater push to try to reclassify marijuana. But the DEA submitted a rulemaking notice to be able to reclassify it to a Schedule 3 from a Schedule 1, and then it's a 60-day public comment period that will begin sometime soon. After that, the DEA and the Department of Justice will make a final determination as to whether to remove marijuana from the list of the most dangerous drugs. Now, as we know, more Americans have been supporting legalizing marijuana. A Pew Research study back in March said that almost 6 in 10 Americans say that it should be legalized for medical and recreational usage. And the president, of course, President Biden, is calling this move an important move toward reversing longstanding inequities. He says that far too many lives have been upended because of a failed approach to marijuana. And he said that he's committed to righting the wrongs. Now, here's another thing. While it would be a major change in U.S. drug policy,
These are new stocks here I've never heard of.
Does not decriminalize.
YOLO and
Still a
Toke.
long road to go before that can actually happen, Oliver.
Okay, so this is clearly an effort being spearheaded by the administration, DEA kind of following, taking the nudge, and one step at a time, basically. But it seems like we are taking each step here along the process. So a lot of the kind of promised land that many pot advocates and investors have been expecting for years seems to be coming to some degree of fruition. And I imagine with the election around the corner, probably not a coincidence, so likely to get more.
Not a coincidence.
Not a political strategist, but I imagine it kind of concentrates around this time.
You got that right, brother.
Yeah. All right. Thanks, Renita. Appreciate it.
Of course.
Okay, when we come back, where Schwab team joins for big picture discussion going into the bell. We got about 10 minutes left. Stocks kind of losing a little bit of the bid, but these are small moves still. Russell, a bit notable there as small caps run into that wall at 2100 again. We'll be right back.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Pedalini, live from
Nicole.
the Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying.
Are you going to tell that story over and over again?
I would watch the flight attendants.
Please. You should keep that secret. Man, look at that bounce. Ooh, I love it. To the 200. I didn't trade it, but I was going to. Divergence. Ah, you cockroach. This is divergence right here. Kinda. Oh, you erase it. I don't know. Dip, bounce, bounce, pull back, bounce. Rice goes up. Then you get a big breakout to the 200. There's that 200 SMA again. That big knife hits the 200 and knifes perfectly. I love this 200 SMA. Now what's going on here? Don't ever do that again. You get a little bit too big for your britches there. There you go.
positives month over month, well above the Fed's target. So can we describe any of this as progress at this point, Cooper? I mean, the market seems like really celebrating the fact that we still inflated, but at a slower pace. I mean, it's not what Powell's looking for, right?
At a slower pace.
And that's where we go back to. He wants more good news.
Put the coffee beans back in there and see what happens, brother.
What we saw yesterday was that it wasn't bubbling.
Inflation would be higher.
Significant resurgence of inflation. So I think that that's what the market
Cheats.
was really cheering for and looking and saying, well, we didn't see it kind of bubble up and we didn't see it start to run off. So we're going to take that and run with it.
Liars.
Kind of the reflexive mechanism on the economy of cuts if we get them, because I know a lot of people will go, all right, if they're not going to hike, then the interest rate doesn't have to go up, but that's not the only way interest rates go up and why Treasury yields go up. If we start pricing in cuts without a massive drop off in growth, I mean, could it be stimulative? Does it limit the downside in yields?
You know, I think that that's an important question. I think it depends on where on the yield curve that you look at. So our view is that once we do start to get rate cuts, we should see a lower short-term yields and normalize the yield curve. Now, one area to where you've started to see higher interest rates impact activity is in the housing market. This has kind of been a story that's a long-time story, or not a long-time story, but has taken a while to develop, or has developed for a while, excuse me there. But we also saw the data this morning is that housing starts were a little bit lower than expected. So I think that that just illustrates that higher interest rates are having their impact on the economy. Now, if we look at some of the categories of CPI yesterday, so like leases were up. I think that that's a difficult place for the Fed to be, is that those are things that even though they can keep rates at an elevated level for an extended period of time, they really don't have too much control over higher lease costs or higher auto insurance costs. So I think that that's one of the things that could be difficult for this Fed as far as the timing of rate cuts and kind of the mechanism that that could translate into the economy.
Good stuff. All right. Nice closing macro thoughts. Appreciate that, Cooper Howard, Director of Fixed Income Strategist at Schwab's Center for Financial Research. We've got some earnings after the bell here coming up. We'll hit Applied Materials, an important supplier in the chip world and stock that just put in new highs, as well as Take-Two, which may be limited in their information until GTA 6 comes out, but we'll be parsing through any language on the plans for that game. So we've got some fun stocks in the aftermarket coming up here. Be right back.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so...
Yep, you grew up to be a good man. Feeling, oh, feeling. There's not enough time to do the power hour trade. We have 1 minute left. All right, well, not a bad day. Randy, you have a busy day today? The spike could drop more, it looks like, to the bottom of the resistance channel. Had to work. Well, I'm going to call it a day. Man, we only got 5 in here now. Hope I ain't running everybody off. Okay, well, I'm going to get on out of here. YouTube, you have any questions? Anybody have a question on YouTube? Mike? Thank you very much, Mike Sweeney, if you're still listening. Percy, I'll catch you later. Hope you did good on that first trade we took this morning. Yeah, I had a good walk. I walked 2 laps, which is a half a mile. I'm going to keep doing it. I got up to 11 minutes today. By the weekend, I'll be doing 20, and that'll probably be where I'll keep it at. I got to realize I got to take better care of my body the older I get. Got to do things a little bit different. 63. I mean, man, I got some stories I could tell, but then I just look ahead and I said, wow, I might have 10 years left, or 15 or 20. So I'm thinking about totally quit smoking pot for a while. I don't want to, but I think I might. I don't drink. But that's that. Joe Biden legalizes it, and I decide it's time to quit for a while. So we'll catch you all later. Be good. Definitely a lot better today than I was yesterday. I just come in thinking that we were at an all-time high and we needed to pull back because of Pow Pow, and I had it all messed up. I've never messed that up. I mean, I've nailed them Wednesdays. That was the first Wednesday I can remember in a long time that I messed up. Okay, well, I'm gonna get on out of here. Thanks everybody on YouTube.